think the runway is clear, and that's where we're going. That's pretty exciting. So what are the catalysts? What drives us? What sectors are number one and two? So as I said, I think it's clear that the largest catalyst, besides the fact that Palantir and NVIDIA had absolutely spectacular earnings, like beyond everything else, and that we obviously are seeing, so much money being put into AI, which is still clear. Look, we had that insanity that when Palantir came out with earnings and stock sold off, even though the earnings were spectacular, the stock sold off 8%. Mainstream media decided to start talking about AI as a bubble, and that this is all smoke and mirrors, right, which was ridiculous. And then, that was just almost disrespectful to the new retail traders and to the whole
futures popping. Good morning.
That was what, and then we saw the interest rate story, which also made no sense at all. Dan Ives actually jokingly went on TV the other day and said, even when it looked like we weren't going to get a cut, that the probability of not getting a cut was the same as me playing center for the New York Knicks in the 25-26 season. So all that being said, I think that is going to be the biggest factor. I think just setting the stage for that coming into the year end, I think we're going to have good retail numbers. Look, there is some inflation fears. We still are trading a little bit and driving a little bit blindly relative to the economic data, which we're not getting. There's been a little bit of gaslighting as far as that goes, or gatekeeping is a better term. So we don't know a lot of that stuff. But, we do know that the bad news is good news for the market, and the cutting rates is surely going to put the fuel on the fire necessary to take us higher. AI bubble ridiculous is what you said. It's beyond ridiculous. So, one of the CEOs came out and said it's not for 3 years at least. I think it was the Alibaba CEO who said that. Well, yeah, but the CEO of SoftBank said that NVIDIA at trading at $200 post a 10-for-1 split after its last June earnings is still undervalued. You have to realize that Oracle, Meta, Google, and every one of these, the Mag 7 stocks, right, companies are putting hundreds of $1 billion into data centers 5 years out. We know that this is that NVIDIA obviously has trillions of dollars still to be put into this marketplace. So the fact that it's not a 1995, 98, 2000 moment at all, that just seems crazy. And to think that, that after all the fact that story was... Good morning. Palantir came out with great earnings and sold off.
I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, November 25th. Tomorrow's Thanksgiving. We're off. If you're only with us this morning, happy Thanksgiving. If you happen to drop off, and I'll get a chance to wish you a happy holiday.
Consumer confidence, okay? The number yesterday hit a low that we have not seen since April of this year. Well, since February of this year, when we were in the middle of that economic Armageddon caused by the tariffs, correct? And I find that a little bit curious. We need to understand, too, that there's the market and there's the economy, right? And they are not trading in concert at the moment. We know that there are people out there struggling. We know that there's a lot going on, and we know that government workers were not getting paid, or they were struggling for a while too. There are inflationary fears. There are layoffs.
All right. So 6,800, 6,825, 6,850 resistance levels. Overhead. Futures pushing a bit higher. We got about 9 minutes to go.
that it's going to be good. You know, I mean, it's just what it feels like. There's sort of a positive sentiment around. I sort of have my ear to the grindstone a little bit around retail traders who are out there, and it's been one of the most robust years. It's been a profitable year for a lot of people. You know, at Wall Street Global Trading Academy, we've got tens of thousands of new students coming. Santa Claus is here. Tens of thousands of new students coming into the market. Well, everybody is focused on this market, not just tech, but trying to make some new disposable income. And so there's enthusiasm around.
You spent a lot of time doing education.
Yes.
What are some of the tips, if you have 3 tips, or what are some of your trading tips that you go to?
I would be happy. Now, these are the tips of my partner, David Green, who's a former market maker here on the floor back in '85 when I got here. He retired 10 years later after a big buyout here on the floor. The best tips are this. As a day trader, when you get into the first thing in the morning is have a plan on how much money you want to make in your day. When you hit your goal, turn the machine off and stop trading. You do not want to overtrade. Number 2 is have a stop order on every trade that you have. Okay, you need to identify your downside risk. Well, I'm willing to risk 50 to make 200, but I'm not willing to risk 200 to make 50. Never turn a winning trade into a losing trade, which means start taking profits when you can, right? The minute the stock goes up in your favor, start taking profits and do what's called a trailing stop so that you can take advantage of the stock going up, okay? Know when to stop trading when you're making money, know when to stop trading when you're losing money. If you have 3 max loss trades, okay, turn the machine off and go home. You're having a bad day, you'll come back from a bad day. What you won't come back from is revenge trading, right? And just be disciplined and consistent. People need to understand that you have to start taking profits immediately in trading. This market, we're only 1 tweet away from crazy town, right? We know that, right? You can be in a trade for all the right reasons, right? And then a tweet comes out and the market goes down, 70 handles. And so it's just discipline, consistency, and then following those rules. David Green, one of the great teachers in the space.
All right, futures pushing a bit higher. We got about 6 minutes to go. Just enjoying my coffee. NASDAQ 100, we've got about 50 green at the moment, being led by Autodesk. We took a iron condor. We sold an iron condor on Autodesk yesterday. Autodesk currently trading at, last time I looked was, yeah, still in the same place, okay. 316, okay. We're trading at 316. Expecting a profit-taking fade. Double top in this area. We'll wait till about noon or later. Maybe even take adjust the trade on Friday. There goes Netflix. Netflix on the move. Netflix. Netflix looks good. Popping off the low. Microsoft playing catch up. Yesterday we bought some Meta pre-market FBL shares. FBL, let's take a look at that. Okay, just in the top portion of yesterday's highs. All right, so technically the New York Fangs are all mixed right now. Google's off a bit. Google off a bit. Okay, Brent talking about Google this morning, 310, 335. 4 minutes to go. A lot of positive gamma in the 310, 335 area. You can see that on the chart. That's a pretty big peak. 110 million. Last week it was 46 million. 330 may be the near-term upside resistance in this area. Okay. Okay, we still need vol to crush a bit more into next week. FOMC and PPI, Oracle earnings, VIX expiration. 3 minutes to go. Okay, we got 3 minutes to go. As always, we'll wait till about 9:50 to 10 a.m. Watch for any additional trades that show up herein. Okay, so we'll look for trades that show up on the 0-day. These carried over from yesterday, so they're 0-day today, expiring today. So you can see resistance just overhead. Just say 6,800, and then the next level 6,825. 6,800, 6,825. Nvidia going some more. Nvidia pop in here. Nvidia flag breakout here.
We're seeing it holding steady right now at $57 a barrel. So plenty of moving parts, of course, as we do have earnings this morning as well, Nicole, that you've been getting across throughout the course of your program with Deere, which was interesting under pressure, even though it's actually forecasting better results here. Dell, also an HP, Lee Auto. So there's some of the names, of course, we're watching post-earnings report cards. And also, I'll add in, who will be the head of the Fed? We're still looking at Fed stories. We're seeing
Okay, Broadcom, we're looking for that to break out so I can get long on Broadcom. Okay, it needs to break above this double top area. Okay, Broadcom gets above this, I'll start buying shares or do a synthetic share trade, 60 delta, 70 delta calls. Looking for this trend to continue. Okay. All right, let's get ready. We got less than a minute to go. 30 seconds to go. 30 seconds to go. Okay, 30 seconds to go. Okay, so let's keep an eye on Trace. We got resistance just overhead. I'm expecting a grind higher. I do have a call fly again. Call fly or an IWM? Let's see. Call fly. I didn't do the SPY. I didn't do the SPY. I did IWM. IWM call flies. Okay, that's starting to move higher. All right, looking good. Letting the market settle down a bit. Nvidia looks good. Microsoft a little profit taking. Same with Apple.
He was talking about how we could be entering a new circularity here because what we used to have was, Nvidia really driving the circle. Google, Alphabet could now drive that here. And so basically what Dan Ives is getting at is that while he has praised what Google has done, and so is Nvidia actually yesterday out in their newsroom, he's still saying that Nvidia is not changing over the next few years, and it very much starts and ends with this company.
Okay, enough. Let's go listen to Kramer. We always love Kramer. There goes futures. Futures pop in. Next level 68.25. Let's see. Okay, looks like Goldman Sachs. Put spreads. I've had a limit to sell. $50. Debit filled. Good profit. Okay, so Goldman Sachs just filled. Okay, I had some put spreads on Goldman Sachs. Had a limit order in. That just got filled. Okay, which ones went off here? Goldman Sachs filled orders, the 26th December. All right, so these here, I don't know why this is 19, but these are 26 December filled. Actually, $70 debit. Okay, Netflix is moving here, looking good. Don't forget to reduce your risk if you've had a hard few weeks. You've had a hard few weeks in the markets. Perhaps reducing your risk makes sense. Okay, S&P 500. Over the last few weeks has dipped down. We gave us a more than 5% pullback. Okay, so everything's set up for future reference. Okay, what I like to do is when we start to see a fade, right? Of course, we want to start taking some profits off the table, but I always look for the number of stocks above the 20-day. What do they do? Okay, when we get down to a pivot and we start to move higher, that's your key. That's your cue to start looking for buys, right? You can see what happens thereafter. Okay, so the number of stocks above the 20-day start to get to a low level, like 20% of stocks are above the 20-day, 30, and it starts to turn back up. That's what you want to watch for. That and the number of stocks above the 50-day. S&P is still going. Went too quick for me to chase after this right now. 68.25 we're looking at. Levels. All right, so I'll look for a little short up here if we can get a chance intraday. Most likely going to have a bullish follow through. Okay. It's going to be one of those days. We need vol to contract more. All right, so we want to keep an eye on VIX, of course. Keep an eye on VIX. VIX still dropping.
Lately, it's been up. J&J obviously has had a great year. Lilly has crossed the $1 trillion mark, and then the bank's also still showing signs of life as well.
Exactly. So banks, I think, have been the most resolute area in terms of if you were going to worry about the macro picture, you were able to look at banks and say, not really flashing a negative signal. Although non-bank financials struggle, if you look at the broader universe, whether it's payments or obviously the alternative asset managers.
Amazon fading now. Microsoft fading. Nvidia at highs.
This is a more sustained breakout, or at least they're going to be able to participate longer term. And it timed almost exactly to the expiration of that supposed deadline where the White House is going to say, we need some kind of a plan for pricing, or else we're going to start to try to look for price controls. And then every company had a little bit of a gesture in that direction. They took off. Biotech is flying. And that's another thing. It's one of the things helping the
okay, VIX at the lows here. Okay, S&P still going. Let's take a look at S&P. Maybe we can take some lottos here. 68.25s. Ooh, I don't want to do it. I want to wait till 950. 950. We usually see. See, the problem here is we already have a lot of 0-day that has built up from yesterday, carried over until today. So I already have a target at 68.25, 68, all the way up to 68.35. So we're probably going to keep going. Maybe try some 68.35s. Let's see. That way, if we start to reverse, get out of these quick. 68.35. Those are $2.40. That's not too bad, right? Let me put that in my active trader window. I'll put some puts in here just in case we have a little pullback. I doubt we're going to pull back that much today. Let's see. Okay, so I got puts and calls set up now. Okay, looks like we're going to keep going. We are mixed. Tesla just rolled over. Netflix is still rising. Got mixed signals on the New York FANGs. Okay, watching the hedge flows.
Have been connected, but magnitude-wise, it has not held up. In fact, if you look at Nvidia relative to Bitcoin, like over a 2-year basis, it feels like they were much more in
Hedge flows. Watch the hedge flow line. I'll leave that up for you.
No longer going down every day in this kind of worried way that made you think that there was forced selling. That was last week's story. And honestly, I think why the market had struggled to find its footing late last week in that 5% pullback. It stopped going down in that way. I do think it has sidelined a lot of kind of the risk fringe in terms of accounts that are heavily weighted in that direction.
Yeah, those broken wing butterflies were good, Andrew. I'm glad to see somebody else taking them. Anybody else take those flies, those call flies into this week from last week? Those were that was a good trade. That was mentioned by Brent over at Spot Gamma. I looked at it and I said, you know what, this has got a great possibility. So that was a good trade. Also have it's just a straight fly on IWM for now into the second week of December. Looking for a grind higher in small caps. Those are up. They're not up that much. Looks good though. Let's see what else is working here. Okay, Walmart is up again today. Walmart. Okay, look at Goldman Sachs.
And maybe even on an equity market cap basis at this point. But no, essentially it's trading like, look, it's always been kind of a closed-end fund trading at a premium, which longer term tends not to be sustainable. And I think them being kind of out of the market as big potential buyers has been a part of this story of why crypto prices
Okay,
are going down.
watch the hedge flows here. Hedge flows turning down.
Look at BlackRock's chart and not think that has something to do with the weakness in BlackRock, even though it's small in terms of.
Okay, watch MACD. That's also very helpful.
They're also kind of getting hung up
Okay, right now MACD is still facing upwards, so we might get a follow through here.
on anything else. But it does show you that
Okay, watch your MACD.
Bitcoin became on just constant fresh flows. I mean, that was the whole
I found that when hedge flows line up and we get a nice buy signal, if you catch it, if you catch the trade, when you get a bullish crossover like this in the MACD, you catch that and you catch a pivot and we start to take off. That can be very profitable. Enable MACD so that you have that visual as well. Bitcoin, it's still trying to do something. Bitcoin. Okay, so let me go take a look at my Autodesk. I have Autodesk. I have an Iron Condor on Autodesk. All right, this is already starting to fade. ADSK fade. What do you trade? IWM. Okay, IWM.
back in gear. Yesterday's rotational action is more of a sign that we're kind of in that muscle memory mode of like not freaking out if Nvidia's down 5% in the morning. And
Yeah, IWM looks good. Let's see. Let me take Autodesk off here as it fades. It's still off a little bit. Okay, let me take the put side off. I'll take the put side off. Create a closing order. Buy. Puts. Where are you? Buy the puts. Oh, I don't have to do anything. They're zeroed out. They're for Friday. Okay, cool. That was the idea, actually, to use Thursday theta for this Autodesk trade. All right, so we'll see if this continues higher or if we fade. What's Oracle doing? Oracle, I'd like to see Oracle do something before earnings. Give us a clue. At Institute. Okay, Oracle gapping up. Oracle gap and go, Frano. I'm sure you see that. S&P back up to the highs of the day. Haven't done anything yet. I'm waiting for 950. Waiting for 950. This looks like, okay, we're into an area here where there's like a gap between prices. You might get a nice little follow through here. All right, let me go do what Frano's doing here. Okay. Let's see what happens here. Okay, I'm looking I'm looking to go long 68.30. All right, what's MACD still turning. Okay, MACD still up. Okay, I'm going to go ahead and do that. Okay, so MACD still facing upward. So for now, looks okay. 68.30. MACD still higher. We're at the highs of the day. Could pull back in. So I got puts ready too in case I need to hedge this. Come on, let's break out. Let's break out. Let's make everybody happy. Feels like the holidays when things are going right. I'm your host, Kazavini, coming to you from theclosingprint.com. It's Wednesday, 26. We got Thanksgiving tomorrow. If you're leaving early today to go travel or whatever, and I don't get a chance to tell you Happy Thanksgiving. Happy Thanksgiving. Hope you're enjoying your stay here at the Closing Print. Lots of good traders in the room. Shout out to Michael Miller. Has been doing a great job of putting out levels on the S&P 500 in particular, futures. Some of you that don't actually participate in the chat room, shout out to you too. Frano, thanks. Mondo, LA, Brother Bill, all of you that come in early in the morning and populate the chat room with lots of information. Cayman, of course, thank you for everything you do. David Percy over in Texas. Looking forward to meeting you, buddy, if you get your RV together and start traveling. Scott, thank you for everything down there in the wonderful Baltimore area. A-Train, good to see you this morning. Oh, that was last night. All right, so we're looking for the markets to continue higher. Meta, started adding Meta yesterday pre-market FBL shares. Okay, not following through just yet. Google looking for a bounce. Google, we're looking at 330 to 335 as the short-term high. Here goes the S&P about to go. I forgot to post this in the trading room. I mean, in the alerts channel. Okay, looking for a push higher here, S&P. Riot. Okay, I'm going to take Riot off for now. I'll come back to Riot once it starts trending. Just one more thing to watch. Okay, let me take a look at Riot. Riot, RIOT. Riot coming off the low. I could have held on to this. I'll look at it next Friday and into next week. Looks like the Bitcoin crowd wants to keep going. Let's see what's going on here. UNH, another bounce today. I do have the 400 call for June next year. Okay, so UNH. Okay, I just added to UNH. Okay, I have the 400 call for June. NVIDIA, nice little pop there. It's still a doji for now, but we had a gap up this morning. Okay. Goldman Sachs, Boeing coming off the low, Microsoft coming off the low. A lot of stocks coming off the low. JP Morgan. And the reason why they're showing up on the most actives list, the reason why they're showing up on this list is because institutions are obviously buying. Okay, you can see yesterday we had the decent volume on JP Morgan. Okay, let's watch Trace. Okay, Trace is shooting higher here. Hedge flows. Uber bullish here. Early. 68.25. 68.35 resistance. Targets. Wow.
That leaked audio, reportedly from Martin Valley, Campbell's vice president of information technology. It emerged as part of a lawsuit filed last week by a former Campbell's employee who accused Valley of making racist comments. The former employee is also suing the company for wrongful termination. In a statement, Campbell's
Wow, that's pretty heavy duty. Campbell's, one of the Campbell's officers, I guess, management, talking about 3D printing chicken. How the hell you 3D print chicken? All right, Broadcom on the move. Broadcom.
Let's get to Rick Santelli watching, I think, some Chicago PMI, Rick? Yeah, that's right, Carl, and it's not very good. This is a November read on Chicago PMI. We're expecting a number above 40. We end up with 36.3. That would be the lowest level going back to May of 24. It's now been 2 years since we've been above 50 or expansion territory. November of 23 was the last time we were over 50. So Chicago manufacturing doesn't seem to be doing very well, but that weak read is definitely pushing yields up a bit, which really makes one scratch their head. We do see the stock market also respond.
Okay, we continue to move higher here. Looking good. S&P.
May bring it in ease, so I understand what the stock market's doing, but I think on the side of interest rates, it's multifaceted.
AMBR.
Runoff of the pricing, potentially pricing in of asset, which pushed yields down yesterday. But also, it's tough to keep long rates down, as evident by the fact that we settled right at 4% yesterday, and here we are a couple of basis points higher. Swell on the street will return after a short break.
All right, S&P is still climbing here. S&P looking good. Hedge flows rising. Okay. Those calls are $3.30 now. $3.30 on the 68.35s. That's what I wound up buying. I thought I bought the 68.30s. 68.30s. I have the 68.35s. I have a little mental mistake there, it looks like. S&P 500. Okay, it's a little lower delta, but looking at the same thing. Looking at that 68.30 level overhead. Okay. For some reason, I bought the 68.35s. Okay. My bad. Most of you are long anyway, so let's see. That's not good. Mistakes happen. Yeah, 68.35s. Yeah. Okay. What did I fill at? Okay. Sometimes, I gotta get into a habit of double checking, triple checking, because Thinkorswim, sometimes I just go into these real quick. I'm not paying attention, and I'll select the wrong strike. It might be off by 5 handles or whatever, but still, it makes a difference because you want to have the right delta. S&P. So I did make a mistake this morning. My mistake. Let's see. Let me look at these S&Ps. 68.35s. It's the top of that range up here. It's the top of this range up here, the 0 days. Okay, so you can see these building up here. Let me see what's going on. You see this? You see that up there? See 68.35 right here? 68.35. Watch 68.35 from the open. They started piling in there. So that's good. Watching. Okay, a little pullback. Hedge flows are still rising. Okay, hedge flows are still rising. Okay. Okay, and MACD, importantly, the momentum is still pretty bullish. Need to see more volume. That would be nice. Okay, pulling back a bit. Pretty aggressive. Okay, 99 percentile. There's a 99 percentile.
Outfitters big winner this morning, up 12.6%. It's been a big winner all year long in the last 12 months. Reporting earnings, it's the namesake brand, the Urban Outfitters brand, that did really well. Double-digit comp store growth, even better than Anthropologie and Free People, which also did better. We'll be right back on Squawk on the Street.
All right, 99 percentile on 68.25, also being pointed out by Michael in the trading room. Okay. $68.25. All right, so we're coming back down now. Early profit taking. S&P.
Term upward trend line, but also our shorter term downward sloping trend line, that same confluence near about 678, stands out as a potential breakout area. So if we were to also look at our volume study here, we can see that volume profile shows that we have a heavy trading area right here near about a 6.
Okay, a little peak there, and hedge flows just peaked.
Area the bulls would want to hold on to if we do start to see a further decline in this name here, and eventually we would want to take out that area to the upside here in the 680s. So when we look at our volume activity,
Hedge flows turning down.
See there was a notable spike recently here. So when we say a spike, we're talking about volume that's at least 50% above the 50-day moving average of volume here. So we can see that we've had a rally off of a significant low point here.
Hedge flows turning down, back down to 6,800 possibly. 67.95. See if we can't get a bounce there. All right. Autodesk. Okay, we got a spread on that one. Still early. Still very early.
The most important trading area, but that's pretty far away. This one rivals it in size here. So a key area for to watch going forward.
You talk about the volatility. I mean, at one point we saw
Okay, futures made a nice little rally there. Seeing a little bit of hesitation. S&P. All right. Note MACD. Note MACD. Okay. MACD is trying to hold on to this level. Momentum. Trying to hold on to the momentum. Looks like the bears have got it for now.
Some of these tech-heavy names that we've seen are near very notable supportive areas. So we'll see.
All right, great to see you, Rick Ducat, and our thanks to George Sillis as well. It's wonderful to see you both, and thank you, Brent, for joining me here on Opening Bell. We have a 4-day rally underway. We'll continue to follow these big stories for you. I'm Nicole Cutton, ladies, every day at 9 a.m. and 2 p.m. right here on Schwab Network. So I'll see you at 2 o'clock for the watch list. Keep it right here. Morning Trade Live with Sam Bonas is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools webcasts are designed to help you broaden your knowledge.
Okay, let's go see what's actually working in the markets right now while the S&P decides what it wants to do. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're almost at 10 o'clock. So let's go. One more thing I want to check here. Hedge flows at this time of day, 9:50. All right, I just want to scroll this back. See what's being added. 0 day, what's being added. Okay, this level down here, 67.75 is being added. We'll see if that makes a difference.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
Okay, Autodesk.
One of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7.
Okay, here, Autodesk.
SchwabNetwork.com.
Autodesk. All right, so this is the iron condor I have currently. It's testing the upper level there. Let me see what it looks like on the 5 minute. Starting to fade a bit. Profit taking coming in. Oracle, a nice bounce, but they faded that fast. Wow, they faded that fast. Okay, S&P also fading. S&P.
Morning movers brings traders the biggest headlines to start the day.
Okay, big fade on the S&P.
To the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning
Okay, let's keep an eye on hedge flows. Hedge flows are still pointing lower after 10 o'clock. Not yet. Okay, we're almost 10 o'clock here. Warner Brothers Discovery, that's up again today. What's going on at Warner Brothers? WBD. Okay, looks like it's going to come out of this squeeze. Warner Brothers. Okay, Apple, we looked at a squeeze on Apple yesterday. 3 white soldiers. Faded off the high, so this 280 level seems to be some resistance for now.
Hello, everybody. Happy Hump Day Wednesday. Welcome to Morning Trade Live. I'm Sam Barnes, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour. So here's a look at what is coming up on today's show. Is the AI boom at an inflection point? One of our guests thinks so, so we'll examine why coming up. And over the
Okay, S&P is still fading. Note MACD is trying to cross down. Got a fair value gap right here. A gap up this morning. Looking for a bounce. These, okay, looking for a bounce here. Need that MACD to turn though.
The Dow also 0.3% higher. The Russell 2000 also doing a similar thing. So we've got pretty much the same amount of gains across the board here. Amount of jobless employment.
Looking for a bounce. No bounce yet.
From last week, and actually we had good news there, which was it was lower than expected and actually matched the lowest level since February. 216,000 jobless claims filed in the week of November 22nd. better than the 225 expected. So 4-week moving averages ticks down if you want to smooth it over.
MACD is still pointing lower.
Hiring, low firing economic environment. And yes, there's been a lot of angst around the labor market lately with some of the
MACD is still pointing lower for now.
that we've been tracking sort of on weekly job losses. But
Looking for that bounce. Let's see what hedge flows are doing. Hedge flows trying to bounce. Okay, so we have this resistance now just overhead. 67.95 and 68.25. Okay, S&P is starting to turn back up now.
I'm not sure how we can call that a no-fire environment.
No, I mean, it's mixed. There are mixed reports on it. Challenger, first of all, has always tended to be a little negative, but yes, I agree. October was really bad in terms of those layoff notices. It's not showing up in the weekly unemployment claims in terms of any kind of elevated number of layoffs there. And I think that it jives with what we're hearing from companies, which is if you are providing, what consumers want right now, then you're selling it at full price. I mean, did you hear what Urban Outfitters said? Yes, they said
Nice bounce so far, S&P.
They also said that, that when they have the right assortment and merchandise, they're doing pretty well. November traffic and sales remain robust. We have observed a slight shift in consumers' behavior. We believe customers
See if this can follow through.
make their purchases until seasonal promotions began. So again, the deal, the choice, the priorities, but there's
Oh, geez. I didn't notice the call wall shifted lower.
than it has in previous years, and that's one thing that's actually helping the company. This is a stock
Looking good.
Look, 90% over the last year, and it's not the only one. If you look at Tapestry, if you look at Ralph Lauren, some of these retail stocks have been doing very well. It doesn't happen when you have a weak consumer environment. It does happen when you have the upper income doing better, and when you are really nailing it.
Let me just check this out. Call wall shifted lower. Did it? Yep. Call wall did shift lower for what it's worth.
Just look at some of the index here or some of the names in this group. It's not a rising tide lifting all boats in consumer discretionary right now.
No. And if you look at retail sales, inflation adjusted last month was lower last month than it was in September of 01 or 21.
Right, because we still have a little inflation, which gets factored into those numbers, which are still growing.
All right. So the significance of the call wall shifting lower is that we need to pay attention at this pivot high on the S&P. Okay, so we had a pivot low. We had a pivot low recently. Could be a lower high. If you look at the S&P 500, the call wall just shifted down to 6,800. So I just want to make note of that. MACD is trying to turn up. Most everything is bullish. S&P still not quite there. MACD. Slight downward slope. All right. Let's see what's going on here. Still early. It's only 10:05. Autodesk. Okay, Autodesk. What are you doing, Autodesk? The Iron Condor just increased in value dramatically. Let me see what's going on with Autodesk. Autodesk. Oh, okay. We got a fade now. Okay, Autodesk. Big fade here. ADSK. Big fade.
Today's Exhibit A is Urban Outfitters, partly an Urban Outfitters story, but overall, it's not a bad story. And the macro data today, at least, was good. Every day's a little bit different.
Yeah, I mean, on the one hand, you get the Chicago PMI comes in.
Excuse me.
Let's take a look at the broader markets and bring in Mohamed El-Arian, Allianz's chief economic advisor, who's been pretty vocal this week, Mohamed, about the way in which these December rate cut expectations have changed. You say it's worrisome. Why?
Okay, big fade here. And, oh, wow. Look at the shit. We're up to 900 already.
In the last month, we've gone from over 90% in terms of expected rate cut to 30% back to 90%. That should not happen. The whole point of
Overnight hold. Okay, that's a pretty good, decent gain here. What can I close this for? Create closing order. $30. I'm going to go ahead and do it. I'm going to do it. Excuse me. Got something in my throat. Autodesk. Closing for 70. profit.
Yeah, I wonder if you think any of
Limit,
this, by the way, the secretary
close,
does 50 TV interviews a day,
$30.
so I'm not sure he's the one to say that the Fed needs to put a lid on it. But I wonder if you think it has to do with the Fed chair's waning influence going into
Okay,
the
nice
next
profit there. Okay, Autodesk dropping.
It also has to do with a highly data dependent Fed in the face of, as Sarah said, mixed data. It has to do with analytical issues that the Fed hasn't addressed. Is the weakness in the labor market a supply issue or a demand issue? And it has to do with a bigger analytical issue that the Fed hasn't also addressed. What do you do when growth decouples from employment? So Fed officials should be helping us analyze and should be helping us put out a strategic vision for the economy. And as you know, I am a big bull on how AI promises significant productivity improvement. That is what they should be doing instead of backward-looking, play-by-play that causes massive fluctuations.
Okay, Autodesk looking good. So if I can get this closed for $30, that'd be great.
We did was talk about AI with everybody there. The importance overall to economic growth, though, in terms of all this capex that we talk about endlessly that is being put into the ground in the form of data centers, and more importantly, what goes into those data centers. How do you view it? How do you see it continuing? And is there risk in terms of what it means incrementally to growth for GDP?
Okay, that looks pretty good. Autodesk continues to fade. Back to the 50 days, starting to bounce a little bit.
To try and get ahead in this arms race. And that involves not just
Okay, so offer and bid are the same right now.
So it makes sense, it will continue, and it will contribute from a demand side.
I'll leave it at $30. I don't see this going ballistic. All right, watch the calls here starting to move here. Okay, it's good to have this active trader window open because you can get in and out puts and calls very easily.
Not all investors will make money. There will be tiers, but the system as a whole.
What happened there? Did I get filled?
Within the system, and you see
Spy call.
already with the
Spy calls got filled again.
Alphabet and Google, those who have a structural edge, like Google does, will do better than those who are going to have to borrow and have all types of circular financing to keep up in the arms race.
Speaking of the play-by-play on market odds of a rate cut, there's also this play-by-play out there on the apprentice-style race for the next Fed chair. And the latest reporting is that Kevin Hassett is in the lead. You know, interestingly, the stock
looking
market
good.
did well yesterday. I don't know if it was because of that or what, but if you look at the 30-year yield, Mohammed, that continues to show higher yields, even with the 10-year and the 2-year rallying. And I do wonder if there are some questions.
Okay, S&P watching here.
Fed independence.
Watching that,
Fed,
you can see a crossover.
I think that it's
Starting to see a bullish crossover as well. Let's see what hedge flows are saying. Hedge flows turning back up. Turning back up, hedge flows. This is the type of pivot I'm always looking for. So the 68.30s, I made a mistake and bought the 68.35s. Got stopped out of that, got back in. Let's see how far we go with this.
Which is deficits and debt matter. And we have to be careful. And what you're seeing in the long end is the
Tesla
market
still
not flashing red,
still at lows here.
a bit of yellow.
You think Kevin Hassett ultimately would be a good choice when it comes to economic, monetary policy, market stability, all the important things for the Fed chair?
I think all 5 candidates on the short list are qualified, experienced, and I think we've used the concern that we want.
Just watching hedge flows for the moment. See if this continues and starts trending.
Because that was the concern with Hassett. And I have to say, just based on my own reporting, I'm talking to bank executives and hedge fund executives. They would have probably preferred a Waller, or maybe not a Kevin Hassett, who has been more politically affiliated with the president. Obviously, as his chief economic advisor at the White House.
All right, here we go with the politics. Can't stand the politics. Okay, looking for higher highs, higher lows on the SPY for now. S&P just got rejected again at the call wall. Okay, getting chopped up. People getting chopped up. Okay, Autodesk looks okay. Okay, Autodesk filled. DSK filled. $900 profit. Filled.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Okay, so here we go. Autodesk continues to drop off. You can get a better fill, probably $25, maybe $20 for that. So you have close to $1,000 profit.
Actually, I'm seeing something from Schwab.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists in taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
All right, so Autodesk. So some of you still don't understand what's going on with credit spreads, right? So all I did was sell a call overhead and buy a call. That was a 16 delta, so at 84% probability that I wouldn't have to manage this position, 84% probability. If you went to Vegas with an 84, 85% probability, you'd do really well. So I sold calls overhead. I bought some for protection. It creates the upper wing of this iron condor. I sold puts, 275, 270. You can see how far away from that. This went to zero. Vol crush. I'm selling the volatility. Vol crush comes in, and what I sold for $120, I can now buy back for $20. So if I had waited a couple more minutes, I would have got out at a better price. So I'd have made $1,000 profit. So generally, I'll sell like 10 or 20 of these. Most of the time, it's just 10. But I was kind of bored. We didn't find anything on HPQ or Dell or Zscaler. So we didn't go with those. I didn't like the premiums. This one had a good premium, so that was good. All right, so watching, looking good here. See, what do we have for Friday? What are the Friday? All right, so S&P is still chopping around here. I'll stay on this for now. Friday, what do we have for Friday? I like to sell an iron condor that expires on Friday or the Friday morning. Let's see. Earnings for MongoDB. Okay, MongoDB. The 28th. We don't have anything on the 28th. We have no. I don't have anything showing up on the 20th. Let me see what Stephen has. Stephen, if you don't know, there's an earnings trades info channel that Stephen keeps updated. Thank you, Stephen. Let's see. There's no earnings on Thursday, so there's no plays for Thursday. You could play Monday. Actually, Friday. Sorry, Friday. I meant to say Friday. Thursday, obviously, there's no trades. Shinji, I don't know what that is. We got MongoDB on Monday, though. Mongo.
Fantasized that in 10 years it would go from a gaming champion.
Let's see what's going to happen here. Which way we're going to go? Which way we're going to go?
And the problem with this is we've gotten so excited about artificial intelligence that it's only natural to have a pullback and say, well, wait a minute. Are we drunk with enthusiasm at this point, or is the reality?
S&P trying to bounce.
So it's just shaking out, in my opinion. The competition, where we're headed. Do we have too much of an idea idealistic image of how this artificial intelligence is actually going to play out?
How do you think it's going to play out? Because as we mentioned at the top of the show, I mean, we've had some NVIDIA bulls coming out to sort of defending this name, the likes of Dan Ives calling it the Rocky of the AI revolution, and the TPU is not shaking, Jensen. But then, of course, you've had some other commentary. I mean, Ben Emmons has been making the point that, you know, maybe we're seeing a new circularity developing where NVIDIA has very much been part of that circle, but now maybe it's shifting to the Google Alphabets of the world. Do you see any of that, or, I mean, is this just noise?
Oh, I see much more than noise here. I sold all our NVIDIA shares way back in the summer, okay? And that was because I had been anticipating that some of this stuff would actually come into focus. So, for instance, you know, the whole accounting accusations that are happening right now, that's just one tip of the criticism. I think there are several other points of the criticism beside the accounting questions, which any company could be vulnerable to. More specific with artificial intelligence and NVIDIA is whether or not that we actually are going to replicate human thought. Nobody's actually talked about the reality of that, but embedded in all this enthusiasm is this idealistic model that we are going to replace the human brain in many functions. And I just think that is so wrong, so far-fetched, but yet people are just moving on with that fantasy. And then, of course, the other aspect that people are starting to focus on now is the overbuilding, you know, the enthusiasm for the data centers. And yet, are there any business plans? Who are actually going to use the data centers? So far, we haven't heard of anybody complaining that they can't get access to data centers right now. And lastly, if that were the case, a simple test like using ChatGPT would...
All right. All right. So starting to see a little drift higher now. Could have a doji today. We're waiting for a good directional play. So until we get a nice trend, you can see we got this sine wave, if you will, since the open, this little sine wave of activity. All right. So until we get a trend, a true trend, if this had extended and started trending higher, that would have been great. We would have had a nice long setup. But right now, it's telling you look for a chop. All right, so S&P, if we can get something going here, I'm almost thinking about taking a straddle. You know, $5 either side, $10 either side. But as history tells us, unless we get a nice trend, we're probably just going to get chopped up. S&P. So in the meantime, in the interim, let's see what's actually moving in the market. So Autodesk, that was a great trade. Closed for $900 profit. I believe you can get out for much better now. Okay, so here's what's moving today. United Health, I added to those 400 calls I have for next year, June. Let me just take another look here. Do I want to do anything else with this?
Only to analysts. That's not the behavior of a confident company. It's the behavior of one trying to get ahead of the narrative. So I think we are starting to see the initial cracks that we will get further as earnings evolve.
Yeah, probably going to do more here. Probably going to do more. I only added 2. I have 5. I want to get up to 10 of these UNH 400 calls. I added 2 this morning. They're going for $16. Maybe. I'll come back and look at that. United Health. Goldman Sachs looking good. Credit spreads took those off this morning. Credit spreads. S&P still chopping people up. Okay, so you still getting chopped up. You're basically in a range right now. Okay, you're basically in a range. Okay, so high to low. If you're buying calls here, expecting it to break out, we tend to see this drift back down. You get stopped out, then you buy puts, and it moves back up, and then you get stopped out again. So it's best to look at MACD, and that's flat right now. So MACD is telling you losing proposition if you're buying puts or calls right now. Okay, there's no trend. There's no momentum. Sideways. So unless this breaks to the upside or breaks down, you don't have a good trend to trade. So back to what we were just doing. Okay, Boeing, Walmart. Okay, Walmart, I have the 100 call. I'm probably going to add to it. Walmart, I have Jan 100 calls.
About how the human brain works and that we can actually replicate that in a simpler way. That's a long way off.
Near a breakout level.
Nobel Prizes away, but I do think that competition is a healthy.
Okay, Walmart's about to break out here. Okay, so I have calls. It needs to get above this 110 level. Above 110.
Always a pleasure to talk to you. Thank you so much for joining us today. Happy holidays to you. And we'll catch you again next time. Chief Investment Officer, Founder, Anderson Capital Management. Coming up, we will get a closer look at powering the AI boom with data centers. The CEO of Next Energy will be
Above 110. Okay, I'd be looking for plus 10. Target 110 to 115 short term. CMG, I like it a lot. I saw that this morning. A-Train, I like that a lot. I saw it this morning and yesterday.
How's it going? First day, so sometimes try it again. You could have done better. Please.
Okay, so if CMG, we looked at this earlier. CMG. Okay, it's turning the corner. It's into the gap. Look at the Kirby. Kirby time. It will tend to get sucked up into this. All right, so $34 call is not much. Let me go in the money. So thank you for the update. I was looking at this earlier. CMG. Let me go. Chipotle. Let's go. Well, December is not that far away, right? Let's go January's. Let's go Jan monthlies. Let's go in the money. Lots of open interest in the money. Okay, so I'll go 55 deltas, $2. Well, these aren't much different. Okay, the 55s. 34 is yeah, let me go ahead and buy some of these. Yeah, CMG, I like it. Okay, I'm buying the 34s. 34 call. Filled. 205. 205. Stop. $1.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
CMG, sorry, CMG not. I'm having had hard time here with typing and with entering the right trades. Okay, so I got the January 34 call. Okay, if this is anything like yesterday, we should see a nice follow through. CMG still going, nice trend. Thank you for reminding me, A-Train. Okay, still more chop on the S&P. You can see what's happening here, right? Back down to the bottom. What's going to happen? People are going to start saying, oh, shit, it's going to go lower. Let me buy puts here. And then it'll bounce back up into the range. If you look at Trace is telling you there's a slight downward sloping condition. SPX, hedge flows. Hedge flows are trending lower now. Need a pivot. Okay, now we're turning up. Shaking my head. Still got a downward slope to this. Watch your MACD. Still no momentum here. Nice move. Trying to cross back up
How are you looking to
from a flat condition. We're probably going to get rejected at the high. If we don't, if we break out, that'd be great.
Without a question, not enough power, not only here in the United States, but globally. When you add all the different components together, e-mobility, data centers, the electrification of our food preparation, literally everything across the board, and bodily heating and air conditioning moving towards heat pumps, which is electrified. The bottom line is we need a lot more power produced, and we need the power that we're producing today to be done a lot more effectively and efficiently and cost efficiently.
Yeah, I mean, that's nothing new. We've been talking about that for months now, particularly as we look at these eye-watering CapEx numbers that these hyperscalers are throwing out there and just the rate, the pace of these data centers that are going up. I mean, there's been a big conversation around whether the grid can support it and, what that's going to mean for energy prices. As someone who's in the business here, how are you thinking about that? What needs to be done here?
If there is not massive investments made into energy generation, the cost of electricity is going to go through the roof. And we're already seeing that, but we haven't seen anything yet.
Okay, all right. Starting to get a little traction up to the upside. We need to see a breakout of this range now. Okay, let's get a breakout of this range.
Quantum computing chips. These are massive users of electricity. We haven't seen anything yet. And again, we're seeing this.
Judging by MACD, this is just going to get rejected here.
Electrification is taking precedent. We're seeing it in mobility.
Bitcoin.
We need to focus on investing in energy
Trying.
generation. And we
Bitcoin's trying.
one source. We need to be agnostic. We need to look at nuclear. We need to look at natural gas. We need to
Got rejected again. S&P.
look at every single aspect we can in order to produce electricity. Remember something. Society
Okay, let me take a 2-minute break. I'll be right back.
focuses and needs electricity. None of these chips that everyone's making work without electricity. So the key here is producing enough electricity to satisfy that demand. And that's exactly what we do. We generate electricity through deployment of assets that do so, typically solar, through smart grid technologies that we have proprietary technologies on. In addition, you have to make the grids that are out there today a lot more efficient in operating than they are today. And the technology exists. It's just a matter of the implementation and deployment of these technologies throughout the grids globally. And we have certain technologies, patents, that will allow for much cheaper production of energy. Our technology was deployed at one of the largest utilities in the United States, and they were able to bring down their operation and management maintenance costs by almost 30%. You're talking about on a utility that has roughly 6.6 million meters and over 12 million consumers. 30% of O&M costs are astronomical for utility, and utilizing our technology, we can do that for utilities across the board, anywhere in the world. And no matter how they produce electricity, whether it's renewables or with legacy energy sources.
Yeah, I hear what you're saying about being agnostic. I mean, we can't be monolithic about how we approach energy. So I'm just wondering from an investment standpoint, I mean, where are the opportunities here? I mean, we've talked a lot about nuclear. I mean, there are some of these companies that are really catching a bid now on this whole hope that this is going to provide the baseload power eventually to, obviously provide the energy for all these AI data centers. But right now, where are the opportunities? Where are we at? Because there's a lot of questions around, particularly some of the nuclear names. They've got no licenses, not a lot of customers, no revenue.
Watching for a breakout here. Okay, so if we get a breakout here.
That is very aggressive about nuclear. The bottom line is no local communities really want to have that within their communities. So it's very, very problematic. And transporting electricity is not inexpensive. So you really want to produce electricity close to where usage is.
MACD's trying to turn.
Our technology is applicable to any energy sources, but we firmly believe in solar and storage. We believe that's an amazing way.
MACD's trying to turn here.
Adopt new renewables throughout the grid.
Just saw Money Magic. It looks like premium killer so far. Okay, thank you, Money. Thank you.
Those will generate electricity for you for a very, very long time. A lot of the projects that we're working on at Next Energy are solar-based, although we do have other ancillary ways of producing electricity, whether it's through natural gas or tying into the local grid.
All right, looking for the breakout. Killing premium.
For solar and stored energy.
All right. Thank you so much for joining us today, Michael Parker. It's been an absolute pleasure speaking to you. Happy holidays to you and your family. Founder and CEO of Next Energy joining me there. Coming up, it's time for
Man, I wish we could get trades like Autodesk, 2 or 3 of those. We only had one. We only had one yesterday. I didn't like. Okay, we're starting to move here. Starting to move. We're starting to move. All right, so call side is working. Okay, let's see if we get any kind of traction. Check out Trace. All right, Trace is turning up. Hedge flows are turning up.
Trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Live. Dell is higher this morning after raising fourth quarter and annual revenue guidance as it continues to broaden its AI business. The company signed at $12.3 billion in orders in the third quarter. Server and storage operating income growing 16% year over year. Shares are up at more than 10% this year. Right now, we are trading almost 5% higher on Dell. So that is the focus of the morning trade. So joining us now for a closer look at this name is Schwab Network's host, Marley Caden. And obviously, Marley, you and I were breaking these numbers as they came in. And what we saw was a bit of a mixed quarter, but investors seemingly willing to look past that because of what they've seen saying about the guidance. Also, as you and I had been discussing, perhaps a little bit more forgiving on a little bit more of an improvement there on the margin that people were expecting because of all these memory costs. Just talk us through what you're seeing as far as the market reaction and what the analysts are saying post-report.
Absolutely, Sam, and good morning to you. Like you said, we did see a bit of a mixed picture when the numbers came out. That revenue number was record-breaking, but it was in line with expectations. EPS was a beat. Although this morning we're up more than 4.5%, likely because of some of those numbers that you just mentioned, that strong AI demand. So first, let's take a look at the numbers. They had their record-breaking third quarter revenue. It was up 11% to $27 billion, their highest quarterly revenue ever, but it was just in line with expectations. They did exceed on EPS 259 compared to expectations for 248. But the rally likely because of this raised full-year revenue guidance that was driven by demand for those AI servers. They're now projecting $25 billion in AI server sales for fiscal 2026. That represents growth of more than 150% and is $5 billion higher than their previous estimate. You also mentioned the margins, which we both know and talked about in advance of the earnings release, where analysts were watching for any deterioration there due to the rising cost of components and memory chips. But the company's gross margins came in at 21.1%. That was ahead of estimates. So analysts' response here. Melius Research put out a note saying this was supposed to be a disaster due to components. That's a direct quote. It wasn't, and Dell should be rewarded. That's what Mizuho is saying. They have a buy rating, a $200 price target in their note that they put out. And they argued that, quote, some relief is coming for Dell, which they say looks extremely cheap right now. We also saw a lot of price target adjustments in the wake of this report. We have Mizuho raising theirs to 175, like I just mentioned. Dell's price target at B of A up to 163 from 160. They maintained a buy rating. Also mentioning this fiscal year guidance and their early comments for fiscal year 27 reaffirmed their confidence in Dell because of this AI server demand. They expect long-term EPS growth of 15% over the next 5 years, which is in line with what the company is guiding. Morgan Stanley also raising their target up to 113 from 110. They have an underweight rating, though, on shares. They say that they acknowledge the memory cycle is unprecedented, but they spoke to seeing better preparedness from the company and guiding towards their fiscal year 27 EPS growth, which they said is well ahead of both the firm and the street's forecasts. So some questions there. We did also see UBS lower their price target. They lowered it from 186 down to 167, but they maintained that buy rating on strong AI demand. But they said they think commodity inflation could have some impact in fiscal 2027. Lastly, we saw Barclays lower their rating to 148 from 151, so not a significant drop. They keep an equal rate rating. But this note was interesting. They said that they reported their beat on higher gross margin despite those rising commodity costs, but they upped their estimates post-print but dropped their price target. So they are seeing, bullish sentiment here in Dell, just lowering that price target a bit, but still well above where they're trading right now, even up more than 4%, trading at 131.42 right now, Sam.
Yeah, and it's interesting as you sort of get us across some of the analyst notes and commentary this morning. It did very much seem heading into this report card that analysts had tried to get ahead, particularly of the margin story, on expectations that it could take a little bit of a hit from those rising memory costs. Now, we didn't really see a huge amount of that. In fact, we could perhaps take away from this report card some margin relief, maybe because of their inventories, also of course because we did see that strong forecast as far as the AI servers is concerned. It was interesting because it was a bit of a similar story with
Okay, so we got rejected again. All right. All right, coming back down. A larger range. You can see a larger range now. Okay, so a bigger range now. All right, we're going to jump around inside of this. So what are we going to do? MACD did turn up, so that was a nice little short-term trade. Hopefully, we can start trending.
Yeah, certainly, and we had seen a pullback. Just last month they were down more than 17%. So I think really the best quote I saw of all of them was from Melia saying this was supposed to be a disaster, and it wasn't. That was sort of the expectation. The expectations were low, and they came in better than expected, so they're being rewarded for that, which is a story that we've seen. When the bar is low, there's a lot more forgiveness this earnings season.
Sure. That's totally right. And it's interesting because, as I mentioned earlier today, and as we were unpacking when we broke these numbers, it seems like investors are forgiving enough with the quarter because of how they're seeing the future. So that's certainly an interesting story to keep tabs on. Thank you so much, Marley. I'll speak to you later on. Coming up, we'll take a closer look at the sectors on the move this morning and what you need to know about the latest UK budget this morning. Morning Trade Line will be right back.
Okay, we're trying to take this grind higher. All right, so you're getting the idea here, I believe, right? You getting the idea? All right, let's see what Trace is saying. Trace is trying to turn up. Okay, I'll keep an eye on this for a minute. So if we get inside this area here, you can see, let's go scroll back here. Okay, you see all this premium up here? See all this positive gamma right there? That's at 9:50 a.m. And what happens after 9:50? We start to turn down. Okay, so we get some, as Money was saying, it looks like they're just chopping premium, killing premium. And now we're starting to see these trades up here get closed. As they're getting closed, we're seeing hedge flows starting to rise. So we're probably going to keep trending here, it looks like, hopefully.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Barnes, coming to you live from the New York Stock Exchange. Let's get back to Dell and bring you in Charles Moon, now stock strategist at Prosper Trading Academy, because we like to keep promises here at the Schwab Network, and we did tell you that we would have an example trade for you. So what is it here for Dell? Charles, good morning.
Good morning, and happy Thanksgiving, everybody. I really loved how the earnings report played out. Guidance was really strong. Now, the stock isn't really reflecting that guidance overall, but part of me, this is kind of the
okay, damn it.
The raised guidance.
We can't seem to get any kind of follow through here.
Frothy projections that Oracle had, but overall, the stock
okay.
Has a lot of demand, a lot of strength.
Looks like they're going to keep us in a range for now. All right, we'll look at something. I'll look at doing something here. It's only 10:40. 10:40. Wow, an hour and 10 minutes into the trading day, an hour and 11 minutes already. So I'm your host, Cousin Vinny, coming to you from theclosingprint.com. If you're leaving us early today, just popped in to say hi in the trading room. Happy Thanksgiving if you celebrate the holiday. I was listening to Yahoo Finance this morning. They were saying that the UK, United Kingdom, getting more and more into Thanksgiving and American foods. I thought that was a pretty interesting news feed this morning. Anyway, happy Thanksgiving if you're leaving us early and going out to travel. Hopefully you took the Autodesk trade, you made your money, paid for your flight, and you can have a good day off. Tomorrow we're off. Friday we're back for half a day. Okay, S&P.
Well, the good news for market bulls is not a lot has changed in that half an hour, Sam. And so kind of slowly maybe solidifying, absent some sort of a headline news surprise, what today may look like a positive drift to shares. About 80% of the S&P 500 is higher. We talked about the sector performance.
Oracle did gap up this morning. I'd love to see Oracle run higher into earnings. Oracle. I might do an iron condor on Oracle. I already have some puts. I have shares of ORCX that are down quite a bit. Should have taken these off a while ago. I don't often trade Oracle. First time this year, actually, I think. Walmart. Walmart looking good. Okay, let's take a look at Walmart. CMG. Okay, CMG fading a little bit from the high. Walmart. Walmart trying to break out. Okay, Walmart trying to break out. Got January 100 calls. Had that since before earnings. Okay, let's see. Let me zoom out a little bit on Walmart. Walmart. Let me go to 10 months. Okay, nice gain. Just keeps following the 50-day moving average. Doesn't get too far away. Once it gets, what's the 50-day right here? 50-day here was about 98. Gets about 10 points away, 15 points away from the 50-day. Once it gets about 15 points, it tends to pull back in. Right here was about 100. Okay, so about a 10 point, anywhere from 10 to 15 points. It gets 10 to 15 points away from the 50-day moving average. It starts to fade back in. So this is a pretty good trender. At the January 100 call. Okay, her squeaky voice. I don't know what it is about it, but just like I can't. Vinny, you're so critical. I think it's getting old. I think it's the older you get, the older you get. It reminds me of that that Bill Burr, what is it, Netflix special, Old Men or whatever the hell it's called. I was watching one of his specials last night. He cracks me up. I love Bill Burr. That was one of Lee Starr's favorites as well. We used to joke around about the jokes. I mean, we would talk back and forth to each other using lines from his comedy skits. Bill Burr, Irishman from Boston. Nice guy. Anyway, yeah. Let's see. Just marking up a chart of Walmart. Oh boy. So it's always a good way to start the day. You know, it's something like I love earnings season because you can sell these iron condors or put call credits, whatever. I love earnings season because for like a month straight, you can sell premium and not have to be that concerned about the markets. Here we go. We're pulling back down now. Okay.
Markets are all the rage, so how can investors capitalize on that momentum? We're going to talk about it today on Market Navigator and Power Lunch at 2 p.m. Eastern Time for an exchange of ideas.
Yes, baby. What do you need? You got to stop eating those treats. They're not good for you. I know you like them. They got catnip in these cat treats that she likes. Bad. That's bad for you. Come here. Come here. There you go. She's keeping me company. She likes to come up and hang out in the office while I'm trading. She'll eat a few treats and go to sleep in the corner. She's a good kitty. I've never been much of a cat person, you know. But I guess any animal will grow on you in time. So, okay.
SYM. KTTA may resume in less than a minute.
Welcome back. The Centers for Medicare and Medicaid Services just announcing lower negotiated prices on a slew of prescription drugs.
Okay, Walmart. And the 100 call.
Hey, David. There are 15 drugs that are on the list for discounts in Medicare starting in 2027. And on average, the Trump administration negotiated prices that are about 36% below the net price paid by Medicare back in 2024. Now, that compares to about a 22% net discount for the first round of drugs last year. Now, in one key case, the Trump most favored nation price is actually even lower. The IRA price, which is negotiated separately for Novo Nordisk Ozempic from the MFN deal, is $245. The one negotiated here under IRA was $274, 32% discount. Now, officials at CMS say that the MFN price is going to be the one that prevails. Now, we don't know what those MFN prices are for Pfizer's prostate cancer drug Xtandi, which is one of the most expensive on the list, with a net IRA discount price of $7,000 now for 2027. And AstraZeneca's leukemia drug Complex, not sure if that entered into MFN, but that only saw a net 25% discount. But one of the biggest discounts overall was for one of the most widely used drugs, Glaxo COPD drug Briolita, at 67% below that 2024 net price. No shares are higher this morning, perhaps in part because the company submitted approval for a higher dose of Wegovy for weight loss. And analysts have said that they may actually gain market share because of the fact that Medicare will now cover weight loss drugs. The other drug makers trading overall is kind of mixed this morning. Teva shares are rising on an EU approval of two biosimilars that it got. Its Austedo drug for involuntary movements like tardive dyskinesia saw a 21% net discount under the IRA process. The Trump administration is still trying to push about a dozen more drug makers into its most favored nation program. But for right now, they are using both price negotiation programs to try to bring down drug prices, at least in government plans. You guys?
Okay, thank you, Bertha. Bertha Coombs. Still ahead, it's not just one of the busiest travel days of the year, it's also one of the busiest days for the marijuana industry. Details when we come right back.
Trend Tracker
All
is
right.
sponsored by CME Group. CME Group, where risk meets opportunity.
SYM.
So we have tomorrow off, much needed day off. Can actually sleep late, past 6:30. Okay. Sorry, I didn't mean to keep this up here the whole time. Okay, so here we go. What are we gonna do? We're gonna keep chopping around again. Gonna keep chopping. What's gonna happen here? Higher highs, higher lows. Trace, turn back down again. Okay. I'm kind of disappointed that there's no earnings that we're interested in. Let me just go over to earnings whispers. Let's see if there's anything that's worth taking a look at. I'd like to sell something. Earnings season winding down. Calendar. Let's see. Friday. No earnings. That sucks. I looked at these Moscot sunglasses that Johnny Depp, not sunglasses, glasses that Johnny Depp wears. Really like these. About $300. Thinking about getting a pair of these. Anyway, let's see. ADSK. Let's see what the earnings were actually. Autodesk. We're completely out of that trade. 76% earnings growth, 18% revenue growth. They got the subscription model. So now, if you're a civil engineer or an architect or anyone that uses AutoCAD or all of their different services, you have to pay for a subscription and you have to update it. You have to keep it updated because you have clients or contractors that work for you, like engineers that work for an architect, structural engineers. They have to use the same version. So everybody has to use the same version. It's a really interesting way to get people hooked into it. Same thing with Adobe. Adobe, if you have Illustrator or Photoshop, you really want to stay with the current version. That's something else. So do they really offer that many upgrades during the year? Always the question. It's like $3,000. Last time I looked, AutoCAD was like $3,500 a year, $4,000 a year, probably close to that. All right, S&P is starting to climb a little more. What's Vinny talking about? I'm just like talking about Autodesk earnings. This actually turned out to be pretty good. We sold the Iron Condor yesterday. It turns out to be 75% profit overnight, which is always fun. Always fun to take some of these trades. If you haven't looked into spreads and condors, do yourself a favor. You're missing a big picture. And you can thank Corey, by the way, Golf Mania. Corey, because I didn't used to post these. I used to do these. I've been doing these for 15, 20 years. You can average $500 to $1,000 a day from overnight iron condors, and you can manage. That's anywhere from $10,000 to $20,000 during the month of earnings. It's not difficult to do either. So, what am I looking for here? Oh, Autodesk. Okay. All right. So you can see the big fade. Black candle means we hit the high, and we've been fading all day. We're inside this candle right now. All right. So that's $1,200 profit there. Looking at, I took it off at the $30 debit, so that was a $900 profit. Okay, let's see. All right, so what's it doing? All right, keeps fading. All right, it's probably going to settle down here. Plus, you got vol crush. I like the earnings season's good because you get the vol crush as well. Dealers have to pump up the price of the options into earnings. A lot of times they'll be looking at, bumping up the probabilities 5, 10, 15%. And you're paying up for that. You're paying, if you're going long, whether you're going long calls or puts, you're paying up for that. I take the opposite side of the trade and sell. Lately, I've been selling 15 deltas, and that's been working pretty well. 20 deltas, a little bit more risky. We got caught with Netflix on a 20 delta put. We had to wait about 3 weeks before we could get out of the position, but we did come out unscathed. Just had to deal with the management issue, which happens, which is a good thing, because if you just learning how to manage a iron condor that goes in the money, It's a good way to realize that you don't need to stress out and that you can just take the time to let the trade work. Because generally stocks are not going to go 10% and just keep going, you know. They're going to see some profit taking. Same thing happened on Oracle. Oracle, we thought for sure that this was going to be a great trade. You know, we sold an iron condor. We wound up taking it off. It stayed in the range. Then it started to fade. I took some puts. Also has some ORCX, which are down quite a bit, actually, that I've been selling premium around so that I can soften the blow of holding on to this after a drop below the 50-day, which I shouldn't have done. I did it because I don't think this company is going away. Lately, there's been a lot of speculation about let's see here. 1 second. Hurry. Sorry. A lot of speculation about Oracle's debt. That could be an issue. Okay, we're breaking out to the upside here. All right, SPY calls working. S&P calls working. So yeah, most of the time, like 1 out of 10 trades, you might get a bad trade, in which case you might have to close. Like Disney was a bad trade. Disney, we got the call side off. The put side didn't work. Okay, Disney, probably just waiting would have panned out. Okay, so you can see right here what I did. I just wound up and go ahead. I took this off. I took this whole trade off. Okay, so this trade is no longer. Okay, so we lost a little bit on this one, not a lot, but it made up for it. The call side made up for the small loss that we had. Net. Okay, so this is starting to push back up. So if we start to move back up above 105, this trade will actually work out like it did with Netflix. Okay, so Netflix. Okay, this one split. And we got out of that one. Okay, calls are going. S&P is on the move. S&P. All right, so enough chatter about this. Very interesting. Oh, you know why? It's because I'm off the screen. Okay, so we're turning up again. Hedge flow's turning up again. Okay, 5 minute. Hedge flow is trying to turn back up again. S&P is on the move. Looking good. S&P. Let's see how far this goes here. S&P. S&P's scooting higher. Okay, so we got the breakout that we were looking for. Okay, we got that breakout. MACD, what's MACD doing? Always check your MACD. If you're just taking a trade, what's MACD telling you? Are you buying calls here? We had a member that used to be with us. She would always buy the high of the day. It just used to drive me crazy. It was like, don't do that. MACD's turning down. You don't want to buy calls here. MACD's turning down. You see that right there? Buying calls right there. Trust me, if you pay attention to MACD a lot of times, especially if you're trading options, okay, right there looks like a breakout, right? Looks like we're going to break out above this pivot. Didn't happen. If you bought calls here looking for the breakout, look what MACD was doing. MACD was turning down. Okay, on the breakout this time, look at the difference. Look at the difference between MACD now on the breakout. Okay, now we got a positive. Okay, we got a positive breakout, break of structure. Okay, you get a buy order block. Break of structure produces a buy order block. That's confirmation. We start to see the break to the upside. Volume picks up. Okay, volume picks up. MACD's rallying. Okay, so everything is in. Okay, now we're starting to see a little profit taking. All right, so a little bit of profit taking here. Did we get a follow through? Tick cumulative is still green, by the way.
Industrials beating tech, equally consumer discretionary beating tech as well. So maybe this is just kind of reversion to the mean. They got too spread wide right, in terms of the outperformance of tech for a little while. But it's also worth remembering a week or two ago, you had a lot of people talking about that late 2018 scenario when the market decided the Fed was too tight, even though the economy wasn't really deteriorating at that time very much. In an observable way, there was a sense that the market needed that dovish pivot.
Okay, MACD is starting to show signs that might peak right here. Okay, MACD, watch your MACD. Watch that volume. Volume's coming in again. Maybe we pop. Okay, looks like we're going to pop. Let's look at Trace. Trace is turning back up. All right, so it's starting to look more bullish. That was just a little profit taking. Okay. Little profit taking. Okay, S&P looking for more upside. Let's go, LET SGO. Let's make this a nice pre-Thanksgiving profit day. Started off with Autodesk. That was a good start. Yeah, that looks good. That looks good. I feel like I'm going to withdrawal right now. I want to take another iron condor trade, especially after a big win like that. I was thinking about doubling up to 20 iron condors instead of 10. All right, so that would have been $1,800 overnight. Would have been, should have been, not the same thing. Still 10 iron condors. You have to put about $3,000 aside in your account so that, unless you're on margin, so that the worst case scenario, you know, we have I don't want to say it, but something happens in the markets, melt down, then yeah, you'll have a trade that you have to manage. S&P still looking good. All right, let's take a look at the charts here. Let's see the 0-day chart. I also have overlaid on my 0-day charts up down volume. Up volume is leading almost 4-1 on the S&P 500. 2.4 up on the Qs. Okay, we're grinding higher at 0-day setup. Okay.
In the short term, by the way, in a very, very short term, market's already looking a little stretched and overbought, even though we were oversold 3 days ago. I mean, I'm talking really short term, like we could flatten out over the next several days or weeks.
Yeah, I would think everybody's pretty much saying the same thing that Mike just said. Looking for the markets to flatten out over the next couple of weeks and then rally into the holidays. Okay, let me look at my IWM trade. IWM. So the 0-day looks pretty good. Okay, Bulls got it. Take cumulative, breath, everything's.
I think a lot of the AI trade that has been the talk of the town and talk of the market is going to drive the market higher in 2026. We've seen a lot of market cap move around.
Okay, let's look at, there we go. Continue to move higher here. Okay. Walmart looks good. Walmart breaking higher. Okay, let me take a look at breath real quick. Breath. Okay, advanced decline. Everything is rising. Advanced decline. Junk bonds bottomed. Started off the week with a Friday neutral signal on junk bonds. JNK, junk. Junk breaking back above the 50-day. Okay, junk. Junk looks good. When the junk looks good, I know there's a joke in there, Mondo. When the junk looks good,
fewer people doing more work, and that is the theme of AI that will play out for the next decade and beyond.
do you have ideas as to where unemployment goes from here? I mean, we've already gotten some good numbers on young college grads, age 20 to 24. We're talking 8.5% now. Where do you think the overall number goes?
Yeah, Carl, it's the right question. I don't know. I mean, I think jobs are going to shift around. I kind of lament back in the day when we started looking at spreadsheets and saying we weren't going to need accountants because that was going to do all the work, and obviously that's not the case. So jobs are
Okay,
changing.
at the
The
high
future
here.
look is changing.
Looking for a little more upside.
A few years ago, talked about that we don't have enough workers, right? We're aging out.
Come on, let's keep going. All right, so S&P looking good. 6,800, 6,820, 6,825.
That we're just going to have everybody sitting home and on ChatGPT. It's just not the case. It's going to make us more efficient. We're the absolute most productive economy in the world, and it's being proven every day with our investments in data centers and cloud and AI.
Yeah, Goldman's got a great chart today looking at labor productivity in the U.S. going back to the 90s. We're 2x other advanced economies, and a lot of that is just the way we put the pedal to the metal on IT.
I think that's going to continue, right? You look at where the AI investments are. The fears now is, are we betting on the right horses? Are we going to have enough energy to produce this? Are we over-investing? All great questions, which will lead to better productivity, which will lead to better stock market gains. It's going to be really hard to pick one or two stocks, but it's going to be really important to bet on this market and bet on the economy.
But the question is when? Like, is there a time frame? Is there a market expiration point where all of this AI spending needs to be absorbed and adopted by enterprise for it to pay off in a way that the market expects?
We deal with that as citizens every day. Who are the winners? Where we want to invest our capital, where we want to invest our talent, where we're putting the companies that are going to go public. And we're going to see some of that, Sarah, in early 26. I think the question about bubbles and the question about overinvestment is the right one. I also think you get a room full of executives in and they say, is there a bubble in AI? I think everyone would raise their hand. That leads me to believe we're not a bubble.
We had a conversation, Mark, a few minutes ago about sort of affordability. I mean, you can point to so many things in the last few days. Home foreclosures year on year. Seriously delinquent credit cards, seriously delinquent auto loans, the percentage of Americans having their power cut because of a late utility bill. Why is none of that really reflected yet in either regional bank or money center bank commentary?
It's a great question. We had a big conference last week, Carl, where we talked with middle market lenders and middle market credit providers, and I had a similar commentary, which is they're seeing the assignments of tough consumer across the board.
Okay, hedge flows, trying to push a bit more. Futures, a little bit of profit taking.
We've seen this real tough market in some of those stocks. I think what you'll see through the 2026 year is the people who invested properly will do really, really well, and the people who came late to the party probably won't do as well. And I think you'll show that health of the market into 2026. But yes, the consumer is definitely stretched. The low end and the White House does have to deal with it. Oil prices are coming down. They will continue to come down. Energy bills are going up. Now, we said the White House has to contend with, but I don't think they're ignoring that fact. Scott Bessent talks about it all the time. This is topic A in the White House.
All right, bullish view. Mark, thank you for joining us. Happy Thanksgiving.
Thank you. Happy Thanksgiving.
Mark Lehman, Citizens Commercial Bank Vice Chair.
Still ahead, shares of cybersecurity firm Zscaler down today despite beating estimates in Q1. CEO is going to join us next to break down the quarter.
Then later, CEO of Carnival is here. We'll discuss consumer demand for travel this holiday season. Money Movers will be right back.
All right. Looks like we're going to push a bit higher. Nice trend. Volume. MACD still pushing. Okay, starting to turn here. So you might want to think about taking some profits off a little bit anyway. MACD is starting to turn a bit. Which one? You want some treats? Okay, watch MACD here. Looks like they're taking profits. S&P. Okay, they're taking a little bit of profits off. Let's see if we can't get a follow through here. I'd like to see this turn back up. Okay, it's still holding on to the highs for now. Okay, let's take a look at some of these stocks that are on the top of the NASDAQ 100. AppLovin, we pointed that one out to last week. Yeah, Friday, right? Had a reversal candle Friday. Monday we came in. Nice reversal. This one's been on the run, and if I'm correct, I probably marked this up. AppLovin. AppLovin. Yeah, I did mark it up. Okay, so yeah, that's what we're looking for. Okay, so what do you get? You get a cup and handle breakout. The stock breaks higher, starts running. This is a first stage base on the left. This is a second stage base. If this breaks out, excuse me, look for AppLovin to be $1,000 stock probably by second quarter next year. Okay, looks like we're going to go some more. S&P. Excuse me. Sorry, got something stuck in my throat. 1 second. Hate when I cough in your ear. Happens. It happens. Let's see. Okay. So AppLovin looks good. AppLovin.
CNBC interview is the CEO of Zscaler, Jay Chaudhry. Jay, welcome back. It's good to have you. Thank you, Carl. Thank you for having me. Do you agree maybe with the notion that the street either wanted a higher guide or a more specific guidance on recurring revenue? Look, street does what it does. We had an exceptionally strong quarter. Our revenue growth, 26%. Our ARR growth, 26%. Our RPO growth, 35%, our free cash flow margin, 52%. These are spectacular numbers. In fact, if you take our revenue growth of 26% plus free cash flow of 52%, that's like operating at a rule of 78. That's out in the stratosphere. Very few companies at $3.3 billion or higher ARR are growing at 25% or more. We are one of those companies. I do think investors get it wrong from time to time. I'm scratching my head. Did anything change in the guidance about, say, we mentioned Red Canary and their contribution? Look, we had a strong beat. A big part of the outperformance came from Zscaler's organic.
All right, looking good. AppLovin.
Performance to our annual guidance. So we raised the guidance. I think it is a very clean quarter. Top line, bottom line, operating margins, and we're operating at scale. The number of customers we acquired and the AI security products we're selling, a number of point products we're displacing out there to reduce cost and complexity. It's going extremely well.
I mean, I don't know. Some analysts were saying maybe that you weren't disclosing the actual contribution of the Red Canary deal, trying to figure out whether organic growth is decelerating. Do you have any more clarity around that?
Red Canary contribution is very, very small as compared to our overall business. It's small. We gave them guidance. We shared with them what they have. The question I asked was beat coming from Red Canary or Zscaler? As we clearly explained to them, it's largely to do with our organic business, and we passed most of the beat to our annual guidance increase we did. So very clean. Our customers are happy. We're good with performance. We're hitting on all cylinders. Jay, where are we in the trajectory of implementing Gen AI to differentiate the platform? So Gen AI is happening. We are sitting in the traffic path, all traffic that goes from enterprises to these Gen AI applications.
S&P. Can we keep going here? Come on. Don't fail me now. S&P. All right, starting to. All right, MACD has turned down very aggressively. Okay.
And we're building agentic exchange, which is extending our zero trust exchange to have secure communication with agent to agents. So we have a pretty complete AI security portfolio. Lots of companies have small point products, but Zscaler is always known for having an
all right, what puts are doing here?
AI security platform, which actually
S&P, SPX. 0-day puts. Let's see what they're doing here. They're still just looks like profit taking. We're just flattening out. We're gonna watch MACD. See if we get a dip for a better entry. Looks like we could go. Very hard to follow this one. Let's see what Trace is doing. Trace is starting to trend higher. Okay.
And as soon as they build it, they all worry about security. We're already seeing a lot of AI power attacks happening.
Okay, can we get up here to 68.35? All right, you can see all of this went away, right? Before there was a lot of volume there, a lot of positive gamma. That positive gamma went away. Look at the open. Look at the open. And now it's gone away here, right in this area, right here. You can see all of this has been sold. All these positions have been closed, and we're starting to grind up into that level.
So we are using AI in all areas in the company. It's actually moving the needle to a meaningful level. And some areas are happening faster than others. For example, customer support, engaging, helping with customers. AI is playing a big role. Our software development, our testing of software is playing a big role as well. So it is impacting the number of heads we need to add year over year. Without AI, with AI, it is a factor that's making a difference. We do believe that AI internally is making a difference and will make more difference. It's going to help productivity across the company.
What about this idea, like we're asking with the hyperscalers, is it winner take all?
Okay, tick cumulative is very green. We got 5, 15, 30, 60 minute on a buy signal. Tick cumulative is green.
I think the notion of winner take it all may be possible in the consumer space. When it comes to enterprise, generally it is fragmented. May not be overly fragmented, but there will be a handful of winners in each of the market segments, especially the cyberspace.
All right, S&P is breaking out to the upside. All right, brief pause there. Watch MACD. It's still drifting a bit lower, but we're making new highs.
A cyber company is expected to be more like a Switzerland, where I make sure I can secure applications sitting in any
Palantir. Okay, day 3 on the reversal. Day 3. Monday we bounced with almost a hammer. Tuesday we followed through. Today we had a little dip into the low below yesterday's low, and now we're bouncing. So this looks pretty good. Looks pretty good for Palantir. Okay, S&P still going. Palantir looking good.
and we are also a neutral third party that can secure all applications on any platform. Appreciate the straight talk, Jay. Really helpful. And by the way, shares are still beating the S&P for the year to date by like a factor of 3, despite today's action. It's good to see you.
Zscaler, yeah, almost took an iron condor on that one,
Thank you, Sarah.
but the premium wasn't good. Zscaler, the security stocks are going to be around for a while, right? Zscaler. Oh, yeah. At the 200-day? Yeah, I like it. Zscaler.
My product is a line of products made out of silicone that stop babies from dropping and throwing all of their toys on the ground. I started out going to expos, and then I was on Shark Tank, so that got a lot of national exposure. And then I was able to get into Walmart and Target. I literally had to cash in my retirement this week to stay afloat, and my brother, who has been with me for 4 years, is having to go back to his old job. And because of the 145% tariffs being in place
for so long, we ran out of stock and didn't have any revenue coming in for 6 weeks. We had a GoFundMe to help raise the money to cover the cost of tariffs so that we could get product in. But now I don't know if we're going to be able to get product in after that. The cost of baby items across the board has gone up 16% just since March.
Yeah, Lee Starr, who's no longer with us, passed away, unfortunately. Great guy. Lee Starr would look at a pullback like this, especially after earnings. This would be day one. So the way I look at it is, do the institutions show up? Do they show up at the 200-day? Is there more to this pullback? Okay. So if there's more to this pullback, let's take a look at a few levels here. Let's look at Fibonacci. Okay, from this low, let's see. From this low down here up to this high. And we want to look at, okay, well, that's where we want to look, actually. Fibonacci. All right, so we'll take this level. Reason why Fibonacci's work is because so many people use them for exactly these reasons. All right, 382 Fibonacci is 271.94, more or less. 50%, we came right down to 50%, bounced. Okay, so if this price action can consolidate in here, I'd look for consolidation right in this zone. Okay, I'd be looking for a base. There's no hurry. There's no hurry. Yeah, you might miss a few points if you think that way. You're going to be disappointed most of the time, I would say, because it takes 7-8 days a lot of times for these stocks to base and for the oscillators to all reset. In this case, though, oscillators are already pretty bearish and starting to turn back up. So this might actually work sooner than later. Okay. Dylan, so if you're liking that pullback, I would see, let's see how this base works out. What happened to my audio? No audio?
Only up a little over 1.5% in the last 6 months. You walk us through your thoughts here on Meta.
Yeah, this one is going to be rather straightforward, too. This is what I term a bid back and ready for another smack. And that is, there's been some wild sell-side activity inside of Meta. And what you've seen really over the last 2 trading sessions is this enormous bid back. And what you're getting right now is, yeah, there's some people kind of coming in and buying the dip, but this is predominantly some short covering. I think that's actually going to be very short-lived short covering. So you get this explosive move in just the last couple of days from this 580 level, almost back all the way to 640, and it already feels like today it's going to fade. So what am I doing? Positioning rather short term, looking for it to actually jump right back into that downtrend. There's no reason to assume otherwise at this point. It's a bid back, it's short covering, everybody kind of reloads and they go for another round to the downside. So
still grinding a bit higher, S&P.
Duration's going to be the December 5th expiration. The reason I'm shorting the duration is the volatility is huge.
Okay, so that's that. Palantir looking good at the highs. S&P. S&P at the highs. Looks like we're trending. So MACD is flattened out again. So last time MACD flattened out wasn't the end of the world, and we wind up turning back up. So got to watch hedge flows. Hedge flows still trending higher. Looks like we're going to go to this level here. 68.35 would be my guess. That's a 99 percentile. 68.35. 68.35.
Right, 580, 585 or so, that general area. Our green line here was 586. It was kind of the areas where we had our worst closes here. And as we progress forward, you can see, once again, very frequently it was a stopping point for price. That's about where we bottomed out most recently here. We did break through our downward sloping bluer trend line there. But now,
okay, S&P, your 99 percentile at 68.35. It was 68.25 before, pointed out by Michael Miller as well earlier. Hedge flows rising. Bullish.
But it's shorter term. The shorter term If we were to break downward here, that opens the door to 586, 585, that general area once again. For now, though, 21-day EMA just below current prices near 633.50. Purple 250 2-day EMA, our longer term one, comes in.
Walmart. Looking for Walmart to rise into year end.
But it did hold up a little bit better than you might have thought at those low points here.
Walmart.
We had a significantly.
Look at Walmart on the weekly. Look at the weekly time frame. It just pushed off the 10 EMA weekly. 10 EMA weekly is very bullish. Look at the rate of change is starting to turn. Walmart.
Standard deviation channel near that 655 level once again here. Our point of control 604. If we were to move too far below that 600 level, volume really starts to thin out as well. So be on the lookout for what happens when we start to cross out of this heavy trading area.
Well, Meta trading higher on the day today, up about 0.2% at 637.47. Don, we want to thank you for taking the time ahead of the holiday to be with us for the big three today. That's Don Kaufman from Theo Trade, and of course, Rick Ducat, our lead market technician. Happy Thanksgiving to both of you. Coming up next, we're going to spotlight NVIDIA. Shares slightly higher today, but we've seen a decline of 11% just this month. It's down 15% from all-time highs. We'll cover that next on Trading 360. We'll be right back.
Oh boy. Okay, we're sitting here at the highs, trying to do something S&P.
Sometimes, you could have done better. Same goes for where you invest.
Funny commercial.
Level up and invest smarter with Schwab.
Morning movers, be the first to find out.
Okay, 68.35 is a 99 percentile. Looking forward to test that. Walmart. Okay, so we're looking at Walmart. Walmart. Okay, this is Walmart during the 2007, 2008 financial crisis. Note, Walmart, when everything else was melting down, what happened with Walmart? People were buying. Gained 52% when the markets dropped 60%, more than 60%. Pretty interesting. Walmart. I thought I marked up a chart here. Oh well, Walmart looks good. Walmart trying to break out.
It's interactive learning at its finest. Tune in live or watch on demand. Head over to
Hedge flows peaking out. 99 percentiles just sitting there. Within reach. Oh, we're starting to pull back now. Okay, pretty aggressively here. Ay, ay, ay.
Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern.
MACD turning down.
Stay connected.
See how far they take this.
Download the Schwab Network app and stream anytime wherever you are.
All right, TSSI finally catching a bid. TSSI, Mondo. TSSI catching a bid.
Despite the strong earnings that we saw last week, shares continue to trade lower. Joining us now, Samuel Kerr, the global head of equity capital markets at Merger Market. Samuel, thank you for taking the time to be with us. My last guest, Don Kaufman, was talking about, reignited concerns over an AI bubble. He thinks they're overblown. I'd love to start with your thoughts on are we in an AI bubble?
I think it's definitely something that more investors are concerned about with an AI bubble. I think not only are valuations very high in AI stocks, the amount of capex and the amount of spending that's going to have to take place to sustain those valuations are looking increasingly challenging. And I think, with bubbles, right, they can often be self-fulfilling. And the amount of talk that we've had over an AI bubble is certainly prompting concerns among investors that we're certainly looking like we're in one. I think the reaction to NVIDIA's results last week, which were pretty strong, really, if you think about it. Big earnings beats and such on all their numbers. The short-lived rally that happened afterwards, then followed by a very big fall. Intraday, I think, shows you certainly that investors are now very concerned that that's the state of play.
Mm-hmm.
CYXI.
Yeah. Miss you, buddy. We miss you. All right. So TSSI looking good. Dell had earnings. Dell, nice follow through on Dell. Mean reversion. Ooh, you know what? What about, let's see what we can get for Dell. I know premium is collapsing here. Probably some put premium. Let's see. Let me go out to December. Let's see what I can sell Dell for. The 30 deltas would be $3, 128. December. Should have did this earlier. Should have done it earlier. Could sell some calls overhead for December. I don't think we're going to get back to, let's see, what's 70? 65 is a 10 delta. That's no. 20 delta is a 150. 150. We get above the 50 day before 19 December? Probably. December. Let's see. 20 delta is a 150. 150, 125, 150, 150, 50, 55. Looking at selling some premium on Dell. Let's see, below 125 is a 424 delta, 125, 25, 120. What do those go for? $1.70. $1.70. See if we can get a fill there. Do. Okay, so Dell. All right, so Dell, looking for this to get back to the 50-day, but consolidate in this area maybe. Just sold some put premium down here. And I sold some call premium. So it's technically an iron condor. Okay. I sold 150, 155 overhead. I'm looking at the Bollinger Bands. See how wide the Bollinger Bands are? There's still a lot of volatility in these, even though we had earnings already. S&P continues to rise here. S&P is still going, looking like we're going to continue this trend higher. Looks good. What do you need? All right, hedge flows are still rising. We're still looking at this level overhead, 68.35, 99 percentile. Looking for a test. S&P is still grinding. MACD flat. So the grind higher continues. 68.35 looks like the target. Okay, we're starting to rip a bit more. What happened to my audio? Do I have no audio here? High tick alerts. Technically, those aren't high ticks. Okay, we don't have high ticks yet. Okay, we're still going. S&P is still going. S&P still grinding higher, looking good. S&P. No high ticks yet, but tick cumulative is nice and green, so it's showing bullish follow through. We got S&P still running, looking good, The NASDAQ 100 looks really good, mostly populated with advancing stocks. We have 409 stocks advancing on the S&P 500, 77 advancing on the Qs, 77 on the Qs out of 100, 79 out of 100. About 50-50 on the IWM. IWM looking good. I have a butterfly on IWM. I probably should check that out, see if I want to take profits.
BRCA. TNXP.
ATT.
Okay, S&P is going here. All right. Okay, S&P, thank you very much. On the move. Very much on the move. Okay, so 68.35, that's a 99 percentile, so we're most likely going to check that.
LRHC.
ARWR. DELL.
ATTA. LRHC.
Okay, 68.35.
ARWR. DELL.
SMX.
Looks good.
ARWR.
Okay.
SGLY. LYRA.
ARWR.
SGLY. LYRA.
All right.
BQ. LYRA.
All right, starting to fade a little bit from the high. Looks like just profit taking, people taking money off the table. Makes sense. Can we get some more out of this, Frano? Frano, with the premonition yesterday, we achieved all of her targets. That was good. That was a good move yesterday. Okay, puts are on the move now. Okay, I don't think we're going to see too much of a move lower. Let's see what hedge flows are saying. Hedge flows. All right, we got very close to that 68.35 target. Okay.
Other names like Huawei and Cambricon and rising startups like Byron and Medax. They're all building different pieces of a system designed to make the country less dependent on American chips. Now, to be sure, there's still a long way to go. China's industry is incredibly fragmented. It is subsidy dependent, and they, as of now, lag American chips by generations.
Okay.
Prospectus that details how hard this is. Sales are still small, and losses have piled.
Okay, Dell.
Yet NVIDIA itself is warning investors to pay attention, saying that export controls are pushing Chinese companies to adopt domestic accelerators. And even if those aren't as performative today, they're good enough to start replacing some U.S. systems inside China. So put another way, guys, China is building an AI stack that is accessible and good enough scales. If most of the world can't afford NVIDIA-level systems, they could turn to Chinese ones. So for NVIDIA, this may be a two-front challenge. Google TPUs at home, China stack abroad. I was going to say, but do they have TPUs? Which I guess is a question that we would only ask this week. Deirdre, what's the latest on whether NVIDIA can sell in China, those chips? The last that I heard is that it's under consideration and that they may be able to sell more powerful chips than the H20s. Kind of remarkable what China was already able to do.
Oh boy, let's see. Let's go out 10 months.
A bunch of other really good models like Alibaba's Qwen, like Kimi K2 from Moonshot AI, a Chinese startup. So, what can NVIDIA do? They can keep pushing Washington to allow them to sell their chips. But if it takes too long, it may be too little too late. The Chinese are already being forced in some ways by Beijing to work on domestic accelerators, which I want to get this straight, Sarah and Carl. They are no means, not even close to as powerful as what we're seeing out of NVIDIA or AMD, but they may just be good enough, and the Chinese are finding ways to sort of cluster them all together to create something powerful enough to continue their AI rise. Okay, Deirdre, thank you. Deirdre Bosa. Check out shares of Workday, falling sharply. Biggest loser on the S&P 500 this morning. I mentioned this earlier. The company posting better than expected results for the third quarter in a row with a beat and raise. The street maybe looking for better subscription revenue and margin guidance, judging by some of the analyst reports. This has been one where it very much feeds into the narrative that there are AI winners and losers, and some of these enterprise software companies will fall behind in the AI revolution, though the company heavily disputes that. And there are questions, as I mentioned earlier, Carl, about the value of data. What Workday
Just marking up a chart here. 25. What? And those are what? Those are 24 delta. 24 delta.
Puzzling sort of response to what was overall a really strong quarter and really strong growth. But that's how it's been, with the sales forces and the Workdays on one side of the AI trade.
Yeah, CRM is going to be one of the worst down names of the year because of all of this churn.
Question is it just the stage of the AI trade that we're in, where there's so much focus on the hyperscalers and the infrastructure build out, or ultimately is the street going to be right about the business? Still ahead, Thanksgiving travel expected to hit a record this
19 December. All right. December 19, DTE. Okay, let me save that to spreads and condors. All right. Hope everyone's having a good day. Got a little bounce here, a little profit taking, looks like. S&P, a little profit taking, starting to turn back up again. Let's see what hedge flows are saying. Still hanging in there. Okay, what if we get above this 68.35 and we start to head to, okay, 68.50s now. 68.50s now are, Mondo, I think you might have bought 68.50s, right? S&P, 68.50s, looks like that. They just rolled up to 99%. They must be seeing something we don't see. Maybe they see some pressure, 68.95, 68, what was it? 68.50, 68.50. Let's see what those are going for. 68.50s. 68.50s are going for $1.30. That's a 13 delta. Let me see what these do. Let me see what they do. All right. Right now we're starting to watch. Okay, so you see that right there? 99 percentile. Right above that's another 99 percentile. 68.50s. SPX 68.50. Uh, 68.35. 68.35. Oops, I'm in the wrong channel. There, Vinny. Okay, let me take that out of there. That doesn't need to be here. Spreads. Okay, let me post this. Okay, where is the, okay, let me just take a picture of Dell. Okay, Dell. Okay, let me post that in the spreads channel. Okay, we might actually get something going here. Okay, we are flagging at the highs of the day.
Not all of your cost basis, so it's not as granular.
All right, looks like we're going to break higher again. All right, so obviously some profit taking. They keep pushing this higher. On the daily, you can see what we've done, damage we've done to the bears. Very bullish. We do have some supply overhead, so if we break that area, that would be awesome. Oh boy. Okay, we're back up to the highs. Let's see if we can't break out.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge, platform features, and resources.
Come on, S&P, let's go. Okay, you can see that MACD is pretty much flat. That's on the 1 minute. Let's look at the 5-minute chart. 5-minute chart. MACD, where are you, MACD? There you are. MACD is starting to turn down. Been flat. Been flat.
Welcome to Schwab Network, where real-time market coverage is expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their
I really like to add to Walmart. Let me take a look at Walmart. Walmart.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 your guide to the forces shaping stocks, global markets,
Walmart. Okay, Walmart at the highs, breaking higher. Walmart doing well. Okay, Dell.
next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Okay, Oracle just consolidating sideways. Did gap up this morning. We're looking for more follow through into earnings. Dell with earnings having a nice lift effect on TSSI. Have some shares on TSSI. Been sitting on a loser there for a while. Looking for that to push higher. Apple, let's see, what do I have? Apple breaking out here. Apple, what do I have? Apple, do I have today's calls? No, Friday's calls? 5 December. Maybe take some profits on Apple. Yeah, I'm going to take profits on Apple. I got the 280 call. I think Dollar, you took the 282.50s yesterday, if I remember correctly. Right? Yeah, Apple.
The team from Lightfolio will be along with new sentiment data on Apple. And Broadcom is also on our radar today after some analyst activity around this one. Now we've got the roadmap for today's trading action. It's time to bring in my co-host.
Okay, this is what Dell looks like right now. Dell. I'm looking for Dell to kind of hang out in this area between 135 and 145, more or less, and have Bollinger Bands collapse. RSI is rising, so this is looking bullish for Dell. $68.35s. Okay, 68.35s. Yeah, there's not much there. 68.50, that's another 99 percentile. Maybe we go up to that level. Okay, you can see these here. The 68.35s were 99 percentile earlier. 68.35, 98 now. This one now has shifted to 99 percentile. Do we get there? It's hard to say. We've had a quite a move now. All the New York Fangs have turned up, so excuse me, Netflix looking pretty good. Netflix looking pretty good coming off the low. Sorry, I keep get something stuck in my throat. Excuse me 1 second. I'm going to mute. Bitcoin trying to muster some rally strength here. Bitcoin, okay. Beep, 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 beep.
So that's pretty optimistic outlook here going into Black Friday here or later this week and into the holidays, which historically is what we see, Diane. So I think even if you push against maybe some of the data that's been a little bit weaker than expected, you can't really fight the momentum when you see a 4-day snapback rally like this.
That's a good point. I'm glad you brought up the Fed take there because it feels like this week
Walmart.
is a different story, in terms of
Okay,
how
S&P.
the
Okay, what are we doing here? S&P.
for Fed rate
S&P.
cuts or not, right? And so you mentioned Williams. Myron is obviously on board with that idea.
Up only. S&P up only.
Everything went into the rearview mirror for those
Netflix. That's looking better. Netflix. Let's look at Netflix. Netflix NFL. Netflix coming off the low. Looks like a descending pattern. 50-day overhead. So if you're taking this, you got a little bit higher risk because we need to get above the 50-day. If you're thinking bullish, mean reversion wouldn't be surprising. But other than that, I'm not going to start adding to this until I see more positive progress. What's Freeport doing? I see Freeport popping up on my scanner here. Freeport squeeze for the last few weeks, about 6 weeks now. Freeport hasn't done anything. It just moves sideways. Warner Brothers Discovery squeeze. We talked about this morning. It's been squeezing for the last 2 weeks, looking for a resolution. Larry Ellis, the family, was interested in Warner Brothers at one point. They were putting together a bid. We bought some options just to see if we get anything out of it. That hasn't gone anywhere.
Rates continue to take a slow but steady path lower, whether that's from Fed rate cuts or just the long end of the curve catching a bid. I look at this
S&P.
There's really just not a lot to be
MACD
concerned about at the moment.
trending lower.
Largely strong. Guidance is largely strong. Rates are not necessarily a concern. Inflation's not a concern. And the concerns about the slowdown seem to be managed enough at this point that it's a conversation for next year, not really the end of this year.
Okay, Alex, I'm glad you mentioned individual names. Let's get into a couple of those. So Alphabet Google is taking a little bit of a step back right now, but earlier it tried again.
Okay, LQDA. That one is a pharmaceutical, right? LQDA. We've traded this one before. LQDA. Okay, I'm breaking out. LQDA. Goldman Sachs. I took the entire position is off now. I'm completely out of Goldman Sachs. For those of you in put spreads, Goldman Sachs, I had a limit order, that I did not adjust at $70. That took me out of the entire position. Okay. So I have none of this left. Goldman Sachs, big move today in Goldman Sachs, JP Morgan, the big banks. Look at the banks. The banks are probably going to give you a nice run for your money. JP Morgan into year end. Okay. JP Morgan, Morgan Stanley. Oops. Hate this new interface. Morgan Stanley. Wells Fargo. I saw some of you buy some Wells Fargo yesterday. PNC Bank. They bought First Bank or whatever. PNC did something recently to add to their portfolio. Look at the volume. That's institutions. Okay, so if you're looking for confirmation, you feel a little iffy about taking something, check out the volume. All right, let's take a look at builders just for shits and giggles. All right, so here you go. Here are the builders starting to move. Volume is picking up. What's it doing? It's moving through the 50-day. So it's breaking the downtrend. What are other stocks in the group doing? Always a good practice to check out what are the other stocks in the group doing. Here's Toll Brothers. What about Beazer Homes? These are all bouncing. Pulte Homes. Big builder here in the southeast. Pulte Homes. They clear cut 200 acres. Watch the S&P pulling back. They clear cut 200 acres and then they just build houses everywhere, these big developments. That's what Pulte does. They might do more, but that's one of the things they do. What about Ryan Homes? Does Ryan have a symbol here? Yeah, Ryan Homes. No, that's not the same one. That's not the same one, right? Ryan. Did they split Ryan Homes? They were like $2,000 a share. Let me see real quick here. Ryan Homes. Ryan Homes. Ryan Homes. Investors. Let's see. Very high quality. Ryan Homes, very high quality condos, connected condos, townhomes. Where is the Okay, well, whatever. Nvidia. Goldman Sachs did well. Okay, Tesla. Tesla turning back up now. Netflix still going. Microsoft, Apple, those are looking good. AMD turning a little bit.
Reduce some of that reliance on Nvidia, all the while taking some money off the table. You're going to want to do that. And we started to see, names like Warren Buffett and Berkshire Hathaway recently invest in Alphabet. Yeah, they didn't take money out of Nvidia, but they took money either off the sidelines or out of other positions into that. The same thing appears to be happening.
MP Materials, what are you doing, MP? MP. MP Materials. CRML, Critical Metals, no, nothing there. Nothing there. Okay, that's all right. Freeport, we talked about, that's in a squeeze. Autodesk still sitting there. Great trade on Autodesk, by the way. AMD. Don't see that often. The top 5, all A's. All A's. ASML, AppLovin, Autodesk, ADI, AMD. Pretty cool. AMD. Not really that interested yet. Gets above the 50-day. I'd be interested in ADI. Wow. Boom. ADI, big move there.
If you're a long-term investor, maybe you see opportunity in this, but I wouldn't be surprised if we
Netflix.
Into the end of the year, sold into as bigger money investors take the opportunity to rotate out of one of their biggest winners, perhaps ever, in financial markets over the last couple of years.
S&P. Watch the MACD is rolling over. MACD is rolling over.
Maybe it's an opportunity for for investors at this point. I think you have to start taking a look at who's going to be the winners in AI. Well, are we in the second, third, the seventh inning of this AI?
ADI looking good. Analog devices, Autodesk, Marvell at the highs. Marvell looking pretty good. Let's see what Broadcom's doing. Broadcom, okay, looking for the breakout in Broadcom. I'm going to take a synthetic trade here. Okay, we finally breaking out Broadcom, so I'm going to buy in the money. Calls, Broadcom. You could do, as Frano was suggesting, you could also do SMH. Let's take a look at SMH. Might be a safer trade. SMH looks really good, actually. Take the 340s for a ride. Broadcom.
Taking a big negative position, buying puts in NVIDIA and Palantir. But at the same time, if you still believe in the AI story, you have to throw NVIDIA at the top of the heap because it's supplying all the infrastructure underneath the AI build-out that we're seeing. And if you look at it on a valuation basis, it was higher. It had a higher valuation in 2023 and in 2024. Their growth rate has
390.
Everybody expects that, and now you've got competition from Google Alphabet with their TPUs.
All right, we're rolling over here. Rolling over S&P.
But I wouldn't bet against
okay.
the CEO Jensen Huang at any point, just because he innovates and looks so much farther ahead than maybe competitors. And we've seen them kind of beat down AMD, Intel in this space.
Okay, all right, guys, let's pivot and talk the airliners. Timely because this is a high travel season. They're moving higher today. They've had the wind at their back only recently, though. You got Delta moving higher, United, American.
Okay, hedge flow is rolling over. We didn't make it up to 68. 68. Oh, we said 68.50s. 68.50s. 68.35s. They pretty much closed all those positions. You can see here. 68.35s. Let me just look at S&P. S&P is fading. MACD has rolled over, so keep an eye on MACD. Futures are starting to bounce a bit. Futures bouncing. What are they going to do? What are they going to do? Okay, we got some buyers coming in. Let's see what they're going to do here. Was it just profit taking? That's what it looks like so far. It looks like profit taking. We do have a descending MACD and hedge flows are turned down. But we got the 68.50, 99 percentile level over there. Maybe they'll take that out too. Okay. It is lunchtime. Let me just switch gears and go over to CNBC. See what Mr. Weiss is talking about.
I think that you can see, as we have in the past, muted sales growth and maybe even declining sales growth.
Joe, to your point, and kind of, sorry to cut you off, Jason, to play off Weiss's point, talking about Alphabet's other businesses, Morgan Stanley out with a note saying if the company can sell about 500,000 chips, it changes their estimates when it comes to the cloud business. It could change some of the moves when it comes to hyperscalers or who's in what position. Of course, Amazon's on top, Microsoft second, and Alphabet's kind of like a distant third. But if they can sell those chips, Liz, and they can grow that hyperscaler business and then get more of those AI workloads on there, doesn't that change other parts of this whole narrative about who's buying with who.
Okay,
and
what's
what
IWM doing?
doesn't that kind of shape up how people are managing their money?
IWM,
If it does change the narrative, honestly, I think it makes it a little bit
Broadcom,
stronger because then you don't have
Broadcom breaking out.
relying on one or two companies to keep all of the circular funding alive. And just to go backwards to this Apple conversation for a second, don't we think that some of the price action has been maybe in anticipation of them announcing some sort of deal at some point, right? And they were the one that had been left behind because they were late in some of this game. But perhaps some of the optimism is that, well, they're not going to stay out of the game forever. So eventually they figure it out somehow. I don't know. I'm speculating, but I think that some of the positivity has been just that there's been a rotation broadly in the market looking for other places to find upside, and people are looking at the places that have been left behind. But back to your original question, I think that if some of this competition does spread the love, so to speak, right, in all the spending, I think it makes the foundation stronger for the AI trade going forward.
Back to that bifurcation chart, we can show that one more time. It's amazing some of the companies we see in red, like an NVIDIA down 10% this month after great earnings. I mean, Joe, when have you seen a company punished after outstanding earnings, outstanding guidance, like we've seen NVIDIA down almost 11%?
That's the trend in this quarter, and that's where the market, I think that was the signal to the market that battleship of momentum, which began with the macro assets, gold and Bitcoin, and the dollar reversing its downtrend in September. Then it lent itself.
Okay, Broadcom breaking out. Okay, let me just
class,
mark up a
and
chart on
Palantir
Broadcom.
was the signature for that. The Palantir report obviously was very strong, was consistent in what we've seen over the last several quarters, but it was a classic example of really good news.
I love when they
really
use the
bad
word
price
classic
action.
when it
And I
applies
think
to the stock
that
market.
was right at that moment, the message to the market.
Just my
Okay,
2 cents.
it's time to maybe work
Day to day
off
doesn't seem
some of the leverage.
doesn't
It's
seem
time to kind of take some liquidity out of the marketplace.
to have
And I
any
think
kind
that's
of
the exercise that
rhyme or
November
reason
has
sometimes.
been all about. And I think it's represented.
Classic.
That's exactly what happened in the case
I don't
of
know.
NVIDIA. We've seen
Just
that in
talking
some
out loud.
other names,
Okay, you
like some
can't
of the
see anything
semi-liquid
behind all
names,
of these
like
notes
Lam
here.
Research and KLA
Okay, let me go to
Well,
market
conversation a bit,
search.
by the way,
Market
JP Morgan maintaining
search.
Amazon as the top pick. Jason, you own this one. They say you want to buy the post Q3 pullback. Agree with that take? Is this a good buying position when we're talking about Amazon?
Yeah, so obviously Amazon has been the underperformer, one of the underperformers in the Mag 7, right? So for me, as I look to this past quarter where we saw a re-acceleration of growth with
S&P.
growth last quarter.
I don't know. It just looks like profit taking for now. MACD is telling you to just chill. But they keep buying. They keep pushing this higher. Weird.
From prior perspective, not being as reliant on NVIDIA as some of the other players, I think that's going to be important. And then I like this Project Rainier.
That's NYSE. The New York Stock Exchange is about to break out to new all-time highs.
So I think they have a lot of leverage to pull, and I think this is an attractive place too, as well, for Amazon as a
Okay,
new shareholder.
AVGO breaking out.
As well, Weiss, you also own Amazon. Is this a place you want to buy in? I know you said you're not running a one-stock portfolio. If you're running a three-stock portfolio, you want to add this one?
It's not one of my top three holdings. It's a large holding, but it's not one of my top three. I like Amazon. Look, it's a good story. It's steady. I think Jassy was the right time for the transition. Bezos did an unbelievable job, incredible job, but it was time for Jassy to come in and put in some cost controls and a little better process in terms of spending. So we're there. To me, it's on a glide path as a permanent compounder, and I think it's going to do well. And all the cloud companies are going to do very well because just the massive trove of data the cloud has to accommodate. Now that comes with spending.
Broadcom with earnings.
About Amazon spending.
Okay, so just be aware Broadcom has earnings.
I like the stock quite a bit. It's just not a top three holding for me. Not far from it, just not a top three.
So, Joe, we're looking ahead to 2026 right now. To the earnings growth, is that going to come from tech? Is that going to come from comm services? Is that where you need to put the money as we go into not only the last month of the year, but go into the new year?
So obviously the last several quarters, the overwhelming majority of earnings growth has been attributable to artificial intelligence and therefore communication service and technology names. But I also think you've
Broadcom breaking out. We've got earnings in 15 days, so this is a short-term trade for now.
Into a year which I believe is going to have elevated volatility and is really going to be about idiosyncratic stories. And it probably means when I say elevated volatility, I think you have to understand your positioning might be a little bit different in 2026.
Broadcom. Let me just check Money Magic's levels on Broadcom. Broadcom.
That you were able to do in 24 and 25.
You're not using Money Magic levels. You are missing a big part of the picture.
Federal Reserve monetary policy
Broadcom. You don't have Broadcom on here, do you? Yeah, you do. Okay, it's up at the top.
Even though we have further rate cuts in front of us. But I think you're seeing an awakening for the quality factor where momentum absolutely
390, 400. 390, 400 on Broadcom.
Several weeks, the market's saying, yes, we want the quality of healthcare. And I think it's reflected in what we're just seeing today. Look at the list of 52-week highs. We've spent the majority of the show talking about technology, rightfully so.
All right, so Broadcom is between Broadcom breaking out.
Regional Bank, Cincinnati Financial. GM, General Motors, is making a 52-week high as we speak. Las Vegas Sands, Medtronic, Monster, TJX, Prologis, Rollins in the industrial space. So there's other places you could go, other opportunities. I think that's an important theme in 2026. It's going to get harder in 26. I can't see how it can't. That doesn't mean it's a lower market. It's just going to get tougher.
400 call wall.
An excellent point about how the dynamics are going to change in 26. So I just want to spend a minute on this. We've had a couple rate cuts by the Fed. Looking now.
Okay, Broadcom breaking out above the 400 call wall. So you know what happens there. The dealers have to cover by buying
productivity is going to come
the underlying.
in a big way. GDP growth is going to stay healthy. The labor market might stay stable. If there is a reacceleration, to Joe's point, the rate cuts will stop at some point because they would just have to. And we've seen this movie before. So if there's a reacceleration, maybe it's driven by technology and the optimism and the spending around technology. But at some point, inflation starts to either come back a little bit or at least plateau, and the Fed has to stop, right? In that reacceleration, the sectors that tend to do well are not typically the high flyers and the growth sectors. You have to start thinking about some of the more value-centric names and the sectors that would benefit from cyclicality. So I think financials is still on that list. Healthcare, obviously, on that list. You have to think about maybe even materials in some ways. And then add to that 2026 is a midterm election year. Usually pretty tough for the market. So if we're looking at places to hide from volatility, again, things like maybe even consumer staples coming into play, healthcare again coming into play. So I think there will be a much different leadership picture in 26, and the market will start to set up for that at the end of 26.
Okay, looking good.
9 months from now, we're talking about we need another rate cut. Then you're not going to get the double-digit earnings growth that's expected right now for 26. That means there's a bigger problem in the economy, for sure. And that's going to affect earnings.
You know, Liz, to your point, by the way, Bank of America with this 2026 outlook, 7,100 S&P price target is about a 4% higher move from where we are right now. Overweight staples. So a lot of people seeing it the way you're seeing it. All right, put up here on halftime. Retail's big moment as we kick off the holiday rush.
Okay, nice move there on Broadcom. Nice squeeze. Broadcom. Okay, let me just change that. Okay, nice little bounce. We're going to do more. They're going to do more. MACD is still trending lower at the moment. Apple at the high of the day. Amazon just off the high. Google's still dealing with this 310 level, 320 level. Broadcom, Google. Okay, Google. Let's see Google. Okay, Google. Can we get another test of the high? Take out that 68.50, 99 percentile. That would be nice. That would be nice.
And dare I say, become a better investor in the process? Bell Price has you covered.
Mhm.
A full suite of original podcast content.
What's Meta doing? Meta, we're looking for a Meta to be higher. Broadcom still breaking out.
Valuable market insights and strategies from some of the most influential minds on Wall Street and the boardroom. We're also teaming with some of the biggest rising stars in the financial community for key insights to help boost your portfolio, build your wealth, and make you a successful investor. Welcome to the opening day.
And welcome back to halftime. After a volatile retail earnings week, the group now heads into its next big test, where the demand holds up beyond Black Friday. Courtney Reagan joins us now with much more on what to expect. Hey, Court.
Hi, Frank. So
Broadcom finally getting the breakout we've been looking for. I took a vertical. I was going to take shares, but we got earnings, so I'll just let these implied volatility pick up, and I'll sell those into earnings. And then after earnings, I'll probably do something if we stay above these highs.
million Americans will shop in some form between Thanksgiving and Cyber Monday. That's more than ever before by their estimation. Now, shoppers tell Deloitte they'll spend about 60% of their budget online and 40% in stores over these next 5 days. Most retailers are not opening stores on Thanksgiving Day, but will offer doorbusters online.
I'm a big Amazon shopper.
Online sales to grow 5%.
I don't want to go near TJ Maxx and those places now. It gets too crazy. I do a lot of shopping off season.
Shopping day of the year, according to traffic counting
As you know, TJ Maxx, a favorite.
even if it's not as big as it once was. Adobe forecasts
Okay.
U.S. e-commerce sales
So that looks pretty good. Broadcom doing well.
from last Black Friday. And while sales
Broadcom.
Black Friday surpassed Cyber Monday and sales last year and will again this year. So some debate, but it's still big. Retailers save deals for Cyber Monday, and consumers know it. Possibly the best discounts of the year for electronics, apparel, and computers, with total online sales expected to grow 6.3% on Cyber Monday. Now, consumers may feel less confident this holiday season based on economic surveys and what we've heard from consumer confidence, but they're still buying. According to many retail CEOs over the last 10 days, even if doing so choicefully, which is a word they're all using. Particularly, the executives say, when there's perceived value. And in value, that's more than just price. For instance, Dick's Sporting Goods Executive Chairman Ed Stack says, when I'm talking about value, I'm talking about an item that also perhaps helps my performance if I'm an athlete. Frank?
All right, Courtney Reagan live from the NASDAQ. Courtney, thank you very much. Got quite a bit of retail ownership.
Broadcom on the move, breaking out. The new highs, breaking out.
A lot of questions about the consumer going into the holiday season. Bank of America out with a note saying last week we saw holiday spending up 4.5% year over year. Seems like a kind of bullish sign going into the holiday season.
Yeah, I mean, and Courtney's data shows us more bullish reasons to be excited about it. So I mentioned this at the top of the show that consumer discretionary has been one of the strongest sectors actually out of this volatility that we've just seen. And I think that that's a good sign. A lot of times you look at discretionary versus staples as a signal of cyclicality. We'll see what this holiday season holds. I imagine that there's going to be a lot of news about discounting and incentives and all of that. But into 26, again, expecting some stimulus, right? Expecting some tax refunds that are going up. I think the consumer has.
Okay, S&P turning back up.
They're going to have to fight for it because we're still up against some inflationary pressure.
Okay, looking good. S&P. Thank you very much.
So I wouldn't count it out. And discretionary and staples have been really poor performers year to date, relatively speaking. So if that cyclical recovery and reacceleration does start to
Okay, MACD on the shorter time frames, turning back up quickly on the 1 minute. Scalper's delight. Broadcom looks good. Okay, looking at the top of the NASDAQ 100, App 11. I really like this one. Don't have a position yet. I don't think. I didn't take a position, did I? No, I did not. Looks good. Descending channel, looking for the breakout. Another descending channel we have been looking at over the last couple of days is Caterpillar. What's Caterpillar doing? Caterpillar breaking out. A lot of people looking for 600 on Caterpillar.
So if you take the upper end, that's probably where you want to be because they're not as pushing back. But Frank, one other important thing.
I'm getting so many texts about my jacket. Some love it, some hate it. So I'd like to ask all the viewers to email Frank Holland directly. You can find his email address and just vote whether you like it or not. Thanks, Frank.
I think
Please
more
let me know the reason.
importantly.
Wow.
Did you see that comment?
Those results.
I didn't see that
I
comment.
think more importantly, I fixed my
You
time.
did fix your time.
Thank you. Of the 11 S&P sectors, when I study how momentum in each of the sectors is working as a factor, consumer discretionary is actually the one sector where we have a very low success rate. It seems as though over the last 5 years, it's been a series of fits and starts. It looks like the momentum.
Yes, Franna, that's what I bought.
Momentum trails off, and you find yourself.
And I'll roll this.
Let's take Amazon and put it off to the side.
I'll roll them as we proceed higher.
The airlines. I'm talking about a lot of the apparel names that you've mentioned previously. The only places right now that it seems to be working is in off price. So TJX really good, Ross Star really good, but then you hear
Okay, S&P. All right, so S&P is goofing, as they say in New Jersey. They're goofing on the bears here. Every time it looks like it's going to drop off here, it just keeps going, turning up on a 1 minute. Watch the 1 minute chart. 1 minute's better. One better right now. You can see the MACD has turned up on the 1 minute chart. Okay, price action lifting again. So they looks like profit taking into strength. Profit taking into strength, and then we continue to move higher. Hedge flows turning back up. That's 68.50. Looks like it's going to get tested. That's a 99 percentile.
Did you realize that TJX has 4 times the market cap of Target? Just kind of speaking of that shift, it's kind of a big shift in the market when it comes to retail. All right, we do want to get to the headlines right now.
Okay, Lulu, Aaron. Yeah, I was looking at Lulu yesterday. Lulu. Yeah, looks good. Lulu looks good. Okay, we're breaking higher now. There goes the S&P.
But efforts have been complicated by the widespread destruction of the enclave. A federal appeals court upheld a nearly $1 million penalty against President Trump and his lawyer, Alina Habba, today. A unanimous panel found their 2022 lawsuit accusing Hillary Clinton, former FBI Director James Comey, and others of a conspiracy linking his 2016 campaign to Russia actually lacked merit and was frivolous. And the Olympic flame was lit today in Greece, so it could begin its journey to the Milan Cortina Winter Games. The ceremony was moved indoors because of bad weather. The flame will take a week-long route through Greece before it heads to Italy to pass through 60 cities and 300 towns ahead of the February 6th opening ceremonies. Halftime report and Steve Weiss's jacket. We'll be right back.
Wise guy. Was he got an ugly jacket or something? I didn't see it. All right. Just sitting here. Back and forth, right up against the highs. S&P. Can we get something going here? MACD still facing up now. It's starting to turn again. Scalper's delight today. Trying to get up to that 68.35 level. 68.50, sorry. 68.50. It moved up from 68.25 to 68.35, then up to 68.50. So I don't know if these guys are rolling these up because they're getting nervous or what. But 99 percentile was 68.25. That was noted by Michael Miller earlier this morning. As we saw all that gamma there disappear. You can see it's gone. It is history. So they closed those positions as the market started to rip higher. Maybe they're getting the message that these seek and destroy algos go after these 99 percentile levels where there's a lot of gamma. They seek to destroy it and then poof. So these algos go after them. All right, looks like we're going to pull back a little bit here. Okay, we got a cross coming. MACD cross coming here. Looks like people taking profits in a bigger range, trying to make higher highs and higher lows in this area. Volume, you can see the volume coming in to sell. Volume to sell here.
And we're back on the halftime report. Let's get to some committee stocks on the move today. We're going to start with Autodesk, popping on stronger than expected earnings. That name's in the JOTI ETF. Also an upgrade from Deutsche. Price target raised to 375 up from 345. Joe.
So 50% of their revenue is derived from architecture, construction, engineering, and that is related to the infrastructure build out for data centers.
Okay, nice bounce here on trend line so far.
Remarkably strong there, up 23%. And that is indicative of what Liz mentioned before, where the thematic investment of artificial intelligence is going beyond what we knew, the narrow list of NVIDIA and other names in technology. It's expanding, and I think that expands further in 26, and this represents it.
All right, I got one more of your names. It's Workday, slipping on earnings. It was really about...
All right, we're right at VWAP on these options.
Guidance wasn't good here. Look, the stock is down
VWAP,
23%.
there's VWAP there.
Basis. For us, that means it has lost any positive momentum. Obviously, I can't tell you what we're going to do, but there'll be a rebalance and we'll adjust it accordingly. But there was cautious guidance, whatever you cite as the reason, whether it's federal funding or the professional revenue services beginning to contract significantly. Looking into 26, there's not excitement about the ability of this company to be able to grow.
All right, we got one more. United Rentals. Got to do this one quickly. Maintained to buy a B of A. Part of the story, believe it or not, this is not funny. Portable toilet peers distressed, and they're bullish on United Rentals because of that. The other company's called USS.
Yeah, and I think this is a little bit of a muted response. The stock had made its high back on October 16th. It's pulled back since. It's at 814. Need a point of reference. You have the 200-day moving average sitting down at around 783 below.
All right, United Rental shares up just about 0.5%. Coming up next on halftime, Mike Santoli joins us with his midday word. We're back right after this break.
Our MACD is trying to flatten out, trying to figure out what it's going to do. We're going to pop back up to the highs. Very erratic right in this area. Trying to get back above the highs of the day. I'm your host, Cousin Bennett, coming to you from theclosingprint.com. It is Wednesday, the 26th. We're off tomorrow for Thanksgiving. If you're taking off after lunch, enjoy. Safe flight if you're going anywhere to visit family, whatever. Okay, Palantir still showing signs of moving higher. Palantir. Okay, Apple's just off the highs along with Microsoft, Netflix, NVIDIA turning back up. There goes Broadcom continuation. Broadcom continuation. All right, that looks pretty good, Broadcom. Thank you very much. Broadcom, AVGO. Broadcom. Okay, so Broadcom looks good. Let me just zoom out one more month so I can see this a little better. There you go. 6 months is fine. 6 months. Notice there's no overhead supply. That's the first thing that jumps out at you. At new highs, there's nobody up here to sell to you except for day traders. So is the volume suggesting day traders or is it suggesting institutions? I would suggest that it's institutions. And from what I've been reading, including Motley Fool and a few other publications. You might laugh at that, but I look at what everybody has to say and then make my own decision. But they're looking at Broadcom as being the next NVIDIA. Some would argue maybe Google's got some chips up its sleeve, so to speak. But from what I understand, Meta's been buying chips from a lot of different places, not just NVIDIA. If everything I read is correct. Anyway, price action tells me it looks good. Volume says good. MACD stochastics rolling up. RSI rising. Everything is bullish on Broadcom. And it's still going. Still going right here. Coming up to 400. So 400. Looks good, Broadcom. Thank you very much, Broadcom. The tick lady got very quiet there. Tick lady. NVIDIA looks like it wants to do something here. Maybe I'll add to NVIDIA.
All right, we're back on halftime. Senior markets commentator.
Okay, here we go. The S&P.
With this midday word, Mike, I'm going to ask you the same question I've been asking everybody here at Post 9. The action that we've seen in November, do you think that's a sign of what's
Okay, we're up against supply right here.
Tomorrow's a holiday, Friday's a half day. What are we expecting going forward next week?
Well, which action in November are we going to key off of? Was it the real weakness that we saw in the first 3 weeks, or the fact that we did get back into gear late last week and essentially reassert the bullish trend? I think tactically, it's been pretty textbook. You know, support that was widely watched.
Okay, we're looking for that 99 percentile level. Okay, we're going to break to the upside. Okay, so 6850 is that 99 percentile target.
I do think that we're not that far from a point where you'd have to say it starts to get demanding again. I'll say that because last year you had really strong markets all year into Thanksgiving. You rallied before and after, and there really wasn't much left to the upside over the next month or so. You actually peaked at like the first week of December, finished 3.5% lower. I'm not saying it's going to happen again, but I think when we get to the point where people feel like it's in the bag, we're going to finish the year strong.
Okay, we need to get through this supply right here. S&P, do we get through it? We get rejected initially. What's the story here? 5, 15, 30, 60, you're on buy signals. Tick cumulative is green. We got up volume. Everything is in our favor. Everything is in our favor. So let's see if we can blast through here. We've got 5-to-1 up volume, nearly 5-to-1 up volume on the Qs, 5-to-1 up volume on the SPY, nearly 5-to-1 on the NYSE. Well, it's 4-to-1. 3-to-1 on the New York Stock Exchange. Broad measure of market participation. Okay, looks good. Looking good. Sing it, Janice.
Viewers, the road to artificial general intelligence was already bringing massive changes to society and disrupting industries around the world. So I recommended buying a group of stocks that I believed would benefit, including these. Then I set to sell a group of stocks before they got wiped out on the road to AGI, including these 3.
Bulls are winning.
To these stocks since. The 3 buys all beat the market by more than 5-fold, while these 3 sell recommendations fell an average of 26%. My name is Eric Fry, and I've been issuing sell this, buy that recommendations for 30 years. In fact, knowing what to buy and what to sell at the same time is what earned me the title of America's top trader in a head-to-head competition against Wall Street's most well-known investing legends. It's how I've also notched more than 40 stock recommendations.
What is this, an advertisement? What is this? I don't need advertising. That's great. You're good, buddy.
Be right back.
You're good.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools webcasts are
Okay, we're trying to break through this level here. Good, go, 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 go. Just go already. Just rip this sucker higher.
You'll learn tips and tricks to help navigate
I want
Schwab.com,
to take you higher.
Thinkorswim, and mobile-based
Ba-dum-bum.
platforms. Best of all,
Take
you
you
can ask
higher.
questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Let's
Head
go.
over to
Let's go, Spy.
schwab.com/coaching and start learning today.
Okay, back to CNBC. Boy, these guys get on my nerves.
Why should you trade options rather than stocks? Because they offer
Look at it. So that's how they beat CNBC. The Nigerians placing an ad on CNBC, so you can't get past them. That's pretty funny. Okay, S&P watching. What are we gonna do here? I'd love to see 68.50, but it's no guarantee. Watching the hedge flows right now. And it's 12.50. Do we get a reversal signal off of the highs? Puts have not worked today. Puts, every time you try to take a put, get wiped out.
We took a look at the committee's best performing stocks so far this year. Jason, we're going to start with you. Pretty good list. Alphabet, Goldman Sachs, and Uber.
Yeah, listen, we've talked a lot about Alphabet. I mean, obviously up 70%
Meta.
year to date, so well vertically integrated, whether it's YouTube,
Broadcom.
search, and the ad business has obviously done really well. And it's great to see Sergey back, you know, at kind of that founders-led energy, which I think is going to push the stock. Goldman Sachs is another one, up 42% this year. You know, revenue was up 18% in the last quarter. IB was up 42%. Advisory up 60%. I think with directionally what's going on with the Fed and rates being lowered, I think GS can continue to do well. Last one here is Uber for me. You know, mobility, delivery, both up 20%. I think the discretionary, as Liz mentioned earlier, sector can continue to move. Somewhat of a bifurcated consumer. Absolutely.
Okay, we're breaking this trend. This little trend here starting to break.
Gold ETF, the FXI, Chinese Internet ETF, and then you've been talking a lot about healthcare. The XLV healthcare ETF up about 15% year to date.
Yeah, healthcare was one of my calls for 2025, and I looked wrong until about early August. It's all been back-end loaded, but I will take it. Healthcare has clawed its way to the top half of sectors in the S&P, and I still think it's a great opportunity into 2026. So I'm very thankful for XLV. And then the Chinese ETF, FXI, it's actually a large cap China ETF. Which was a pretty controversial call earlier this year, but it's worked out well, up almost 30% year to date. And then GLD is a story.
Okay, let's see what MACD's turned down again, just making higher highs and higher lows. I don't know, it just feels, to me, it just feels tired up here. All the New York Fangs look okay, except for Google. Google's off a bit.
FTAI, that stock's been a great stock. I think it's going to keep going. And look, the core portfolio that I have, it's the Amazon. It's the
Okay, so you can see hedge flows are starting to turn up again. We got 4.7 billion. Got 4.7 billion here in flow so far today.
McKesson, I've owned that since March. I like healthcare going into 26.
Yeah, I want to amend. It's up 173%. You added in October, so you had some of those gains.
Absolutely acknowledge we could be late like we were in crypto.
All right, thanks a lot, Joe. All right, straight ahead here on halftime. This setup on some big.
Okay, Eli Lilly, Merck. I sold some Merck yesterday. I did sell some Merck yesterday, if you recall. Merck, and we got an inside. We got a inside bar here in the upper 25-30%. So technically we should be expecting this to continue. However, it's spent so many days outside the upper Bollinger Band, I wouldn't be surprised to see some consolidation here. This is ripped once it got above 91. I sold the 95 call, took profits there. I took half of that profit, rolled it at the 100 on Monday, was it? Tuesday, sold some into the highs on Tuesday, and now I'm waiting to perhaps get back in. Now, Walmart looks pretty good too. Walmart, watch Broadcom pulling back a little bit. Walmart, trying to break out here. Walmart, that's looking good. S&P with a little bounce. S&P. S&P trying to hold above this trend line. Don't think it's going to. Doesn't look like it. MACD's turned down. Look at the volume coming in. That's selling volume. Starting to populate more. Can we get a bounce? Can we get a bounce? Palantir is at the high of the day. Palantir looks pretty good. Palantir having a good day. Palantir trying to get back above last week's highs there, right along this zone. Palantir. Okay, Palantir. I'd like to get above 175. Okay, 175. I don't need that anymore. 175, 170. Oh boy. Okay, so S&P is trying to hold this trend. Doesn't look like it's going to. All right. Looks like it's breaking this trend now.
For the trade update on Zoom, taking a look at it right now, pulling back more than 1%. Joe, this was your final.
Need
trade
another
yesterday.
pivot.
It was, and it's important to manage the risk when you think that potentially you've suggested something or you have a position that's going the wrong
Joe's
way.
talking Zoom. We had an iron condor on that one yesterday. Took it off for a profit.
The high of the day was 91.06 at 106. It pulled back thereafter. Right now it's trading $85. So it went back into the range. The low on Monday was 78.59.
Okay, this is Zoom. We sold this yesterday near the lows of the day. Took credits there. All right, so S&P pulling back a little bit right now. Shaking people out. Okay, we just broke that uptrend. So looking more and more like a range up here at the highs. MACD's lower.
Again, shares of Zoom pulling back about 1.25. We get the setup on some software names reporting their earnings next week. We're going to start with CrowdStrike. Joe, this is one that you own personally. Reports after the bell on Tuesday.
The annual recurring revenue should be strong here. The AI agent security tool.
All right, hedge flows lower high. We may not be getting to 68.50, at least not right now, if hedge flows turn over. Palantir still looks good. Oracle's okay. That gapped up. Let's see if it can hold the gains. Autodesk, we took that iron condor off for a 70% profit overnight, $900 on 10.
Very important, kind of all the AI trends and tailwinds that we see. The stock's up 60% year to date. The EPS doubled off of 32% revenue growth in the last quarter. New go-to-market strategy, which could be
Okay,
tricky. So let's see how it
the
plays out. But I like this.
tendency today is to suck the bears in and turn it back up today. We keep getting these little discounts and then it rips back to the upside. A discount, rip to the upside, discount. Is that going to continue? We got a little pivot here. Let's see what they do. Let's see what they're going to do here. Okay, so some selling right in here. You can see all the red bars. You only got 3 green bars, and you got 8 red bars. So they've been selling more than they've been buying up here since 12:45, 12:50. One more shot to the highs. I'd probably take some of those 68.30s off, 68.35s, whatever you have. Probably take some off into the next pop. Maybe we get a little follow through end of day. Okay, so slow grind here. Can we get something going here? Calls. Let's go, calls. Let's go. Be nice to finish in the upper quarter, upper third of today's price action. Daily looks pretty good over there. Daily looks good. We're up against supply. Right at 68.30, 68.35. That's been on the charts for A couple of weeks now. Couple of weeks. Okay, starting to bounce again. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 26th. Tomorrow we're off. If you're taking off in the next few minutes, have a great Thanksgiving. Enjoy. Be safe. If you're flying home and not trading on Friday, enjoy the long weekend. Okay, just seeing what they're going to do here. Got lower highs, technically lower highs from lower highs. And we got MACD starting to flatten out a little bit. Hedge flows. All right, trying to turn up. Hedge flows trying to turn up. Watching these hedge flows. See what we do here. 68.50 is probably as far as we're going to make it if we get up there. We manage to get there. Puts are starting to catch a bid. Puts are starting to catch a bid up here at the highs. People looking for a fade. Okay. 57 handles. We're off the highs. We hit about, what, 65 handles, something like that. Okay, we're breaking this uptrend. Okay, it's lunchtime, so I wouldn't be surprised if BC pivots.
It's FTAI Aviation. Look, I think this is a perfect way to extend your portfolio beyond tech, and interest rates coming down drive more demand as a lender to
Yeah, FTI. He's talking FTI. No, FTA.
I know we're supposed to talk about turkey this week, but I'm from Wisconsin, so I want to talk about cows, cash cows, companies with high free
Okay.
capital, and the biggest sector is healthcare.
FTAI Aviation, Mr. Weiss. I like this one too. Eaton. ETN, Eaton Corp. Cows, COWZ, cows. That's breaking out. Pacer US cash cows. Okay, I don't know what's in this, but looks pretty good. Okay, I'm going to take a 2-minute break. I'll be right back.
Stocks are higher and on track for a winning week, a week that saw, by the way, a big shift in AI and a big move towards a rate cut next month. All of that helping the small cap stocks to the biggest gains, relatively speaking. The Russell 2000's up more than 4% just since Monday, outperforming the major 3 indices. So is the setup finally right to own that small cap trade? And we're watching NVIDIA shares, of course. The biggest Mag 7 laggard so far this week as Google's Gemini 3 stole the AI spotlight. NVIDIA responding that its chips are a generation ahead of the competition. But now there's new competition coming out of China. We've got that story as well. And while Alphabet went from AI laggard to AI leader, another name has fallen from grace. That's Oracle. It's getting cheap enough to own right now. Is it? Or is it a good trade to fade right now? That's all ahead. But we're going to start with stocks rallying for a 4th straight day on the hopes of a rate cut next month. And while investors are focusing on the Fed as the next major market catalyst, my next guest says there is another one out there, and it should not be overlooked. The One Big Beautiful Bill Act kicking into gear early next year. Join me now with his thesis is Bill Stone, the Chief Investment Officer over at the Glenview Trust Company. Bill, you're talking about taxes and regulations being that big macro driver. Why is it going to be as big as you think it's going to be?
Well, I think, certainly the economy at the moment seems to be in a, we don't have all the data yet, but seems to be in a bit of a soft patch. But we're going to see quite a bit of stimulus coming in through a number of tax cuts, both on the consumer and the business side. That should give us a shot in the arm. So as long as we can kind of hold it together until then, economically speaking, at least I think that gives us an even better chance to get it kind of restarted and get going again, particularly if the Fed does follow through and cut rates as we expect here in December.
Where will we see the biggest impact, Bill, of the regulatory easing that is anticipated with regard to the tax
rates that could be cut that will be beneficial to certain parts of the market over others? What exactly is going to be the outperformer when it comes to the market, given that one big, beautiful bill act catalyst?
I mean, I think you could see the consumer, again, have more money in their pockets, which should help drive spending. And we all know a big part of it is obviously the U.S. economy is driven by consumer spending. And so, it's a win-win on that side. So we may see certainly an Amazon and some others benefit from that. And maybe, hopefully, we hope the housing market as well.
Now, it's also the regulatory side of things is one big view here, but it's also about whether or not we see the economy doing better because of it. You mentioned consumers getting maybe some relief, corporate entities maybe getting a little bit of relief on their tax bills as well. How exactly does that play out in your mind for the macro economy in the first half of next year? What kind of growth expectations are you maybe factoring into your models at this point?
Well, I mean, I think it's more for us is thinking about whether we can avoid recession, because stocks are currently pricing in, since the sell-off in late October, I'll call it a pullback. It's not much of a sell-off, which is a good thing. But, they're still not pricing in much of a chance of recession. So I think that is part of what would support stocks if you continue to kind of move away from the chances of recession. If you continue to have to price in more chance of recession, then it gets a little harder in terms of how things work out next year.
What's the market view then for next year? What are your expectations for the S&P 500, for that big AI tech trade, given that backdrop you've laid out?
Yeah, I mean, I guess I'm hoping we see a little more broadness in the market. We really, at the end of October in particular, got extremely narrow to just some of those big tech names. You talked about it just moments ago, the small caps starting to pick up. I'm kind of hopeful that they'll finally show up, because I think a lot of what is laid over the top of them has been worries about the economy at times. Also, frankly, the growth has all been, in terms of earnings growth, has all been in those tech names. If we see some sort of spreading out in terms of growth rates, maybe you finally get a little life out of those.
All right, let's get actionable about this. In your mind, what are the top picks for this coming year?
Well, we currently I should stop and say, I know you're a sports fan. So I happen to get one stock from the great state of Ohio and one stock from that other state north of Ohio. So I'm going to go with the Ohio stock first. Sherwin-Williams. It's kind of a play on, it is a great high quality company. Housing has already been in essentially a recession. So we get some life in housing with some of the rate cuts, etc. I think you could see some nice move out of that. They've also got opportunity to continue to increase their sales internationally. So I think that's a nice one to think about. Again, very high quality, so it's secure. It can go down, but at least you're not going to worry about going out of business, even if we get more economic weakness. Second one, I love them despite being in that other state. Domino's Pizza. It's just a great company, great growth story. And I always say, if you don't believe me, Berkshire Hathaway now owns over 8% of that company. So it is a interesting growth rate company. Particularly, it's interesting with inflation in the backdrop, because the inputs to pizza are relatively cheap. And they certainly are family friendly around the pricing of pizza. And they have a great electronic presence in ordering. Certainly everybody kind of knows the delivery side of things, and they've expanded that with Uber Eats and DoorDash. So I think despite the pullback in that stock, it's very interesting.
I am not as biased as some people from those great states are. So I will say that the states are, in fact, Ohio, as you point out, and Michigan. That was the unnamed state as well.
We can't say that. We don't say that this week.
The game's going to be a big one for sure. All right, thank you very much, Bill Stone with the Glenview Trust. Happy Thanksgiving, sir.
You too.
All right, so we mentioned that small cap trade just now. Let's drill in on that trade as well. It's outperformed so far this week, that small cap trade. So the Russell 2000 is up nearly 5% in 3 days. And our next guest now says the stage is finally set for those gains to actually continue with some momentum. For more, let's turn to portfolio manager of the Needham Small Cap Growth Fund, Chris Retzler, who joins us here on set this Thanksgiving Eve. Chris, thank you very much for being here with us.
Thanks for having me.
All right, so let's talk about the small cap trade. You say that it does now have a setup for continued momentum. What exactly has changed in the last 6 months that now says it can be an outperformer for the coming months?
Well, we certainly have the Fed behind us, and we've gotten through another correction here in November, which
began to feel a little bit like the spring, but it feels like we've come out of that in the last few days. But what we have, Fed cuts, I think looking to 2026, as your previous guest just mentioned, we're looking at tax cuts that are going to be for businesses, for consumers. So we begin to see and hope that the market will begin to expand out, the breadth will, expand, and we're going to see more money going into investment, which begins to help more the mid small cap companies. And if they can get that top line acceleration with their revenue, we think that drops to the bottom line for a lot of companies.
Now, Chris, small cap stocks have been viewed, conventionally speaking, as quote unquote riskier from a relative basis. That also means higher returns, higher volatility at times. What exactly do you think catalyzes investors towards more risk appetite to go into those small cap names with more certainty?
So with the Fed cutting, one thing that we think is there's going to be liquidity coming into the market, and small caps should be a beneficiary of those dollars coming in. You've had the Mag 7, a lot of dollars have flowed there really over the last 3-4 years, outperforming small caps. That's been a cycle with the Fed raising rates. We're now at a critical point where if they get low enough, are you willing to accept that in your money market rates, or do you have to go out on the risk curve? We think that begins to happen. They trade a lot less liquidity, so it doesn't take a lot of money to flow into the asset class. We just were in California the last week, met with probably 40 companies. And if you had turned off the news, you wouldn't know that there was any slowdown in the tech world. They're looking to meet capacity. That's their bigger issues. The orders keep coming in. We haven't really seen a setup like this, I think, since kind of 2019, 2020, when small caps had a really big move.
Where are your favorite parts of that small cap trade? When we talk about the Russell 2000, oftentimes we talk about kind of small, medium-sized banks. They're a big part of the portfolio. Some of those biotech companies are part of that mix as well. From a PM's perspective, where are you putting the biggest bets on the rebound in small caps?
So we like a lot of the plays around infrastructure, military modernization. The administration has redirected dollars into these new programs. And so we look at like a company like Parsons, which has, readjusted some of the programs they were in, but it sets up for the next 3 years. And when you think about, military changes, modernization, data centers, a lot of build out infrastructure on a global basis, we think they're well positioned. There's also within the factory. So a company like Cognex would be a good for automation and ultimately into robotics as we begin to see in re-onshore manufacturing in the United States. This is the modernization. And with tax cuts that can be deducted immediately, we expect companies to be spending money. So, I think that, again, you don't have to just pick the big, large cap NVIDIAs. It's what are the other companies that making all that function?
And one of the big point I want to make here is over the long term, your fund, the Needham Small Cap Growth Fund, has been an outperformer. It has been a laggard so far this year. What do you attribute the underperformance to? And are you willing to stick with some of those bets, or are you readjusting portfolios?
So it's been a lot of the volatility in tech, and again, a lot of the money flowing to the Mag 7. So really leaving behind a lot of the small cap companies. But, looking forward, we're still very confident in the management teams be able to manage through that. They've readjusted a lot of their cost structures. And another thing we've seen a lot in the last week are buybacks being put in, and even company management teams putting money into their stock in the open market. That's a very bullish signal.
All right. Chris Retzler at Needham, thank you very much, and happy Thanksgiving, sir.
You too. Thank you.
All right. Coming up on the show, Oracle is catching a bid today, but the stock has fallen far from its year high, down about 40% since that level. Is it getting cheap enough to buy right now, or is the former AI darling becoming an AI dog? That trade coming up next. Plus, sellers are taking their homes off the market at the fastest pace in nearly a decade. We're going to dive into what it could be saying about the overall state of housing in America. The Exchange is back after this.
This is The Exchange on CNBC.
AI PCs, which will become more of a thing as you get like potentially differential pricing in the way the software is priced on the cloud versus on device. And you have a great cash conversion cycle and managing the supply chain. So yes, we continue to be very, very bullish about that.
Well, I'm saying big prediction there, doubling in AI revenue next year. We'll keep an eye on it. Thank you so much for joining us and have a great holiday.
You too. Happy Thanksgiving.
We have much more market action coming up. Stay tuned. You're watching Market Catalyst.
Hey, do you dread scrubbing away stubborn dirt and stains? I used to, until I found the Spinny Scrub. Let me show you why this little powerhouse is a total game changer. You can also scan the code on the screen now and find out more. This is the Spinny Scrub, your new best friend when it comes to
Welcome back to the exchange. Oracle shares are higher today after what's been a very brutal few weeks. The AI darling that made Larry Ellison the world's richest man is now down more than 20% just this month alone. Fears about its debt and exposure to OpenAI is weighing heavily on that stock. But none of this comes as a surprise to our next guest, who launched his coverage of the stock, Oracle, as a sell-rated one back in September. Those shares are down more than 30% since that call. For more, let's bring in Alex Heisel of Rothschild & Co. Redburn. So, Alex, this is an interesting call. It was very much non-consensus. What exactly made you make that call at that point, and are you willing to stick with that underperform or sell rating right now?
First, yes, thanks having me on the show again. We stick to our sell rating. We in September we said it's a risky blue sky scenario that the market is pricing in. Right now, it's still an optimistic scenario. So we do see more downside from here. The reason we have launched in September is because we were expecting a large RPO number because we have seen this target announcements. So from a timing perspective, we thought we have to wait to get this RPO boost out of the way. And the reason hasn't really changed because we continue to see these GPU deployments being very, very low value. And I just want to put some numbers behind this. We think that, for every CapEx dollar you spend on these GPU deployments, you only generate 20 cents in NPV. And that's like a fix compared to the traditional cloud. And what we've seen over the past couple of weeks, obviously there have been more cautiousness around the overall AI trade, but also if you see how consensus has moved, we have seen some EPS upgrades. The 2030 moved up by 15%, but at the same time, it cost them $50 billion more if I just take consensus. And this just reaffirms our view that the cost to grow are significantly higher. And from an Oracle perspective, the problem is also that they have to fund the bulk of this with that.
All right, Alex, you mentioned the RPOs, those remaining performance obligations that Oracle has. It was, by the way, one of the biggest reasons for the bullishness in Oracle going into the peak that we saw recently. How has the story around those RPOs and the growth prospects shifted or changed in your mind from an investor standpoint, given the fall that we've seen from the recent highs?
Yeah, I think overall, at this point, it doesn't really matter if we see an increase in the RPO or not, because there's just too much risk associated, and it also means you need more money to fund all of this growth. The other problem that you really face is whatever deals are being signed now won't drive revenues, let's say, in the next 2-3 years. So it's really in the outer years. So the focus has clearly shifted. A lot of conversations we have is, maybe it would have been better having a lower RPO and less leverage, and the stock could potentially be higher without some of these, big deals they've signed.
Now, the leverage, you bring up an interesting point here. Recently, we've heard a number of other analysts, industry watchers, maybe take a more cautious approach to the leverage, the debt being used for some of those expansion plans going forward. How much of that does play into what your future prospects are for Oracle, the leverage, the capital structure side of how they're going to fund all of this expansion going forward?
Yeah, I think the debt they're raising is basically to pay the GPUs. I think there's also another part to the equation, which is the lease obligations, because Oracle doesn't build the data centers, but you still have to sign long-dated leases. And I think that's a much, much bigger risk, because if you think about it, if you sign a 15-year lease and let's say you have a customer that's signing like one hardware cycle over 5 years, you have to fill this capacity after. So these projects can really quickly become like value destructive. So it's not just the financial obligations, it's also the leases. If you add this on top, this is a major concern, because they really have to execute and deliver on those targets.
And Alex, we know that you're bearish on this. You have a sell rating. I want to know, though, from an investor's perspective, sometimes it is just about price. It's about expectations. So what exactly does get you to say, hey, Oracle is now worth a buy?
Yeah, I think you would need to price, the business ex OCI. We can have a rough idea what the value is, maybe around $130, $140, $150. And then you have to take an assumption what the cloud business is, OCI. I think investors are struggling because it's a lot of these deals have like a negative value. So I think you need to buy the bargain really to see upside from here. And at this point, we just still don't see it, unfortunately.
All right, so a big key is Oracle Cloud Infrastructure as well. Alex Heisel at Redburn, thank you very much. We appreciate it, sir.
Thanks for having me on the show.
All right. Coming up on the show, the holiday season's finding the perfect gift for someone might be a little easier than in years past thanks to artificial intelligence. We're going to dig into how that's happening in retail right now. And we're watching shares of Alibaba taking a leg lower on a Bloomberg report saying that the Pentagon is suggesting putting the company on a list for China military ties. The exchange is back after this.
But let's just keep in mind when it comes to investing in companies like this, what I hear time and time again is while Alibaba is very much seen as a sort of inexpensive way to play the whole AI thing because, of course, China is cheap, relatively speaking, when you look at valuations. This does come with the caveat that investors must be able to stomach some degree, some level of risk, Alex, when it does come to the Chinese government. So I think we're going to have to see what the details are here, what the allegations are. Yes, look, this does come with a risk of investing in Chinese companies, particularly because of their sort of top-down economic approach and sort of the heavy-handed approach that we do see, particularly when it comes to technology. But yes, of course, we are seeing a reaction like this today off the back of a report like that.
Yeah, and the reason I brought it up is less so the actual story, but I think this ties to something that we've talked about throughout our programming in these holiday shortened, lighter volume weeks, which is surprise in a thin, low volume market can lead to sharp, quick reactions, whether right or wrong. This stock moved $9 in a 1 minute candle before recovering $7. So if you were caught off guard by that, it can really, hit stop prices depending. A lot of things can happen, and it's trying to recover here. So we'll see what happens. Sam Vadas, such a pleasure. You have a great holiday, and we'll catch up soon. Coming up next, Chartmaster. We're going to look at some of the stories of the week in terms of where the movement's been. NVIDIA and Oracle. Rick Ducat's going to stop by. We're going to look at technicals, a couple example trades as well right after this.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills.
What people are not talking about that
I'm here. I'm just eating lunch. Watch the S&P. Big bounce here.
in the world is collapsing relative to gold. It's been going on for decades. Don't miss open interest live.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney and in Tokyo. Get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news, geopolitical news, economic news, up-to-the-minute global news, whenever, and wherever it happens. In Washington, Buenos Aires, Argentina, Sintra, Portugal, Ottawa, Canada, Bangkok, Thailand, Jackson Hole, Wyoming, Newcastle, England, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
It's 1:22 on Wall Street. I'm Amy Morris. The Pentagon has concluded Alibaba, Baidu, and BYD should all be added to a list of companies that aid the Chinese military. That, according to a letter to Congress sent roughly 3 weeks before Donald Trump and Xi Jinping agreed to a broad trade truce. It is not clear whether those companies have been formally included on the Pentagon's list, which carries no direct legal repercussions, but does serve as a major warning for U.S. investors. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.8%, NASDAQ up 0.9%, and the Dow up 0.8%. The Russell 2000 index also up 0.9%. 10-year Treasury yield at 4%, the 2-year yield at 3.49%. Elon Musk says Tesla aims to roughly double the size of its robotaxi fleet in Austin next month, after some complained that soaring demand from new users had left the service nearly unusable. Musk posted the comment on X.
Mic is open.
Investors last month. He wants
See, don't want
self-driving
sausage.
taxis on the road in 8 to 10 U.S. metro areas by the end of this year. Shares of Tesla less than 1% higher. Deere & Company's weak forecast for the year ahead reinforces the difficulty in predicting a recovery in the U.S. farm economy as uncertainty continues to swirl over the impact of tariffs and trade deals. Shares of Deere about 5% lower now. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. Back to Balance of Power with Joe Matthew.
We thank Amy Morris once again, and she'll be back with more on the markets coming up in about 20 minutes time here. Welcome to Balance of Power on Bloomberg TV and radio, the Wednesday edition as we slide into the holiday together. A ghost town here in Washington. The president, First Lady at Mar-a-Lago, the vice president, Kentucky, lawmakers back home. And if you're Senator Mark Kelly right now, you're living your best life ever since the president called you out for sedition, suggested you be executed. And the Pentagon launched an investigation into serious, quote, serious allegations of misconduct into the senator, of course, retired Navy fighter pilot and NASA astronaut. No amount of intimidation or harassment will ever stop us from doing our jobs. The line on the joint statement from Mark Kelly and the other 5 Democrats who made this video that got everyone so upset, telling members of the military to reject what they call unlawful orders delivered by this Pentagon and this administration. It's gotten to the point now where Kelly's doing interviews on late night TV shows. He showed up on Kimmel last evening just to rub a little salt in Donald Trump's wounds. Not his favorite personality. Listen to how this went.
I've been through a lot more challenging things than this, and I am what I'm worried about is the reaction and what this transmits to the military and the public, which is basically shut up and listen to that guy. And that's not the way our system works. We have loyalty. My oath, and every member of the military took, is loyalty to the Constitution, not to a person.
The FBI is now requesting interviews with the 6 lawmakers, including Kelly, which is pretty unusual since investigations into members are typically handled by the Office of the General Counsel, not to mention the broader DOJ, as opposed to the FBI. But while we consider the alphabet soup involved here and prepare to assemble our panel, look no further than the post on X from the Secretary of Defense. Mark Kelly put a similar post to what he just said there on Kimmel Online. Talks about when he was 22 years old, commissioned in the United States Navy, swore an oath to the Constitution, upheld that oath through flight school, multiple deployments, 39 combat missions, test pilot school. He goes on to write about his space missions. Secretary Hegseth's tweet, he says, the first he heard of these allegations. He also saw the president's post, he says, saying he should be arrested, hanged, and put to death. Hegseth retweets Kelly and writes, so Captain Kelly, in quotation marks, not only did your sedition video intentionally undercut good order and discipline, but you can't even display your uniform correctly. If you're with us on Bloomberg TV, you see the picture. that Kelly tweeted of his uniform with his medals and his ribbons. Stripes, if you will. Hegseth writes, your medals are out of order, your row is reversed. When, if you are recalled to active duty, I'll start with a uniform inspection. This to a senator who many people refer to as a war hero. We assemble our panel for more on this and some of the other stories coming out of the administration. Jeannie Shanzano is here, Bloomberg Politics contributor, democracy visiting fellow at Harvard Kennedy School's Ash Center, Republican strategist Lisa Camuso-Miller, Rock Solutions, former RNC spokesperson and host of the Friday Reporter podcast. What's going on here, Lisa? Is that the way to talk to a distinguished member of the military and United States Senate?
No, but Joe, don't lose sight of the fact that this president, sorry, you got me now? This president is the one who insulted John McCain, Senator John McCain from Arizona, who was an extraordinary war hero and an extraordinary leader in the U.S. Senate. This behavior there has been a permission structure put in place to behave like this over and over and over again. It is embarrassing. It is not the way the United States has behaved and should behave. And the fact that this back and forth is happening on Twitter and on Truth Social, shame on them and shame on them for behaving the way that they are. Because to me, this is absolutely unbecoming. It's just further example of how this administration is not serious. They're not behaving seriously. Unfortunately, though, Joe, the thing that stands out to me is that there are so many important issues that people care about. And instead, we're going back and forth about this. The only way the Democrat Party is going to get traction and get attention in this noisy environment where you have an administration that does non-serious things is to do exactly what Senator Kelly did. And that, to me, tells me that their fire is lit and they're ready to fight.
Fire's lit. I don't know why Captain is in quotation marks here, Jeannie, in Pete Hegseth's post when he refers to the sedition video and his medals being out of order, his rows reversed. What should be Mark Kelly's response to this?
What does it say, Joe, that the Secretary of Defense, or War as he likes to call himself, is most concerned about violations of uniform, while his deputy is overseas negotiating or trying to help negotiate the end of a war? That's what I think we are seeing. Pete Hegseth is very concerned about his job. When Signalgate
Oh, please. I love when non-military people start telling military people how to act. Let me see here, my change channels.
Talking about uniform violations and potentially trying to punish a war hero, an astronaut, a sitting senator for saying that members of the military should do what we know they should all do and what they swore to do, which is to abide by the Constitution. I think it speaks volumes about the secretary and also.
It's going viral right now. You see superstars like Kristen Bell, all her shopping right now is going not just with small businesses, but she's donating all proceeds to Hello grants with small businesses. They're also utilizing new software and AI, as you said before. PayPal's new program, Buy Now, Pay Later, is a big one for small business owners to allow.
All right. So prices are, chopping around here big time. Big moves in the markets at the moment. Apple just off the high. Same with Microsoft, Nvidia, Netflix, Broadcom. All right. So ABCD patterns this time of day. Let me switch to a 15-minute chart. Okay. I don't know. It went quiet. The chat, the tick strike went quiet.
businesses are also shipping, which is an exciting time. It's getting easier, particularly with their own stores and things like Shopify, for them to ship out. So you should be able, and even now you can say, hey, I want small business and I want veteran owned. So you can do a double search for your community and give back to those who are employing your friends, your neighbors, your cousins, and everyone you love.
And how are these small businesses navigating the tariff and the inventory situation right now, right? And making sure they've got enough inventory in their stores heading into this holiday weekend?
You know, since COVID, this is the toughest time for supply chain. Part of that is still coming out of the tariffs issue. As I said earlier, folks are waiting on that SCOTUS argument to see if tariffs are going to stand. It depends on where they've diversified, where they're getting their items. If they're in one country,
Walmart. Let's take a look at Walmart. Okay, Walmart at the highs of the day, highs of the week, trying to break out above 109.60, 110. Walmart looking pretty strong. All right, so just biding my time, waiting for 2 o'clock-ish to see if the institutions will come in. I'm anticipating that we're not going to get much from the markets at this point, as people take off for make a long weekend out of Thursday, Friday off. We're back half day on Friday, but a lot of people that work out there 9 to 5 or thereabouts, most likely taking Friday off, making it a long weekend. Let's see. Let's see what Dell is doing. Dell having a good day? And DoorDash, what's DoorDash doing? That hasn't followed through. DoorDash looked like it was going to start heading towards the 200-day, and then it faded this week. EOSE, trying to get back above the 50-day. Just looking at some stocks that popping up on scans. On semiconductor in the NASDAQ 100, descending pattern. Looking for that to break back towards the 50s. Lulu, this is one that Aaron was asking me about this morning. Lulu looking really good. Lulu. Bullish turn on Lulu. Bollinger Band just starting to open up. Maybe we get a turn. Lulu. S&P faded. Okay, getting a little bit more bearish here.
So with this example, to call count.
All right, S&P. Lower S&P.
So it's the January 2nd long strike at 150 for the calls, and then selling the December 19th 150 call against it. Trying to get a debit around $1. If you could get less, awesome. But of course, this makes it a clean $100 in risk.
MACD.
Risk profile
Where is my MACD? Where are you? There you are, up there. MACD.
Santa Claus rally, perhaps this new
On a 15-minute rolled over.
Some of these things that Marley and I talked about lead to more upside, and you can get that 10+% move into the end of the year. If you do, this is a strategy that would expand more than likely due to that price appreciation. And on that $100 in risk, you'd have a chance to potentially make some profits on this example by the end of the year. So thank you to Marley, Kate. Make sure to catch her and Sam later on this afternoon for market on close. But we're going to take a short break. When we get back, we're going to talk a little bit about the holiday travel trends as our next guest will give us some of those details. We'll also get the story on Urban Outfitters as well. Be right back.
All right, I had to refresh Tick Strike. It had nothing going there. Let's see if there's anything. Just choppy, chop. Maybe we'll get a little rally in today. Apple took some profits off in Apple near the highs of the day. Good thing. We did fade on Apple. Might buy some Apple on the dip here. Really should refrain because we have long day tomorrow off, half day on Friday. If Apple does nothing, Theta could kill you Thursday, Friday, Saturday, Sunday, into Monday. Looks good, but I would expect that Apple's going to come back in a little bit, maybe a little extended. So I took profits in Apple, took profits in the Autodesk. Iron Condor we took, nice 70% gain there. Autodesk we took last night for earnings. After finding nothing in Dell, HPQ, Zscaler. We did sell this. We wound up buying these contracts back for $30 debit. Sold for $120, so we had a $90 profit, $900 in profits. That's nice. It's pretty typical of Iron Condors. You know, lately I've been selling 15 deltas, 16 deltas. You can see if I had sold a 20 delta, we'd probably be down here near 317.50, and we would have been briefly in the money. A lot better looking. 15 deltas have been working pretty good, so I'm just going to keep doing 15 deltas. That gives you an 85% probability of not having to manage a position. We did Zoom. We did a Zoom trade. What was that? Took that off. What's today? Wednesday. Took that off Tuesday. Zoom. So that was a successful trade too. We took this off at the lows yesterday. Another credit there, about $500, $600, something like that. Credits. So that's $1,400, $1,500 between two trades for the week. What did we start the week with? We were looking at Workday. Good thing we didn't take Workday, because not only did we not have a decent amount of volatility to sell here, that the premium wasn't that great. Had a 13 delta, but we came down and tested it on top of that. So Zscaler, we were looking at doing something with Zscaler. Do I have anything here? Zscaler? No. That pushed lower. That doesn't look good. Dylan, you asked me about this earlier. I would need to see a hammer now. So we'd want to see price back above the 200-day. Nice long wick. Don't see it right now. So I would stay away from Zscaler. Broadcom. Broadcom started the trade on this one. On the breakout, Broadcom. Broadcom for the breakout. Okay, so I was looking for something similar to what we saw on Monday on the breakout. Not that enthusiastic yet, but the volume looks good. MACD stochastics rising. All right, we're going to push a bit lower, it looks like. MACD, stochastic, RSI all look good on this one. Nice gain. A nice gain from the low. The April lows. Okay, the April lows up to recent highs. That's about 160, 180%. Okay, to this last pivot right here, 170, 171%. So the run up into this consolidation was 170%. So consolidating for 3 months makes a lot of sense. Most likely this is going to continue and blast higher. Okay, we got more selling. More selling. S&P, more selling. Okay, this is the 15-minute. Let's go down to the 5-minute chart. 5-minute chart starting to roll over. It would be something to see a shooting star for the day. Our hedge flows have rolled over. All right, so lower highs, lower lows on hedge flows. Okay, what's IWM doing? IWM small caps. IWM still going. IWM. Okay, S&P dropping off here. S&P dropping off.
What is your data suggesting so far as to how this holiday season is going to shape up?
A busy holiday season this year and a busy Thanksgiving week. Today, 3.2 million seats are planned to depart across U.S. airports. That's today only. We're expecting 22 million seats to depart over the Thanksgiving period. That's from this week all the way through Monday. So if you are planning to travel for Thanksgiving, expect busy airports, long lines at security.
Okay, so how does this shape up maybe to the last couple of years? Are we seeing substantial growth, or is this a pretty consistent outperforming time for airlines and travel trends?
We're seeing high demand. It's pretty consistent with what we saw last year.
Can we get a bounce?
Higher. We are seeing tons of Americans hit the roads, hit the skies this year. So it's going to be a busy holiday week.
All right. For those who are maybe more like me and less like the rest of my family and aren't much of planners.
Back to VWAP. Okay, we're pretty extended from VWAP. Came back to VWAP looking for a pop or a bounce, or we're going to continue to sell.
Deals available, but you're going to want to book as soon as
appliances will be big on the list. Millennials who tend to be homeowners will be looking for appliances as well as just furniture and so on. But I think some of the typical categories like toys will be big, decor will be big, skincare and beauty will also continue to be big on the list.
All right. Simon Kutcher, Shika Jane, thank you very much and have a happy Thanksgiving.
You as well. Thanks for having me, Tom.
All right, coming up on the show, shares of the big three airlines climbing since the end of the government shutdown just 2 weeks ago. Delta's up more than 11% in that span. We're going to dig into what the biggest travel weekend of the year means for the carriers. Coming up next, speaking of experiences and travel, the exchange will be right back.
To be true, usually is. When a stock price gets beaten down, the dividend yield goes up, and it can look huge on the screen. Sometimes
IWM looking really strong.
Sometimes it's a sign that the market expects a dividend cut. Now, let's take a look at two of the bigger names. Take Pfizer here. It looks like a classic value trap. I'm going to put this on a 5 year so you can see the performance. This is after its stock COVID business fell off a cliff, and the stock price dropped. So it's down 3% this year, and the company still pays a hefty dividend around 6 to 7%. The cash flow is tighter as it spends to rebuild the drug pipeline, which is why the peg looks weak. It's real income today with real questions about longer-term growth. Then let's take a look at Ford here, which is cyclical value tied to the U.S. economy with a big sticker yield around 5 to 6%. It pays a regular dividend, but profits are under pressure from EV losses and a choppy auto cycle. And also, guidance has come down. Its negative PEG ratio tells you that Wall Street expects...
Yeah. Hedge flows, I don't know. Hedge flows are not confirming.
It's up over 30% this year, but it's still been cut in half from its 2022 all-time high. So, how do you keep your holiday value basket from turning into a bag of returns? Here is what to watch next. And I got a nice little list here for you. First, you want to run that.
Okay. IWM looking good.
Or it's starting to roll over. Then look for dividend changes, hikes, pauses, cuts.
Okay, after 2 o'clock, we're looking for institutions to tell us, what are you going to do? What are you doing? We'll look for institutions to start buying between now and 2:45, 3 o'clock. Right now, it looks like they're buying the dip. Nice reversal so far. Nice reversal so far. Okay, tick cumulative. The hedging flows have yet to turn up. The 6850s are gone. 6850s are gone on that drop. Okay. Okay, so far so good. This is rallying up. Sneak Sally up. Sneak rally up.
Welcome back to the exchange. A record number of Americans are expected to take to the skies this Thanksgiving holiday week. Phil LeBeau joins us.
I cannot imagine flying through Delta's terminal in Atlanta. I did that once recently. Well, for my birthday, not this year, but last year. Wow, that really sucked.
Provided we don't see a big snowstorm or something come through and really disrupt things as we get closer to Christmas. Provided that doesn't happen and you have a good week this week, Q4 should be good. Take a look at what we're seeing in terms of the airports around the country. 31 million people will be flying today. That is a record, up about 1% compared to last year. Sunday is the busiest day, though yesterday we'll give Sunday a run for the money. And we
Looking for hedge flows to turn back up. Let's see what. Oh, that's Charm we're looking at. Shit, I've been looking at Charm the whole time. Okay. Gamma. Okay. So all this red means that they have a lot of negative gamma. We could move a lot of volatility here. So we've seen that. Not surprising. We've already seen that volatility. When everything is red, negative gamma, you get these big moves. See, the hedge flows are back and forth, back and forth. There's hardly any negative gamma has traded today. They're not selling puts down there. We need to see put selling down below for support, for structure. Brief little bounce.
December is expected to be relatively strong. Bottom line is this, Dom. A lot of people thought that when the government shutdown happened, perhaps people would postpone trips or cancel trips for the holidays. That hasn't happened. The leisure market has largely stayed in place for the airlines. Yes, a lot of corporate travel went away, and that's probably not going to be made up. But in terms of people who said, I'm going here with my family, they kept with their plans, and they continued either to stay with those plans or they said, we're going to go ahead and book.
Phil, what are the expectations, given the backdrop you just laid out? What are the expectations from the industry about what travel demand from leisure and business looks like in 2026? Will it remain healthy in the wake of the government shutdown?
That's the expectation. But remember, we have another potential shutdown at the end of January. Now, who knows what happens, Dom? If we get past that and there's no shutdown and you don't see the air traffic controllers once again in a situation where they're not being paid but expected to go to work, then I think you look at 26 as potentially a better year than 25 At least that's what the view is right now.
All right. Phil LeBeau with the Thanksgiving travel picture. Thank you very much. Happy Thanksgiving, sir.
You too.
All right, still ahead on the show. NVIDIA's higher today, but down nearly 11% in the month of November. And it could be facing more headwinds as a new Chinese chip maker readies to go public, putting even more pressure on the tech giant. We'll dig into that story coming up next. Keep it right here.
That they've become accustomed to volatility.
Yeah, they're punch-drunk crypto hippies, the majority of them. So they're used to the volatility. And what we meet with our clients monthly. So we're having this
Netflix still putting in higher highs, higher lows, producing a higher low right now. Apple off the high of the day. I was thinking about buying some calls on the dip, but I'll probably pass because we have Thursday off. I'll come in Friday. There's no hurry. I mean, we've done very good for this week.
The headline is always tax loss harvesting, tax gain harvesting could be valuable as well.
Interesting. Okay, so we backed into that, but let's talk about tax loss harvesting because typically we think of it with more traditional assets, whether it be stocks or even things like real estate, right? That you have tax advantages. So how does that work with crypto? What do people need to know?
So a couple things. One, I think a lot of advisors, CPAs, and investors don't know that there is no watch sale rule, right? So you can harvest that loss. Like you would a stock, and you can buy it right back.
So in other words, if you on your balance sheet, so to speak, if you have reported a loss for this year on paper,
yes,
you can actually exit that position, take advantage of that loss, but then re-enter the position
right away. Now, as we were talking prior, that's not the end of the story. You can, however, there's something called the economic.
Okay, hedge flows continue to roll over, move lower. Looks like lower highs. Lower highs for now. Looks like a descending channel on our wedge on the shorter time frames. Okay, so it looks like we're wedged down for now. MACD continues to trend lower, as you see. MACD is trending lower.
So it's really important that you're working with an advisor or yourself, keeping good books of records so you can see what your portfolio is doing to take advantage of tax loss harvesting and rebalancing.
How much attention is the IRS paying to crypto holders now versus a year ago or 2 years ago? And is it actually being given that this?
Welcome back to the exchange. China's first ever domestic GPU maker, More Threads, is readying a public debut in Shanghai. Now, it was founded by former NVIDIA employees now trying to take on the chip giant itself. Deirdre Bosa has more in today's Tech Check. Deirdre, this is all about GPUs and just what it can do in the domestic Chinese market.
Interesting. Former NVIDIA employees are now going to start a competitive chip company in China. I wonder if they stole any secrets. Wouldn't be unusual.
Is 4,100 times oversubscribed in Shanghai. It sits inside of this larger trend. Beijing went from
CUDA operating system too.
Some of its biggest technology companies from using them in new data centers. So that means forcing them to shift budget and engineers to domestic chips. Now there's more threads, but there's also Huawei and Cambricon and rising startups like Byron and Medax. They're building different pieces of a system, all designed to make the country less dependent on American chips. Now, to be sure, there's still a long way to go. China's industry is fragmented, it is subsidy dependent, and they still lag American chips by generations. Yet NVIDIA itself is warning investors to pay attention, saying that export controls are pushing Chinese companies to adopt domestic accelerators. And even if those aren't as performative today, they're good enough in many cases to start replacing some U.S. systems inside of China and potentially at other countries that can't afford or can't get access to cutting-edge GPU stuff.
All right, Deirdre, just how long will it be before the supply chains?
Still no crossover in MACD.
This isn't realistic and say like the next.
So it looks like shorts covering for now.
I don't think so.
Hedge flows. Okay, big quick turn here on the hedge flows.
Because Beijing is pouring so many resources and focus and capital into this push.
Did we get a rally into 2 o'clock? That would be nice. 2 o'clock is when we look for institutions. Signature prints. Showing any signs of interest.
NVIDIA is trying to do this with different companies. So it could take 5 years, it could take 10 years. They may never get there, but they're certainly trying everything they can.
All right, speaking of that kind of segmentation of U.S. and China supply chains, domestic manufacturers, before you go, Deirdre, Alibaba shares are on the move today following a Bloomberg report that says the Pentagon is suggesting putting the company on a list for helping the Chinese military. What do we know about that story?
So this really follows
IWM still pushing. Looks good. IWM, let me see what the trade is I have here. IWM, no, it's 5 handles wide. Butterfly. IWM. 240, 245, 250, 265. 240, 250 as we approach this area. Okay.
On a list that would restrict them from selling or even operating here in the United States. Now, this is interesting because we're not just talking about Huawei anymore. Huawei is a private company. Concerns have long swirled about its connections to the Communist Party. We're talking about Alibaba and Baidu. These are publicly listed companies that have quarterly earnings, and in the case of Alibaba, has American board members. So it's a really interesting development for sure, and we'll see if they actually make that list.
All right, Deirdre Bosa with today's Tech Check. Thank you very much for that. Have a happy Thanksgiving.
You too.
All right, that does it for us right now. Thank you for watching the exchange. Markets right now are solidly bid, not far away from their session high so far. It's been a good week. We'll see if it sticks around. Happy Thanksgiving, everyone. Power Lunch starts right now.
Welcome to Power Lunch, everybody. I am Brian Sullivan. Kelly will be back on Monday. All right, markets in the green ahead of the Thanksgiving holiday. Mega cap tech leading the gains. Yeah, the names you know. The NVIDIAs, the Oracles, the Palantirs, they're bouncing back from their recent pullbacks. Investors doubling down on bets the Federal Reserve will
S&P looking good here.
We'll get more clarity maybe when the beige book is released in like
Okay, we got a MACD about to cross. MACD's about to cross coming up.
CEO of TerraWolf will join us exclusively for his take. He is partnered with Alphabet, and both have boomed. All right, welcome everybody. Hope you're having a great pre-Thanksgiving holiday. Maybe you're sitting in traffic somewhere on the radio. Either way, thanks for joining us. Let's start off with the big story of the day, the week, the month, maybe the year. That is two AI giants moving in relatively different directions recently. Alphabet, Google's parent, and NVIDIA are now on pace for the widest monthly divergence since February of 2024. In other words, in just under 2 years' time. So will this trend
Beige book.
continue? Will Alphabet continue to soar, or will NVIDIA kind of get most of its mojo back and maybe catch up? We're joined all hour by our friend Sarat Sethi.
Beige book prices rose moderately during the reporting period.
Thank you for having me. Are you as surprised as some have been at this recent outperformance by Alphabet?
So I wouldn't say surprised, but I think the key thing to focus on is Gemini is working, and now because of Gemini, the horse race is now in Google's favor.
Gemini is their AI agent.
Gemini, exactly, and that was competing with ChatGPT. And if you remember when ChatGPT came out, people said, "Whoa, wait a second! 90% of Google's revenue is advertising. That's going to hurt." Now you come out with people saying, "Hey, this is a little bit better." So I think it's a horse race, Brian, and I think there's going to be enough demand, and there's going to be enough for both of them, if not more, to survive. But in today's momentum-driven market, Google's come out ahead, and then you got the news that Meta might maybe be using their chips. So a combination of those two, Google's added over $1 trillion of market value just this quarter. And I think the naysayers of Google are now kind of not there, probably got some shorts covered, and now some longs going to the game.
I mean, it has really been an outperformer, and we're not taking anything away from NVIDIA. I guess the bigger macro
Looking for that MACD cross.
is Is this a Muhammad Ali, Mike Tyson moment where they don't fight against each other and they each can win in different arenas? Or is this more of a Sonny Liston Muhammad Ali where there's going to be a winner?
I think it's going to be in the former, because what you also, and NVIDIA came out a couple of nights ago and said, hey, we congratulate Google on their chips.
Which I thought was a little weird.
Yeah, which was kind of interesting, right? However, our chips are first generation, right? So it's really who's got the technology, who's going to be using it for what. And if you talk about computing power faster, there are going to be different demands, different needs for different computing power. So right now, I think it's the
Okay, hedge flows turning back up.
So NVIDIA was so far ahead, we'll have to see.
Beige book's been released.
Chips come out, who's going to be buying them, or are you going to be buying kind of, do you want the Ferrari or do you want the Nissan, right? That's going to be the question.
Is NVIDIA the Nissan? Because NVIDIA's printed money for investors the last number of years. Only lately has it been relatively weaker than Alphabet, but NVIDIA's been a giant.
It's been a huge.
I mean, you owned it for 5 years.
It's our top.
You have a solid gold yacht.
Our top 5 holdings have NVIDIA and Google.
Okay.
So if you think about it, am I selling either one? No. Am I trimming it? Yes, if it becomes overexposure. But I think, it was natural for NVIDIA to give back some of it. It was such a leader in this. Google's catching up. But I do think if the two of them, what they're doing are good core holdings for the next couple of years.
Okay, so they're still top 5 holdings for you. You're trimming a little bit of NVIDIA.
Only because if it comes outside.
Because it became too concentrated in your portfolio.
Exactly.
So the headline is not Sarat Sethi selling NVIDIA because you don't like it. It just became it was almost too successful, and it filled up that candy jar a little too much.
Exactly. And any stock that does that, when you have a diversified portfolio and you're looking to risk manage, you have to say, hey, I got to be careful because you don't want to fall in love with the stock. You have to have risk discipline. In the same way that when you have a sell discipline, you also have to say if things are too big.
Okay, so you've made money and your clients have made money owning NVIDIA. Then what are you doing with the proceeds of that sale money? Is that all going to Alphabet or something else?
No. So you're not taking the story that we're going to talk about later in the show, but
that's what I do. I front run myself.
You're front
run my own show.
So you talk about dogs of the Dow. You talk about dogs of the market.
Okay.
And I would say good quality companies that have been oversold. And you're going to a period, Brian, in the next 4 weeks, which is tax lot selling. So what do investors do in the taxable portfolios? They sell their dogs, they double up, and they kind of say, hey, I'm going to offset. So sometimes you find really high quality companies that you want to own, like in Air Products.
Okay, but don't give away too much.
Okay, well,
because then I'm front running myself.
So we front them the idea, but we won't get the specific.
Good. We call that a deep tease.
Okay.
And it'll keep people through the hour, just like we're keeping you through the hour. Sarat Sethi, thank you. Because right now we got to get to Steve Leishman, who has got the aforementioned breaking news from the Federal Reserve. Steve.
Hey, thanks very much, Brian. The Beige Book saying that the economic activity was little changed. 2 districts saw modest decline in growth. 1 reported growth overall. Consumer spending declined further, though high-end retail, as we've heard from some of the retailers themselves, has been resilient. Some retailers saw a negative impact from the government shutdown when it came to consumers. Auto dealers saw declines in EV sales. Remember that there was the expiration of the tax incentive there. Manufacturing increased somewhat. That was good news. But tariffs and tariff uncertainty were headwinds for manufacturers out there. In fact, there's a lot on tariffs in this Beige Book here. The ongoing recovery, there was an ongoing recovery noted in the office real estate market. I believe that's something Diana Olick has been talking about. But this is on the sad side here. Community organizations did see increased demand for food assistance, due in part to SNAP disruptors. I don't think I've ever seen anything about food assistance in the Beige Book here. Employment declined slightly over the period. Half of districts reported weaker labor demand. That's a large amount. Employment was limited using hiring freezes and attrition, though, rather than layoffs. And we did get confirmation of those low layoffs again in the jobless claims number. And now here we go. This is pretty interesting. A few firms say that AI replaced entry-level positions or made existing workers more productive enough that it allows businesses to curb new hiring. And employers did have an easier time finding workers, though in some sectors like construction, it was tough. Wages, something the Fed watches closely for inflation pressure from labor market. They generally grew at a modest pace. There was rising health insurance premiums that put upward pressure on labor costs. And then the important part on inflation. What are they seeing in the Beige Book here? Prices rose modestly during the current period. Input costs, input pressures widespread in manufacturing, and that was and retail, by the way, also, and that was largely due to tariffs. Pass-through of higher input costs, however, did vary, and many companies, Brian, I don't know if you're seeing this in the company reports, were talking about margin compression or firms facing financial strains from tariffs, and firms were expecting upward cost pressures to persist, but plans to raise prices were mixed. So a lot going on there, Brian, in the background when it comes to, say, an effect of AI through there, but also these effective tariffs. We don't hear or talk a lot about it because it seems to be going on in the background on the balance sheet of companies' books who are dealing with these tariffs, right?
Yeah, and the food assistance, let's hope that's a one-time thing because it was right around the time of the government shutdown. Steve Leishman, thank you. Happy Thanksgiving to you and yours, Steve.
Sure.
Thank you. All right, let's get now to Rick Santelli with the bond report with a 10-year sitting. And Rick, when I say sitting smack dab at 4%, I mean 4%.
Yes, absolutely. Now, real quickly, let's look at the maturity that most closely follows those minutes, and that, of course, and the beige book, and that is the 2-year note. Now, if you look at the 2-year note, you can clearly see we're right at the middle of today's range, right in the middle at 348. Very little reaction.
VIX continues to drop. VIX is dropping, fading.
Lower going into it. Maybe the big news today, 216,000. That's the big number, or I should say a small number. That's the number of initial jobless claims today, a 7-month low. You see on that chart, very well behaved. And I continue to look at the equity.
Tesla turning up today.
The S&P futures and
Back up to the highs.
after that good number. And then they
Almost at the 50-day moving average, Tesla.
the reason. Look at a 2-day chart of 10s. Yesterday's high yield was right around 404, right where we stopped and broke it back down today. We continue to monitor Fed fund futures. 80% probability of an ease at the December meeting. As prices rise, so does the intensity of easing, and that's a week-to-date chart. Brian, back to you. Have a happy Thanksgiving.
Rick, thank you to you and yours as well. Surat, your thoughts on the Fed? CME Fed Watch tool shows about an 85% chance of a rate cut December 10th.
Yeah, I think the data here just confirms that you're probably going to have a cut. The market's discounting it. You look at productivity increasing, probably put some pressure on wages again, which is what the
TSSI, thanks to Dell earnings. TSSI coming off the low. I have an average right around 1050, if you recall. So we got a little bit more upside. Need a little bit more upside on TSSI.
this rally in the last 3-4 days will have some.
Does the market back up 5-10% if we don't get a cut?
I think you could get a pretty drastic. People will be off sides at that point.
But if we get a cut, the market may not respond because we're responding now to the expectations of a cut.
We are discounting what the market's going to do in the future, and it'll be a question of what they say then to say, are we going to stop here, or we're still going to kind of say, hey, the data is showing that we're on the same track.
Who's Surat Seti picking as Fed chair?
I'm going to be neutral on this one. I think whoever is the most qualified.
Somebody named Kevin? There's two of them.
Two Kevins.
That's what I'm saying. You're not picking one.
It looks like one of the odds are it's going to be one of the Kevins at this point. So
How about this? Forget about who you pick. Is there a market difference between the names we know as finalists in how he or she may react and may influence interest rate policy in the quarters and years ahead?
Well, from what we've read is they're being supported by the current administration, so I think they will be more dovish than hawkish.
To get appointed, or I shouldn't say appointed, to become a Fed nominee, because the Congress will officially appoint them, you would need to be in favor of much lower interest rates, would you not?
Absolutely.
Wild stab.
Feels like they're going to rip this.
Absolutely, and I think you have to support what the administration's been saying, and I think it'll be interesting to see what it's going to be when they join the committee, because right now you actually have some dissent.
Which is probably why the Russell 2000, the small caps, have outperformed so much the last couple of weeks. Expectations of a rate cut. Does the bond market listen to the Fed, or is the bond market going to stay around 4%, regardless of what the Fed does?
The bond market, I think, is going to listen to the data.
TSSI finally turning the corner. Volume looks good too. Looks like accumulation at the low. I'm not going to add anything to it. I already have a large enough position.
Fantastic. Surat, you're not going anywhere. We got you for like the next 40-some minutes. Surat Seti, thank you very much. Coming up, we're going to switch gears. Talk about this $1 trillion holiday shopping season, which is now upon us. Stacy Widlitz is in house, and she told me that she's got the Mag 7 of retail. We'll let you decide.
Oh, shit. Thinkorswim just crashed on me. Okay, I'll restart. Oh, it's still there. What's going on? No, it's not there. Thinkorswim. Yeah, I had to it rebooted by itself. Thinkorswim. It does this every once in a while. You know what? Let me clear my cache. Clear cache. Feels like a rip coming. Yeah, TSSI. Look at the volume there, Mondo. That's institutions buying down here at the low. Okay, it's pretty obvious. You got stochastics, MACD turning. Sto, MACD, RSI turning bullish. I'd be buying here. Yeah, I'd be buying here. TSSI. Okay. Log in. Having to reboot my Thinkorswim. Okay, 3, 7, 9, 2, 4.
How can we not talk retail today? A record 187 million people are expected to shop from tomorrow through something called Cyber Monday. I can't believe I just said Cyber Monday. That, according to the National Retail Federation. Let's bring in now one of our favorite people. Stacy Widlitz has brought some of her favorite retail stock picks. And
Futures continue to rise. We're breaking out of this descending pattern. Okay, let's take these highs. Almost a parallel line, almost a parallel channel. Almost. MACD's crossed now. MACD is crossed, so that's a pretty good setup.
We're seeing it from, the tried and true Walmart, TJX, you name it. But we're also seeing it from brands that are supposed to be dead, right? Urban Outfitters, The Gap. Operating margins are at levels of last year, if not higher. And that's because companies have been forced to cut costs and come in with very lean inventories. So it's like,
What the hell is that noise?
learned how to be disciplined again. So it's like clean up aisle 7. That's what's really happened.
What's the, Sarad, I think it's a political statement, but it's like never fail to take advantage of the crisis.
Exactly.
And the retailers, it sounds like what you're saying is they've used, I'm not calling tariffs a crisis, but they're using that cover to fundamentally improve the way they do business.
Or this crisis has pushed them to be super conservative and super smart about their inventory positions as they go into holiday. So for most of the companies reporting, excluding one or two like Targets and Bath and Body Works that were not so great, inventories are lower than sales. So that's how you want to go into holiday, because then there's very little margin risk and you're actually chasing product.
So is this the stuff they bought pre-tariffs, and then kind of how does that play out next couple?
That's a great question. So some of it, a lot of it was bought pre, but now we're starting to roll new product in that the costs are higher. But again, from what you're hearing from the companies, they've been able to cut other places. And by the way, AI is helping, right? Because Best Buy.
Okay, more upside.
Their touch points with customer service down 17%. That's helping them cut costs. And by the way, customers are happier because it's more efficient. So there's less returns. So it's all coming together with a perfect storm.
And then the other question is, we talk about this K-shaped economy. Right? Where are you seeing that? Which are the upward K spending, and kind of who's benefiting, or is it lower K? And then kind of how do you associate those two together?
Sure. Well, you're seeing luxury certainly have a bounce back here, right? When have we seen mass wealth creation like we're seeing now? So the luxury guys are starting to come back. And you're hearing from everybody across the board, Best Buy, saying that, yes, there's still value driven out there and people are still being very choiceful and careful. But at the same time, when there's innovation, people are opening their wallets and they're spending on innovation.
Yeah, it's a drag going shopping, especially you go to Home Depot, someplace like that. Everything is locked up. It's a pain in the butt. There's only like one or two people on the floor. You call them over. It takes forever. It's just like so frustrating. Just buy shit online, have it delivered. Okay, Bitcoin looking a lot better.
Abercrombie was up 40% yesterday, so forget the Mag 7, we have the Mag 9 here. We've got Walmart, TJX, I'm gonna count, Costco, Ulta. We have on the brand side Urban Outfitters, Nike. I'm gonna call the turn on that. I had to sell for it over 2.5 years. I had to sell on it for 2.5 years, and I upgraded it recently to a buy. And I'm going to say Williams-Sonoma, which operating margins are up versus last year and positive comps across the board. If you want to look into 2026 for interest rate play, and of course,
I think that's the K-shaped upslope with the Le Creuset pot.
So let's go with the Fab 7 analogy, right? Because we know when you look at the market, 40% of stocks are 50% of the market cap. Is that the same in retail now? The big are going to dominate, or the healthy? And then you kind of have to stay away from the others and to say, maybe not do Target, but do Walmart and the others. Is that kind of how?
Absolutely. And if you're seeing what Walmart is doing, their traffic and their ticket is up. And they are stealing share from everybody. They're stealing the high-income consumer. That's where most of their comp growth is coming from. They have the power to crush everybody in terms of costs. So you want to stick with the big guys and avoid the margin.
So let me do the intersection there. You get Amazon, which is the Fab 7, and you get Amazon on the retail side. How do you see that play with the Walmart? Do you see them kind of, Brian's question to me, does NVIDIA and Google coexist? Can Walmart and Amazon coexist?
Absolutely. And I think both continue to gain share.
Looking for more upside on the S&P. Looking for this to rip higher.
Kohl's, we saw this rip in Kohl's the other day. Right, but their operating margin is a third of what it was a few years ago. Their comps are still negative. That was a short squeeze. It was, hey, things are -2, not -7. And the stock, there was a huge short cover there. I would not look at that stuff.
Is buy now, pay later, is that affecting retail at all? And if so, how?
So that's been around for a while. And yes, it's helping people stretch out payments with lower interest rates. It's hurt certainly credit card signups and adoption. So it's helping people manage their spending over a long period of time. Everybody's always been calling for that to destroy the consumer and put them into a debt hole, and that has not happened.
So are they spending more? Are people spending more because they have access to it? Or is it just replace a Target credit card?
I think it's replacing credit cards, and of course, your interest rate on a credit card could be 20+%, whereas buy now, pay later. For a few months, you're not paying anything on that, so it's giving them more spending power. But what we've also seen is all these price increases across the board. The consumers are taking it. If the product is right, whether that's Gap, Urban Outfitters, or Best Buy.
Stacy Widlitz, thank you for coming down here. Have a happy Thanksgiving, and we look forward to having you back on because I want to talk more about Target because that company's been a disaster.
Absolutely.
And I want to dig a little more into it, but not today. Today's the day of giving
I look
thanks.
forward to it. Exactly. Family and giving thanks.
Stacy, thank you. Let's get at Contessa Brewer for a CNBC news update.
Brian, a senior Russian diplomat said today that Moscow will make no big concessions on a peace plan for Ukraine. U.S. Special Envoy Steve Witkoff is expected to travel to Russia next week to meet with leaders there about the U.S.-backed proposal to end the nearly 4-year-old war. Russian officials say they still have not officially received the plan, but they have seen a copy obtained through back channels. The Supreme Court deferred a ruling today on whether to allow President Trump to remove the government's top copyright official. This move leaves Shira Perlmutter in place for now. The Trump administration moved to fire her in May, shortly after her office circulated a report saying some tech firms use copyrighted works to train their AI systems. And her lawyers argue the president just disagreed with the findings. And the Macy's Thanksgiving Day Parade balloons are being inflated right now in New York City ahead of tomorrow's big parade. It can take as much as an hour and a half to get each balloon fully inflated. Some of them are as tall as 5 stories. This year's new addition to the parade include, what would you guess here? Labubu, right? Anybody who's got kids knows the Labubu's hot. And K-pop Demon Hunters. Brian, I'm going to spare you singing the song.
Walmart.
I'll have earworms for the rest of the day.
Yeah, Walmart looks good.
15 years ago.
Walmart.
What?
Yeah.
Was it raining? Was it windy?
It was
Did you almost
windy,
get knocked
and
over?
I was on Curious George's hat, and I was holding down the first rope. True story, I'm a big dude, and it was hard.
Tesla looking really snappy here. Nice move on Tesla for those of you holding on during the day. Walmart, very strong day on Walmart.
15 years, you've accomplished a lot.
I was too curious. Contessa Brewer, thank you. Coming up, prediction markets. They're booming, but what stock might benefit the most from the prediction market boom? We've got some ideas in your Market Navigator. Next.
All right. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 12:26 on the East Coast, the best coast to coast with the most. It's Wednesday, November 26th. We have Beige Book out of the way. Moderate increase in prices, according to the Fed. I've seen a lot of things pulling back in price. Still, a gallon of organic milk's about $7. Eggs are back to normal. Bread, the typical stuff. The biggest thing is meat, chicken, that sort of thing. Expensive. All right, we continue to move higher here. S&P is looking pretty good. Breaking out of this descending pattern. Okay, we're about to take out the high of the day. We're headed for the high of the day. VIX continues lower. Okay, VIX continues lower. Dropping off. 1699. VIX at 1699 and dropping. That's good for the S&P. VIX down, markets up. Okay, hope everyone's having a good day. About to break out here. Yeah, me too, Mondo. Hedge flows. IWM looks good. Yeah, IWM is a great trade. Thank you so much for that one. Walmart's good. Apple took profits. Tesla, going to take a little bit off here on Tesla. TSLL shares. Looking good, looking good. Okay. I'd like to see Oracle much higher. NVIDIA turning back up off the low here.
All right, time now for Market Navigator. And really today it's kind of all about the prediction markets because trading platform Robinhood teaming up with huge financial firm Susquehanna to launch a predictions futures market. It's clear that predictions markets are booming, but what stocks may boom because of the boom in predictions market? Well, let's get a prediction. Jessica Inskip is Director of Investor Research at stockbrokers.com and joins us now. So Robinhood getting a nice pop, Jessica, but you think there's another name, a big name to watch in this prediction space?
And that I absolutely do. Robinhood's leading into it because it's an easy entrant into this emerging retail client that we have. But prediction markets are where futures were 150 years ago. And I even think there's parallels that we can bring into the options market. It's fragmented because it's across CME. Interactive Brokers has their own Kalshi, Susquehanna. Stage because it's exactly how early futures markets looked before there was standardized futures, and that's where I see CME Group as really being in a position to capitalize from this. They are taking this regulator first path to become the standardized for the type of market structure. And if we go back to what happened with futures 150 years ago, all of the oversight that was required, CME actually acquired those companies, in which case they have been really leaning into these FCMs, which are the future commission merchants, in order to own that market structure. And so that's where I think the opportunity is. I want to compare it to when we were first talking about artificial intelligence. NVIDIA was a major component to that because it's the GPUs. The structure, CME Group, is the structure for prediction markets.
Do we think, Jessica, the predictions markets are big enough or will be big enough overall to move the needle for CME?
I think it can be because it ultimately is a futures product. And when I'm talking to brokerage firms, what I find really interesting about the prediction markets is it's this entry for this younger investor. We see across all of the brokerage firms, this younger investor is
All right, Tesla, nice move on Tesla.
Where Robinhood is absolutely leaning in, especially
NVIDIA.
because of the darts that are occurring there, so the commissions, and that's how the exchanges.
All right, S&P on the move, looking really good, S&P. Nice breakout. Going for the high today. MACD is positive. Momentum is bullish. Okay, we're about to get a breakout here. All right, looking good.
I like it, the binary outcome. And by the way, it's moving the needle.
Looks like NVIDIA is going to go.
She now has a private market valuation, I think, of about 10 or 11 billion dollars. Jessica Inskip, stockbrokers.com. Jessica, have a great Thanksgiving.
Yeah, Jessica. Thank you, Jessica.
All right, speaking of eating, how about Hungry Like the Wolf? WULF. We're going to speak with the CEO of a company that is thriving in part because of its part in Alphabet's hack. The CEO of TeraWulf. Next.
Tesla. Yeah, Tesla looking good. Tesla's still going. All right, looks good. Tesla. S&P at the highs. Just off the highs of the session. Got a little bit more to go. Let's see what those upper levels look like. There's not a whole lot here. There's nothing overhead. No negative gamma overhead. Only positive. There's no positive gamma overhead. Sorry. Only negative gamma. The red is negative gamma. You can see the chart is all red. So that's telling you it could be fast moves. Look at the hedge flows. Hedge flows are zipping higher. Hopefully prices can catch a magnet and continue higher. Wow. hopefully we'll pop this higher. If they don't change their mind. What's going on? Okay. Hedge flows rising. Okay, let's see if we can't rip this. High volatility here means it can go in either direction. Beyond Meat, you're still in that one? Beyond Meat? Turning the corner, Beyond Meat. Okay, we had supply here before. There were sellers here before.
Let's stay on one of the big themes of the market lately, how Google, Alphabet, is suddenly the leader in the trillion-dollar AI race. That stock has been red hot. Alphabet has basically doubled in a year. One big reason is that it's come out of almost nowhere to really look like the powerhouse in AI and in power. In fact, Needham analyst Laura Martin laid it out like this on Monday.
What I really think about Alphabet is they own everything. They own the chips. They own best-in-class consumer data. They own the cloud. They're totally vertically integrated, and they are a threat to the NVIDIA OpenAI ecosystem because Google Alphabet does everything itself.
Some people were surprised by that. The one company that clearly saw this coming is TerraWolf. It recently aligned further with Alphabet, even having debt backed by the company and Alphabet taking a 14% stake in TerraWolf. That's something that Alphabet almost never does. That has helped power TerraWolf to more than double since January. It's up about 160%. Let's talk more about it now with TerraWolf's co-founder and CEO, Paul Prager. Paul, thanks for coming back on. What did you and your team see in Alphabet that it appears that others may have missed?
I don't know if anybody could have missed it. I mean, they've been out in front of AI for nearly 2 decades. They pioneered large-scale machine learning. They designed their own custom silicon, and they understand better than anyone that the next.
All right, somebody just took some profits there, looks like. Hedge flows just turned back down, so that was probably a pretty big order. There's not a whole lot of positive gamma above. We do have some at 68.20 for some immediate support. But negative gamma above, that means fast moves, likely, in both directions.
I think they were focused on large-scale machine learning early on, and they wanted to develop their own product. I mean, there's still a customer, of course, with NVIDIA, but they've been very, very focused here on finding the opportunities for large-scale power-centric infrastructure. That's the key to what is currently happening in high-power compute and AI. You need to have the infrastructure. It's got to be electrified to be able to host.
Walmart number 2 on the NASDAQ, on the Dow Jones most actives. Walmart. Boeing leading off the low. Microsoft. Goldman Sachs, nice reversal. I did close my credit spreads on Goldman Sachs. JP Morgan, Caterpillar, nice break higher. Caterpillar breaking the downtrend. NVIDIA, CVX, okay. Dow, S&P. S&P, ooh, Robinhood's on the move. Robinhood. Robinhood turning back up. That might be a good trade here. I wouldn't buy it at the high of the day, but maybe Friday, remind ourselves to look at Robinhood. First Solar. First Solar, nice. App Lovin'. Dollar Tree. Bollinger Band's opening up Dollar Tree for Christmas, for holidays. Dollar Tree. Dollar General. Dell, nice move on Dell today, up $8. Teradyne. All right, we're bringing it back now. Okay.
Because I mean, Gemini 3 came out and people have said, hey, right now it's ahead, but like this is a horse race, right? I mean, you don't know next week if somebody comes out with like, but they're innovative, they're there, and if they diversify the revenue stream, they're so profitable. I think you do need to own the stock. It's just it's going to be volatile, it'll be up and down.
MACD flattening out.
All right, folks, coming up, do you understand what it takes to be a great CEO? Well, your next guest literally wrote a book on just that. Who reveals some of the secrets and some of its names.
ZYXI, BMNU, BMNR,
ZYXI,
CIFR.
Bitmine, a lot of the Bitcoin related names, BMNR.
ZYXI halted to the upside.
Bitcoin stocks catching a bid.
VE. ZYXI.
ZYXI,
What's Oracle doing? I mean, Coinbase doing? Coinbase, nice pop. Coin with a nice pop today.
CIFR.
All right, turning back up towards the 50 and the 200-day. Riot. Did I take Riot off? I think I did. Riot. Did I take it off? Let me just check Riot. I think I took Riot off. Riot, RIOT, Riot. Looks like these are going to run.
BMNU, CIFR.
BMNU.
SANA.
BMNU.
SMX,
2 times long BMNR. 2 times long BMNR. BMN.
SMX.
SANA. CIFR. WULF.
Okay, Riot, the Bitcoin stocks on the move, off the low.
WULX.
Bitcoin futures. BTC. Bitcoin futures. Okay, daily looks good over there. Bitcoin futures.
WULF.
On just that topic, including this new one right here. Big Matt Ultra is here on Sit with us today. He's a senior partner at McKinsey.
SMX.
A CEO for all seasons.
SPRC.
The cycles
SMX.
leadership.
SANA.
Thanks for coming on. Thank you, Brian. All right, I know you got some you're gonna name names. Before that, what is there one
which is up 65
quality
cents for one.
that either makes somebody great or maybe a non-negative quality that makes them great? In other words, maybe they don't have a blind spot.
Okay, going into the close, we got 412 stocks out of 500 on the S&P, 413 advancing, 74 out of the Qs, and about 1,000 on the IWM. Looking pretty bullish.
OPEN.
So, reading the book, and you talk about the 4 seasons, what are some themes that are relevant
SMX.
across these 4 seasons? And maybe just talk a little bit about the seasons that you start with.
SPRC.
Yeah. So, just very quickly, the 4 seasons start with stepping up, getting ready to be a CEO.
CYX, I may resume in less than a minute.
At the end of the day, a leadership book. It's about starting strong in those first few years. It's about staying ahead, the middle innings, and then finally, as you move to the last chapter, setting it forward. So those are the 4 seasons that we talk about, and there are some common threads that run across these. So, firstly, just to be very clear, transitions just aren't at the start and the end. You also have transitions at the 2 or 3 year mark. As you move to the middle innings, you have transition into your last chapter. And one of the things we learned was transitions create enormous value when done well, and they destroy billions and billions of dollars when done poorly, right? So that was one big lesson. The second big lesson is great CEOs avoid the sophomore slump, which
CYX, I may res in 10 seconds.
but really what they really avoid is stagnation in years 3 and 4. As Arvind Krishna, who's in our book, said to us when we interviewed him, he said, Mick, the problem is we fall in love with our strategies. Things have worked well. Most CEOs, 3/4 of the CEOs start out really strong, but they get stuck on their existing strategies and they don't evolve them, and they don't really anchor in on some of the trends that go forward. So that's a second big piece that we picked up.
You know, when I look at some of the names, and we covered this. I mean, on CNBC, we get a new CEO, and the new CEO's here.
SANA.
Maybe the stock gets a pop big because it's a new person. You drafted a new quarterback, so to speak. Talk to us about how much one person can matter to a huge organization.
All right, hedge flows starting to turn up again.
But also, you look at somebody like
Bitcoin, another risk on signal will be good to see. Junk bonds. Junk bonds, big bullish week for junk bonds. Above the 50-day. Junk bonds right here. Looking very strong. That's bullish for equities. Teradyne, this looks good. Teradyne. Dollar Tree, all of these retailers look good. Teradyne looks good. Robinhood. Don't chase it high today. We'll probably have some good trades on these next week. Newmont Mining. Okay. So junk bonds, big bullish move there. We were looking for this move back above the 50-day. We finally got it. Okay. Okay, look at all the advanced declines. All right, we're probably gonna top out pretty soon. If not today, maybe Friday. Top out meaning hang in this area for a few days. Maybe we fade a little bit. Consolidation would be good above the S&P 500 50-day moving average. If we can consolidate up here, just below these highs. RSI is still rising. MACD stochastics bullish. We got volume. So maybe we test this 6,900 level soon.
So, and by the way, they vary by season. So in the early years, your blind spots are often around culture. You're bold and visionary. It turns out cultures, and Satya Nadella learned this the hard way at Microsoft in the early years, cultures don't move as quickly. You got to really
SMX.
There's often a blind spot.
Okay, so that looks good. S&P.
CIFR.
S&P equal weight index also giving us bullish signals. S&P equal weight giving us a bullish signal. Number of stocks above the 20. Look at the rip here on the number of stocks above the 20-day. Look for these pivot lows in the future. If you didn't get into this in the future, watch for these pivot lows. This is a good signal to go long. Okay. Put a stop underneath the low that we saw on Friday. Okay. Once you see the number of stocks above the 20-day start to turn like that, you go long, put a stop underneath that level, and go from there. Looks good. Let's look at the New York Stock Exchange. Broad measure of market participation. We want to see more new highs than new lows. We want to see more new highs than new lows. We see that. We're above the zero line. Moving average turning up. Advanced decline moving back to the top of the range, as you'd expect. And we got green elder sticks back to the top of the range. So what do we do next week? Do we break out? Do we break out on Friday? Do we break out today? I doubt today, but maybe next week we'll break out and follow through for a Santa Claus rally. Everything looks bullish for me at this point. Intraday, different story. Of course, intraday, a different story. Got a little bounce in the VIX. S&P trying to hold up here. We'll see what happens. MACD's flattening out again. Anybody's guess where this is going to go now. A lot of negative gamma. All this red on the screen that tells you can see a fast move in either direction. So being it is Wednesday before a holiday, I don't know. I'm not expecting a lot more at this point. Okay, so that's that.
Is coming alongside from another application, another service that's doing application telemetry. I need to be able to tie those things together because if a AI model is under attack or it's being subject to prompt injection, it could be for any number of reasons. It could be an application, it could be a security issue in a system that something's been attacked internally. It can come from any of those threat vectors. We even see software that we include in our software development processes, things like JavaScript libraries and package managers that are now under threat with new attacks. So the point of all that is you can't have this diversified, disaggregated groups of data to be able to try to get it back together into some kind of a telemetry application. You've got to have that pre-integrated because with AI, you also need the contextual information to be able to do prompts, perform prompts against that data so it knows what the data means before you have to tell it what it means. That way you can react to quick incidents.
What about names like CrowdStrike, for example, or other competitors? Are there other names that you like in the group? And for example, Dan, I was just on the
Let's rip this higher.
picks today. What other cybersecurity names do you like for these pillars of zero trust everywhere, data security everywhere, AI security?
NIMO is at plus 60.
Very much so. You mentioned CrowdStrike, of course. They are so
precedent in organizations, whether it's governmental, large enterprise, very much a player and will continue to be. I expect that they will be. Palo Alto Networks, I know it's another company that's taking a little bit of a hit today in the market, but I don't think that's representative of their future either. Again, there are so many attack services, whether it's the edge, IoT devices, the core network, AI data centers that we're bringing online, models, all of those. And you've got to have a comprehensive security strategy that these companies are employing. And I think they're doing the right things. The question is how much additional functionality that they're delivering to customers, can that be done in a way that doesn't cause more work, more people, et cetera, but you can get the efficiencies either through integration or through AI workflows that cross some of those traditional boundaries that really help enterprises operate more efficiently, but more quickly. So when there are attacks, they can respond.
And what are some of your other AI favorites now? Not necessarily in cybersecurity. I know your focus is security and AI, but when you think about AI overall and security, any other names that you do like that we didn't mention yet today?
Well, of course, we talk a lot about NVIDIA and the large model companies, OpenAI, AI, et cetera. I'd like to bring some focus into the software world because we're making this transition from bots as something that does work for us, something that does automations, to actually bots as part of a software architecture. You saw this in Microsoft at their most recent developer conference. It's introduced Agent 365, and underneath that is a whole bunch of capabilities, some that I mentioned about this data fabric idea of contextualizing data, but also how we secure and govern agents. Now that can't happen once it lands into production, into the network or into the data center. That's got to be built into the software fabric, the architecture, how those things are built. So you see a lot of progress being made by Microsoft. You also see it, of course, by their subsidiary GitHub. You also see it at the infrastructure level, folks like Red Hat, and who's a part of IBM. And at the developer tool level. So this whole attack chain isn't just when it's in the network, when it's in the data center. It's starting early. So I think I would look at the software security side of this as well, because that's equally as important to AI, because it's all becoming AI agents and bots.
Mitch Ashley of Futron, thank you so much. It's wonderful to see you. Really appreciate your time today and good luck there. Thank you. And thank you, friends, for being with me here every day at 9 a.m. and 2 p.m. on Schwab Network. I hope you have a beautiful, blessed Thanksgiving with loved ones. And I'll see you on Friday. Market on Close is next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in
CYXI
real
vaulted
time
down.
with speed, accuracy, and precision.
NBTS.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So
Okay, Riot going.
area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. 2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on
Oklo, yeah, Tony, I have January calls on Oklo.
SNX.
Tune in on December
11th at 7 p.m. Eastern on Schwab Network.
FLNC.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
SMX.
SMX.
All right, if they're going to do anything, they need to do it pretty soon. It's 3 o'clock.
NBTS.
Game this weekend, and in 2 weeks we're going to play again. So here we go, 12-0 and strong, crushing the Leopards of Lafayette.
So Rod City, great having you with us. Thank you very much. I'm off Friday. Kelly back Monday. Closing bell starts now.
Hey, welcome to Closing Bell. Thank you, Brian. I'm Mike Santoli in for Scott Wapner.
Apple turning back up. Apple turning.
SMX.
Take a look at the key indexes with 60 minutes left to go.
Apple turning back up. Maybe I'll buy some calls after all. For next Friday. Next Friday, Apple calls. Let me see what Apple looks like here. Apple. Okay, the 180s again. I'm going to do the 180s again for next Friday. December 5th, 180s, 280s, sorry. 280 call for Apple.
Managing partner and CNBC contributor Tom Lee. Tom, great to see you.
Great to see you, Mike.
So you had been saying, let's say a few weeks ago that we could get some choppiness in the first part of November, but you were still kind of bullish looking beyond that. What, in your view, has the market been contending with in recent weeks?
Apple turning back up.
And how does it set us up for the outlook here?
Yeah, well, I think the market's been struggling with the same things that it's grappled with all year, which is a monetary policy.
All right, let's rip this sucker higher. Apple looking good.
As you know,
S&P, let's see if we can't get a new high out of this. S&P.
Of course, policy volatility because the administration does make proclamations.
MACD looking for a turn up.
Sometimes head fakes that confuse investors, and it's all done.
MACD looking for that turn up.
Really suppressed enthusiasm for stocks. You know, sentiment has been bearish.
And then
Volume looks good. Volume looks good right there. Need to break out of this.
Took on a lot more pain than that. Where does it leave us in your mind? I mean, as I mentioned, 4 days, this market has barely even flinched at pretty much all the hurdles that were along the way. The moving averages, we got above last Thursday's high. We know it's kind of an upside bias the Wednesday before Thanksgiving and the Friday after. But beyond that, where do we go?
I think we're set up for a really strong rally into year end. And I know we just came out of a pretty terrible grind. I've talked to a lot of PMs that have said it's one of their worst 6-week periods ever in their career. So we know people have lost money, they've de-risked. But we know into year end we have the positive seasonals, especially given how strong the May to October was. You know, it's really a 5 or 6 chance that we're going to be up 5% into year end.
Right.
The second is monetary policy, I think, is going to shift dovish. Even if Fed Chair Powell is hawkish, we know it waiting in the wings is now a shadow Fed that's dovish. The third is we know sentiment is going to have to chase this rally because 80% of fund managers are trailing their benchmark. And then I think the fundamental story is pretty intact. You know, as we're doing work into next year, and I think earnings visibility is going to be really good. So I don't think I'm questioning if earnings are peaking. It's more just bid stocks, price in, and correct enough.
Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
You see why Mike Santoli just asked that question. He wasn't arrogant, didn't come across like Wapner, like, oh, you said 7,000 middle of the year. What happened? You're stupid, you know? I hate that about Wapner. Okay, we're trying to get push a little bit higher, S&P.
But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again. Yeah. But it's a replay of this year, and maybe that's we've now had
Hive turning back up.
bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period.
Now, you mentioned obviously the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside of this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, you know, a flash event, but it led to a liquidation that was never seen in the 15 years history of Bitcoin. You know, about a third of the market makers went out of business that day. Almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch. You know, it led to
You definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Now, that being said,
All right, S&P can't seem to get through this area. MACD back to flat. It's been a good week. Just like to see this close at the highs.
really a very precise measurement of risk appetite. There's so much more leverage. And that got wiped
You
out.
too.
Right?
You too, Paulo.
Last time it happened in 2022, it took 8 weeks.
Happy Thanksgiving, Paulo. Not sure they practice it in San Jose.
It's really the AI that's going to be leading.
okay, so it's no, so basically that is kind of sidelined the idea of what Bitcoin 150 or something you were thinking.
Well, I think it's still very likely that Bitcoin's going to be above 100,000 for year end, and maybe even above one to a new high. So Bitcoin makes its move in 10 days in every year. I think some of those best days are still going to happen before year end.
We're watching it right now at 89.5, firming up throughout the day. Tom, stay with me. Let's bring in New Edge Wealth's Cameron Dawson and Obermeyer's Ali Flynn Phillips. Thanks to you both for joining us here today. Cameron, you know, coming
All right, a lot more selling coming in.
this period, it would be common to hear the
Profit taking.
this market's too concentrated in AI. It's not a broad enough rally, and maybe we're complacent about the Fed. I mean, have we taken care of those things? Where does that leave us?
I think that Tom's stat about the underperformance of active managers is where a lot of this sits, because we can see that positioning is still underweight this market. Deutsche Bank updated their consolidated positioning. We're in the 34th percentile. That's underweight. And discretionary managers are in the 18th percentile. So there is still a large cohort of capital that has sat on the sidelines of what has been a very monster rally. So we think the best case for an end-of-year rally is that more people get dragged into this market. And I think the best fundamental support for that is that earnings estimates continue to be revised higher. So as long as earnings estimates are going up, GDP estimates are going up, it gives that cash on the sidelines a reason to chase into the market.
And has the character of the market, in your view, changed over the course of this moment? I mean, you know, that sometimes does happen. The market doesn't usually pass the baton on a full run.
Yeah.
So where are we now?
We can look at non-profitable tech as a really great capture of this, is that it had a 65% rally through October 31st, and it's down about 14% in the month of November. It's bounced back a little bit, but that really captures this notion that beta has been the key leader of this market coming out of the April lows. So the question is if beta, low profitability, low quality names can continue to lead. They certainly love having a Fed that looks to be easier and more dovish. So it really is dependent on what the Fed delivers. But to Tom's earlier point as well, we think as well that you're going to get Fed cuts in 2026 once you get the new Fed chair. So even if they come a little bit later or slower than what was initially expected, you're still getting cuts because you have a new person leading the Fed.
Got you. And
Still don't have a trend, just kind of sideways in this triangle consolidation. Maybe we get something going in the next few minutes, but other than that, not a whole lot going on. Be nice to see a bullish close. Everything is pretty much pointed to higher to end the week. Okay, we're ending with 3.5 to 1 on the SPY, 3.5 to 1 up volume, 3 to 1 up volume on the Qs, almost 5 to 1 on the New York Stock Exchange, 3.5 on the comp, NASDAQ Composite, 4 to 1 on the diamonds, and almost 4 to 1 on IWM. Everything's looking pretty bullish. Here we go, starting to go now. Let's see how far we go with this. So beige book is out of the way. The Fed seeing modest rise in inflation.
So, bro.
Sure.
What's going on?
The thought that it's a positive that so many stocks have been underperforming the S&P 500 because
Palantir, really good buy.
as a stock
Palantir,
you have
yeah.
a lot of
Well, it's already risen for 4 days.
that are down a lot.
Oh.
Do you think the market's
On
going
the
to
5 minute.
reward
This is
some
day.
of those
Yeah,
stocks?
that's
I guess
intraday.
now the
5
question,
minute.
I mean, the equal weight S&P is obviously lagged badly, but it's closer to its high than the overall market cap weighted index. In fact, it's within 1%.
Yeah, I mean, the reason why we should really reward a broader market, it's not just in terms of broadening, but really in terms of a healthy earnings picture. So, for instance, this most recent just third quarter earnings cycle, you actually saw earnings growth 13% year over year, which is the fourth positive consecutive quarter in terms of increase. But also, it was actually broadly distributed across different sectors. 10 of the 11 gig sectors. For instance, double-digit returns in things such as financials, materials. So we're seeing a broadening in the market because we're seeing a broadening of the earnings space.
Tom, you mentioned that it probably wouldn't be Bitcoin leading, but AI.
SANA.
I guess we got to be more specific in terms of AI, or do you think that the full leadership of the first half of this year, where the OpenAI, Orbit, and everything else can participate?
Yeah. Well, I know stocks have been sort of trading full position, NVIDIA and Alphabet. But to me, the bigger story arc remains that AI is a mega trend. There's a lot of resources and spending, and it's a big contributor to growth. And we know there's a shortage of both power and silicon. So I do think it's going to ultimately move in the next 12 months, kind of as one cohort. I don't think valuation sensitivity is as important as people think. We're actually studying this now. We're going to be publishing it soon. But if you look back 10 years ago, the most expensive stocks at the end of 2015 continue to be the best stocks over the next 5 years.
Right. Yeah. I mean, it's interesting because I don't even know if it's really a valuation story in terms of what's taken a step back. It's a matter of, kind of who's got the current lead.
Yeah. Whose model works
clearest
better.
path or something like that. Yeah. Cameron, in terms of the macro, I mean, everyone has been able to say, okay, we had this rhetorical dovish pivot from Fed members. We can now price in a cut. You mentioned that it looks like we have a glide path toward 3% short-term rates. Are those still going to be insurance cuts? Are those still going to be like the economy doesn't really need it, but we could use it? Because we just had the beige book come out, an hour or so ago, and there was a lot of commentary about softness in labor markets and companies finding ways to do more with fewer people.
Yeah, that is the biggest question because cutting because you can is a very different story for risk assets than cutting because you should. If the context of the cuts is because the labor market needs the support, that the economy needs the support, what you would see within things like equities or credit is a lot of weakness because equity valuations would be too high and earnings estimates would be too high. But if you're cutting because you're just trying to get to neutral because you don't want to be too tight in the future, that's when equities can very much rally and enjoy it. Now, the Beige Book has been painting a very sour picture about the economy for quite some time, as has all soft data been painting a much more sour picture about the economy. So we continue to go back to this notion of what is the equity market telling us about things like the U.S. consumer. Equal weight discretionary versus staples is still in an uptrend. So to us, the equity market is still arguing that the aggregate consumer, of course, with big weights to high income consumers, is still in a fairly good position. So we'll continue to monitor that for any kind of change.
Yeah. I mean, I do think that the outright inability of staples companies to actually perform is helping that. But you're right.
Okay, a little sneak attack end of day. We're going to start rising now.
Ali, we mentioned, I guess, what's happening in terms of the Fed, which feeds into yield. The 10-year down below 10%. I was just looking earlier.
Okay, Broadcom new high today.
Actually kept pace with the S&P on a year-to-date basis. Where are you thinking about those types of allocations, and what are you telling clients in terms of the fixed income side?
It's so nice to finally be rewarded with attractive yields on the fixed income side. To us, fixed income is one of those, it's the steadfast, it's the ballast, it's to protect against the unexpected. And so particularly if you're able to be high quality.
Nice follow through on Apple. Okay, look for that to follow through. S&P.
But as I said, it's really just nice to see cautious investors no longer punished.
Yeah. Yes, for a change. All right. Really appreciate it, guys. Everybody have a great Thanksgiving. Tom, Cameron, and Ali. Thank you. Let's send it over to Christina Partsinevelos now for a look at the biggest names moving into the close. Hey, Christina.
Hi, Mike. Well, shares of Deere right now, they're sinking almost 5% despite beating quarterly estimates. The problem was the full year forecast. It just came in weak. Tariffs are squeezing margins and farmers are just pulling back on big equipment purchases.
All right, nice rally here.
Dell shares climbing about almost 7% right now on strong AI expectations. The company did miss on revenue, but it's forecasting a monster fourth quarter with $9.4 billion in AI server sales for a total of at least $22 billion for their fiscal year. And lastly, shares of Zscaler dropping roughly 12% right now after beating on both the top and bottom lines with a solid full-year outlook. But the cloud security company posting an operating loss, which really spooked investors despite shares being up about 40% year to date. Mike?
Christina, thank you. There's some breaking news out of Washington. Eamon Jabbers has the details for us.
Mike, we're monitoring reports now of a shooting incident just a couple of blocks from the White House here in Washington, D.C. This happened just about 20 minutes ago, and what we know is that, according to the Department of Homeland Security, 2 National Guardsmen have been shot. Their condition is unclear at this time. D.C. police say they have a suspect in custody already. Now, this took place within a couple of blocks of the White House complex itself, but not adjacent to it or at the White House complex. This is somewhere around 17th and I, 17th and 8th Street. So that's
All right, we're rallying.
Farragut Park and Lafayette Park here in Washington, D.C., if you know the area. We're also seeing a report now, Mike, that DCA, Ronald Reagan National Airport, does have a ground stop due to security. No additional information on that ground stop just yet, but we are seeing reports as well that a medevac helicopter landed on the ellipse at the south of the White House and then took off bound for a medical facility. So we don't know the condition, as we say, of the National Guardsmen. There are conflicting reports now of how many casualties there were in this incident. Were there 2 or 3, 2 National Guardsmen, and maybe somebody else? As I said, this happened just about 20 minutes ago, Mike, and so information is just coming in. And now I see the Associated Press, just in the past couple seconds, is reporting that the 2 National Guard members are in critical condition after the shooting near the White House, and the suspect was also shot. So a little bit more information coming in here in real time. So that might account for that third person that we heard might be headed to the medical facility. Mike, back over to you.
All right, Eamon, thank you. All right, as we go to a break, NASDAQ at session high,
SMX.
S&P up almost 1%.
Sort of watch and wait, see how things process over the course of the next year.
PAVS.
All right, a little selling up here at the highs, so hitting these highs. We got supply up here. We hit this level earlier this morning. That's the high of the day. High of the day. Getting rejected again. $68, $68.29, $68.30. Not quite able to get through that yet.
The dailies, the Wallers, the Williams of the world, and the pricing in now of the markets of this December rate cut. What do you make of it?
Yeah, absolutely. Thanks very much for having me on. I agree. A little bit of the data, a little bit of the Fed speak. The Williams comments to me were the big mover, and one of the things we've seen in terms of moving not only Fed funds futures lower, but also I would say the 10-year yield lower for the last little bit. But the data obviously continues to come in a little bit weak, particularly a number of jobs indices as you just mentioned. And then I would mention also that durable goods data this morning was extremely strong for Q3. It's the September data this morning, but you had the revision higher. The third quarter looks extremely strong when you look at the GDP feeder. So the market is kind of, I think, in between where you're definitely looking for, as somebody would say, a shoe drop, whether it's kind of the outlook from a negative perspective or a beat on the upside perspective. With this 4% level in 10s and treasuries is obviously a very significant level that has held here for a little bit, and the market's looking to test it.
And you mentioned some of the commentary that we've gotten, so did Sam as well, from the Fed speakers of late, as we head into this blackout period now. All of that sort of, this combined with the data we're getting now, the shutdown is open, has completely pivoted the outlook for this rate cut in December. We were as low as, the low 40s. Just today alone, we're up 4% more from where we were this morning, north of 85% now. Are we basically priced back into the market for December and potentially even into the beginning of 26?
So I think, at this 80-85 level for Fed Fund futures, you're effectively fully priced at this point. And, if the Fed does not want the market to go into the December FOMC meeting this highly priced, then it will have to do something probably in the blackout period. The January cumulative is around 28 basis points here.
CLSX.
So I don't think the market
LNAI.
is looking for back-to-back December, January cuts. I think the market's relatively comfortable with this idea that either they're going to cut in December or in January, but very likely not both, unless something goes kind of really left tail here. But that would be odd versus where markets are currently pricing, and that would be consistent with my view as well. I think a lot of the pricing in the first half of the year, maybe to be more specific, the first third of the year, probably needs to come out a little bit, because I do think the Fed,
All right, looking for a little bit more upside.
whether that's in a couple weeks at the December FOMC or at the January.
ZYXI.
And then, so what does that mean for the steepening of the yield curve? I mean, this has really been a big story this year, as we've seen it being driven by the short end with the rate cutting expectations in the market. But then if you look out on the long end, I mean, this has been a global fixed income story. I mean, in a lot of advanced economies, you've got places like, obviously, the UK, we've seen in Germany, we've seen in Japan as well, France too, where there seems to be this discomfort with the debt and the deficit levels, and, obviously investors demanding a premium on the debt that they're holding.
ZYXI.
I'm just wondering, as we move into 2026, what you believe the story is going to be here, what's going to drive the treasury market when you have, talk of this kind of prevailing sort of dovish bias in the market, but also with respect to, $2,000 type checks and helicopter money type of conversations also, floating around. What do you anticipate is going to happen come next year?
It's a great question. 25, I think, has been a fascinating year for
ZYXI.
global fixed income, U.S. or around the world. Sometimes U.S. leading everybody else, and sometimes kind of everybody else leading the U.S. And it's been a very interesting fixed income and macro market going into 26. And we're seeing these correlations, I think, between
Forbes State says we have needed to kickstart demand for rates,
so to speak, or at least lower correlations. and that's not always the case. Generally, there's a little bit higher correlation. So we've seen these correlations
CYXI.
between yield curves break down. And I think that's interesting because that's when you really have the potential to make kind of alpha off the back of fixed income, where not everybody's moving, at the same, at least in the same direction, or the betas are lower. And that I think means that there's some opportunities going into 26. I think that the landscape here for 26, is challenging for sure. I've been looking at this 4 to 420 range in tens for a long time, and we've generally traded in there except for a handful of days, maybe a couple handful of days at the back end of October, but it's generally held that range. I tend to think that we're not going to get much lower than here in yields. And I continue to think that the real story here, and there are many things to watch, is the AI CapEx spend story, and maybe the overall AI story, not only with kind of the hyperscalers, but also some of the mainstream corporates. And I think it's really important because we're really seeing a big, at least, scale up in terms of expectations for the hyperscalers for AI CapEx spending. And that to me is really going to underpin growth, U.S. growth for a while. And if growth is going to be running at 3.5% real, we might be looking at 6.5 or even 7% nominal GDP in the U.S. Is 4% 10-year yields the right number? And I would tend to suggest that at some point here, something needs to break. Either the growth outlook needs to come.
S&P having a good week.
That yield on 10-year and the back end of the curve needs to come higher. And I'm leaning towards.
With 34 minutes to go, Not much time left in the day. Feels like a Friday.
Into the first half of next year, I think it's fair. Call it mid-year next year. And I think, this market is a challenging market. It's a complex market. It's a dynamic market. I like to take things kind of at maybe a quarter or a half at a time. So I'm pretty comfortable thinking that we're going to see that run rate go to Q2 next year, back half of 26.
S&P futures still hanging in there. Up 61 handles on the day for now. Looking for a little bit more upside. Be nice. Tick cumulative is green, so we know that institutions are buying more stocks on the uptick than they're selling on the downtick. Advanced decline is saying that the bulls are in control. Junk bonds are higher. Risk on. Bitcoin moving off the lows. That'll help with the risk on signals. IWM, risk on. Biotechs have been strong. Continue to break out. Biotechs. This is XBI, IBB. These are all risk on signals. Okay, so it's only Wednesday. I keep thinking it's Friday. Okay, look at the volume. That's nice volume. Capitulation volume, maybe we're going to see a pullback next week. Merck, I took some profits off of Merck yesterday. Merck pulling back a little bit.
opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. With markets react, we are live with analysis.
All right, so Merck, Johnson & Johnson, these are seeing a little profit taking. I'm looking for a little pullback. Still thinking there's more upside, but you can see Bollinger Bands starting to come together. These have had a nice run, so I'm starting to liquidate some positions, or some size anyway. S&P. Still trying to do something here. S&P, a little sneak attack in today would be nice.
Counterpoint also forecasts that Apple will hold the top spot in the global smartphone market through 2029. Now that lists the launch of the entry-level iPhone 17e next year, as well as a foldable smartphone to underpin Apple's dominance over the next few years. Now I do want to bring Sam back into the conversation. Welcome in our next guest to discuss the housing market. Joining us now is Daryl Fairweather, the chief economist at Redfin. Daryl, thank you for being with us. I saw this report out yesterday, saying that sellers are taking their homes off the market at the fastest pace we've seen in nearly a decade. Can you walk us through some of your recent findings and the trends that you're seeing overall in the market?
Yeah, that's right.
Apple pull back a little bit.
Come off the market, and it's really because home sellers and home buyers can't see eye to eye. Home buyers can't afford to buy at these high prices because of how high mortgage rates are, but home owners don't want to shop less to what they think their home is worth, and they have these record low mortgage payments we got back during the pandemic, which gives them an extra reason to take the home off the market and either stay in it or rent it out to somebody else until they feel like the market is more in their favor. So it's really a stalemate. We're not seeing as many price drops as we normally would when the market is as much in buyer's favor. Because sellers are just taking the ball and going up.
And Dara, you can, I suppose, appreciate why people are so confused, because you hear about people taking their houses off the market, yet there's not enough supply for those buyers who are currently out there, but they
ARWR.
there's not enough demand as well, because there's still people sitting on the sidelines sort of waiting for interest rates to come down. Can you just give us a sense of where the supply and demand dynamic is at right now, what you're seeing out there? Because I suppose it depends on where you are as to what the demand is really like, because I know at least around here, I'm here in New York City, I mean in the New Jersey area, I mean things are just selling like hotcakes in a matter of
Hotcakes. Hotcakes.
It really does depend on what market we're talking about. The markets that are more in buyer's territory, like
SMS.
Florida and Texas, that's actually where we're seeing sellers take their homes off the market more, because prices have come down there and sellers realize they aren't getting the offers they want because they're having to compete with other home sellers who are willing to cut their price. If a home seller isn't willing to cut their price,
Okay. We keep banging up against this high where we've got sellers. Doesn't look like we're going to get above it. 26 minutes to go. 26 minutes to go. We have seen some end-of-day rallies lately. Monday and Tuesday. Quick moves within a 5-10 minute period. So watch that. May happen.
And I saw, the active listings are up. That number is higher. But you say that true supply is tighter than it looks. And Sam was just mentioning some of it can be confusing. That's a bit of a misleading signal. Why is the market giving that off right now?
Yeah, when you look at just the total number of homes that are for sale, it looks like we are in a buyer's market. There are more homes for sale, and there are buyers out there. But a lot of the people who are selling those homes are being unreasonable. They're charging too hard of a price for the listing.
NVIDIA's starting to turn up right here. Watch NVIDIA. NVIDIA's starting to turn up.
They're pulling them off the market, which means that those homes
There's some sellers right in here. Not much to do. We'll come in on Friday and see what else we can do to end the week. Hedge flows. Hedge flows. A little peak there. Hedge flows. Microsoft at the high of the day, looking good. Apple, no follow through yet.
That's one example, but there are lots of examples of something happening during the escrow period that means that the negotiation isn't really going the way that either party thought, and then things just end up falling apart because there's not enough of a mutual benefit to the sale to begin with to see it through.
So, Daryl, what needs to change then to get both sides of the market moving? Is it rates? Is it inventory? Is it wages?
SMX.
Rates coming down with
Broadcom looking better. Near the highs of the session. Broadcom. Let's see what Dell looks like. Dell. Dell. $1,600 in credits.
Daryl, we appreciate you taking the time to be with us today to talk through the housing market ahead of the holiday. Sam and I both wish you a happy holiday as well. That's Daryl Fairweather from Redfin. And coming up next, we've got Options Corner. Rick Ducamp will join us here in our Chicago studio to take a look at NVIDIA after its lackluster week. That's next on Market Up Close.
SMX.
SMX.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live that breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
SMX.
SMX.
SMX halted to the upside.
Investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live
SMX.
or on demand.
SMX.
Head over to schwab.com/coaching and start learning today.
Says upward shift in tedious forklift is not a surprise.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
SMX.
Trading at Schwab is
SMX.
powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new
All right, Dell.
videos, webcasts, articles,
Dell, you could consider selling some premium on this one.
and with guided learning paths stacked with content curated to fit your unique goals.
Apple still pulling back. Apple, no follow through yet. Apple. Broadcom looking good. Broadcom breaking out. Microsoft looking pretty good today. Microsoft, nice bounce off the 200-day moving average. Looking for Microsoft to be higher next week. S&P still fading. S&P still fading. Okay, it's been a decent week so far. We got Friday still to go. Maybe we test 6,900. MACD stochastics. MACD just turning as a function of price. Stochastics says that there may be more closes in the upper half of the daily range. And RSI still has room to run. So this could very well test 6,900 by Friday or at least Monday.
NVIDIA's GPU chips, those are more for graphics, but they also have this whole new AI ecosystem. All this stuff is not like a mouse where you just plug and play and just like switch from GPUs to TPUs. It's not that easy. So if you already have a big investment in NVIDIA's products, you're kind of stuck with them for a little while here. So, food for thought as we kind of digest some of this more complicated tech-heavy news here. But as you can see, though, Google really seeing a great deal of strength here. NVIDIA, the laggard. Meta just kind of for comparison's sake is part of the story.
Certainly, as we look at NVIDIA sort of standing on its own and some of the technicals, as you said, it's not necessarily as bad as it looks, but we had seen such huge moves to the upside with NVIDIA, and now that we're seeing the shares kind of come under pressure and more choppiness than it's expected, when we look at the technicals of their chart alone, what are they showing us?
Right. So as Meta was talking
SMX may resume in less than a minute.
Google to buy some of these new chips, we see that the reaction from NVIDIA not too terrible today. Like I said, we're kind of just hanging on at this 177 level at which we found some support recently.
S&P turning back up with a few minutes left to go. Got 17 minutes left in the trading day. Not expecting a whole lot here. Maybe we'll get a little run higher. S&P.
Beyond our downward sloping trend line here, not really materializing into anything lasting so far as we approach the conclusion of this trading day here. But an interesting development nonetheless. A quick
AWM.
here. When we look at our moving averages, we can
SMX may res in 10 seconds.
level where we saw a series of highs here and here as well. That lines up with two of our moving averages, our yellow 21-day and orange 63-day exponential moving averages near about 185, 186. That could be the short-term resistance area to watch.
SMX.
RSI also moderating somewhat here. The slope of our downward movement is lessening, but we still haven't had a breakout. We're still in bearish territory.
So we're in bearish territory, but we did get some bullish commentary today, and we did hear from Jensen Huang, and we know when Jensen Huang speaks, usually the market responds. We are seeing NVIDIA up about 1% and a third today after having a down
SMX
day
halted to the
yesterday on
upside.
the news that you mentioned. So as far as the options action looks on NVIDIA, I know this is generally a pretty hotly traded name. What's it look like today?
Yes, one of the heaviest of all. At the time I checked, it's probably much higher now. 2.6 million contracts traded today, 62% calls, and crazily enough, that's a lower
SMX
only 0.7.
second halt.
70% of the 5-day moving average that we would typically see. When we do look out to our December expiration as well, the 19th, 23 days out, plus or minus 9.2% here. Not really lining up super cleanly with any technical areas here, just kind of giving us a broader range in which we could be looking for price activity. Open interest, though,
level. The 200 level stands out in particular on the call side. 109 contracts of open interest there in that strike alone. So more open interest in that strike than many stocks have in their total book.
And as far as notable trades today that we've seen, have you seen any notable trades on NVIDIA?
It would be hard to fit all the notable trades I saw into one segment here. Many multi-million-dollar trades. $5 million
SMX.
March 20th, 90 strike calls were sold. But one thing I always find kind of amusing is heavy trading activity in the one strike calls. December 18th, 2026, one strike calls. Someone sold $4.5 million worth of those. So really just fascinating that there's activity even at the $1 strike.
At the $1 strike, when we are trading at $180.24 right now for NVIDIA, but below that $200 strike that you were just mentioning as well. Rick, thanks for being here for Options Corner, breaking down NVIDIA for us. I do want to send it back over to Sam in New York to find out who we'll be talking about for overlooked stocks today.
Well, today, Marley, it is Clean Spark. So George Sillett has his eye on this one. We're going to be heading into the close and breaking down the news and what you need to know about Clean Spark coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Or active
All right, we got a little bit more than 13 minutes to go. 13 minutes.
of technical analysis, options, futures, and more? Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
ZYXI.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so sometimes Next. Try it again. You could have done better. Please. Same goes for where you invest.
ZYXI.
Invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
LNAI.
Schwab.
ZYXI.
A modern approach to wealth management. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on
SFX may resume in less than a minute.
All your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Barnes, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. Shares of Clean Spark are on the rise after earnings, which saw full-year revenue double year over year, and its contracted power.
All right, we got a little bit more than 11 minutes to go.
3%, which it says sets the state for AI expansion. I'm joined now by George Sillett, a senior markets correspondent, to get us across this one. Just explain to us what Clean Spark does. This is a fascinating company, George, because it does have sort of energy in its DNA. It's a Bitcoin miner that's now providing, obviously a little bit more of an interruptible,
SFX may rise in 10 seconds.
power to the grid, but also for all these AI developments as well. And data
Okay, futures are dropping off here.
Sure. If you consider CleanSpark, it started off initially as a Bitcoin mining company. It's been around since the late 80s. Nonetheless, if you look at their business as well, aside from Bitcoin mining, it's really a power company or power generation company, but they're also now moving pretty aggressively into high-performance computing, considering that their establishments, if you will, are high-performance computing warehouses, which include, of course, Bitcoin mining. And just like a lot of the other businesses out there that are Bitcoin mining, they're trying to enhance the yield on the technology that they have, moving from Bitcoin mining towards
S&P dropping off here.
including high-performance computing in the cloud. A lot of companies are doing this. This includes some of the names we've talked about, like Iron, Applied Digital, for instance. We know that CoreWeave and Nebius are two large companies that are providing high-performance computing technology centers, but they don't necessarily themselves have Bitcoin mining. So we're seeing some of these traditional Bitcoin mining companies like CleanSpark add yield to, of course, their businesses by enhancing and providing HPC computing to, of course, data center needs at the margin. The other thing about CleanSpark is it also has power generation assets. That's where it's a little bit unique relative to maybe some of those other competitors that I mentioned. And they also have contracted power supply agreements, which we know with electricity prices moving higher over time.
9 minutes, 30 seconds to go.
So I think that's the sort of threefold story behind CleanSpark. But nonetheless,
Some selling there on S&P. Feels like a Friday.
it's really kind of a combination of power supply agreements as well
Nice little pop here.
Now they did report earnings, and if you look at the breakdown,
And the puts are getting a bid as we drop off a little bit, give back some of the gains from today.
a 38-cent profit, but in fact they lost a cent on an adjusted basis. But nonetheless, that was still a significant improvement considering last year the company generated a loss of 27 cents. If you look at the sales, they also came in slightly less than estimated, 223 million.
8 minutes to go.
236 estimate.
Low tick alert minus 800.
All right, low tick alert. They're going to get back some of these gains.
They did also report, and you talked about the fiscal year 25 full year revenue, which came in slightly less than estimated at 766 million, but still nonetheless was higher by more than double the 379 million they produced last year. And in fact, if you go back to 2023, they generated around 170 million. So the top line sales have been growing at a pretty significant clip for this name, doubling essentially every single year.
Okay, we're dropping off pretty fast here. Dropping off pretty fast. The puts are catching a bid, 68.10s, 68.20s. With less than 8 minutes to go.
Considering the quarter that they just reported finalizing 2025's fiscal year, they did lose a penny, but they were expected to generate a 38-cent return. But I think that really happened because of what happened with Bitcoin. Because irrespective of the fact that CleanSpark is moving and generating more revenues from high-performance computing, Bitcoin as a treasury is a large constituent of CleanSpark's balance sheet. If you just look at the equity alone, it's around $3 billion, and they have about 1.2 billion Bitcoin on the balance sheet. So you could say that about a third of the value of the company is Bitcoin. And unfortunately for CleanSpark, since Bitcoin has dropped significantly over the last month or so, down at one point close to 40%, CleanSpark has also suffered from that, down about 33%. But nonetheless, in the last few days, we are seeing a bounce both in CleanSpark as well as Bitcoin.
If you look at when Bitcoin sort of started to come off from the peak of about 127,000, you've really seen CleanSpark stock coming off from.
Bitcoin's had a pretty good day today, Bitcoin. Maybe it goes next week, Friday.
They've actually snapped up sort of these abandoned assets, the textile factories, which then were offshored in sort of rural communities. And as you say, they do own and operate 33 data centers as well. But they also told me at that time that historically they haven't used a lot of debt to finance what they're doing. But as they pivoted to AI, maybe that would change. Did you see anything as far as the financials, which sort of speaks to some?
All right, a lot more selling. You can see the volume here. You can see the volume as we pull back towards VWAP.
So I do think that is part of the debt load the company is committed towards to expand its operations. Ideally speaking, companies would.
Hey, watching watching these orders right over here, 0 day especially. There's a little bit left here. If they sell any of these in the next few minutes, we could see this pull back a bit more. Okay.
correspondence with the decline in Bitcoin. So that may have also added some additional, beta, in this case, losses to CleanSpark on a
S&P dropping off a bit more.
because again, the sensitivity of CleanSpark to Bitcoin is there, but then you offer again a convertible bond issuance. That's going to add additional financing.
Got a little bit less than 5 minutes to go. 5 minutes.
Like you said, it was trading around $23 prior to the decline in Bitcoin.
These puts have a pretty decent bid at the moment. 68.20, 68.10, 68.15s. Futures continue to drop off here.
Fell below a pretty significant area of support around 98,000. It's right now trading below its 50-week moving average, or if you wish, you could also use a 200-day moving average for Bitcoin. So the point is we're seeing a nice bounce in CleanSpark. We could continue to see a nice bounce in Bitcoin back up to that 98,000 area, but nonetheless, I do think it's still
Futures still drifting lower. Futures. Not a bad day. Off the highs of the session. Still very bullish going into Friday.
especially if we do see sort of an end-of-year rally in both the markets and of course, the crypto assets.
Yeah, absolutely. And as you say, I mean, Bitcoin coming off over 30% since the highs, but actually recouping some of the losses now. We're at about 90,000 or so, just a hair fraction lower than that as we stand. But yes, we have seen a recovery very much. George, we'll let you stay on holiday. Thank you so much for that. We'll talk to you later on. George Silas there. I'll send things back over to Marley in Chicago.
Thanks so much to Sam and George. We're nearing the end of our market session. Alex Coffey will be joining us here in our Chicago studio to break down today's action next on Market on Close. Stay with us.
3 minutes to go. 3 minutes.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
2.5 minutes to go.
When the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock.
That could certainly
All right, got less than 2 minutes to go. Less than 2 minutes to go.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m.
SMX may resume in
Eastern,
less than a
Morning
minute.
Movers, only on Schwab Network. Stay connected to what moves markets. Download the Schwab.
A minute to go. 1 minute to go.
Stream live coverage wherever you are.
Back here on Market on Close, I'm Sam Barnes here on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. There's just a few minutes left in today's session before we close things out for the holiday. So let's welcome in Alex Coffey to do just that, host of Next Gen Investing, to help get us across the finish line here. What are you seeing out there, Alex?
Yeah, really impressive bounce back this week so far for the equity markets, guys. But when you look at the S&P 500,
SMX may rise in 10
I think
seconds.
to me,
30 seconds.
saw broad performance, and you started to see some of that technical damage of the last several weeks be undone. One of the things I look at, and I have a chart that we can pull up to take a look, is two exponential moving averages. One is
15
a time
seconds.
period, one that's represented by that teal line. It's a little bit faster moving. It's meant to represent 1 week. The other is the more purplish pink one, which is a 21-day period.
5 seconds. There we go. And that's a wrap. That is a wrap. Okay, folks, I got a hard stop. We'll see you guys on Friday. Have a happy Thanksgiving. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell, 4 p.m. Wednesday, the 26th. Have a good one. Take care. And we'll see you on Friday morning. Ciao.